Okay, good morning everybody and thanks. I have to say,
يعني نقول في اليوم الثالث أعتقد أنه هناك سعادة عظيمة هنا أن أبدأ الجلسة.
Welcome back to this session. You know, Richard Atius is supposed to be here this morning, so he asked me to make the opening remarks. And we're just recalling what took place on day one. I had that opening session after my colleague Richard Quest did the boardroom setting, and then we looked at the new global order and the challenges that are before us today. It's extraordinary to have the pandemic come out of that with very strong growth, with a lot of stimulus, and then the bottlenecks that we face in the supply chain that stays with us today. And we're confronting, as everybody knows, inflation of anywhere from 8 to 12% around the world. If you just look at food costs, it's certainly much higher than that. Yesterday was all about the risks and challenges ahead for the world. We had opened the day with the legendary CEO Nelson Peltz to learn about how to invest in a volatile market. I missed that session. I probably think that would have been very worthwhile. I thought the speech and presentation by His Excellency Mohammed Al-Jadaan, the finance minister, about the policies to support Vision 2030. We did a session in the lab yesterday with His Excellency Khalid Al-Faleh, also Mr. Al-Quraif, who's the Minister of Industry and Mineral Resources, and then the Minister of Economy and Planning, Faisal Al-Ibrahim, on the new pieces of the puzzle for Vision 2030, and that was all about resilience in the supply chain, which was quite extraordinary. We also had a big summit on energy, and hearing from Prince Abdul Aziz bin Salman here at FII for the 6th year was extraordinary. And then the one I participated in yesterday was excellent as well. We hosted sessions on the future of Latin America, the future of space, which was fascinating, about commerce in space, tech cities of tomorrow, and we learned about the state of the world's oceans with Princess Rima. Today we focus on opportunities and solutions. We're hosting 2 big summits on crypto and the future of Africa, and we'll talk to a number of leading venture capitalists about the opportunities in private markets. We'll have a great pleasure to hear from Peter Diamandis about extending human life. Of course, he's a board member of the Future Investment Institute. And we'll close off FII of 2022 with amazing sessions on the future of sports, with the former NBA basketball star, the CEO leading the first electric boat racing championships, and the president of FIFA just ahead of the World Cup that's taking place in Doha. Also a reminder, and I'll suggest this at the end of our session today, the Future Investment Institute is looking at memberships and a new model for 2022-2023. I had the great pleasure to host this session with the governor of the PIF, Mr. Al-Rumayyan, and they're going to be traveling more around the world. So if you have interest to join the FII, look at some of the representatives that are still here today, inquire, and they'll engage with you on the membership. I can review that at the end of our session. Now, our session this morning is only going to be about 35 minutes, but an excellent one, transforming banking and investment for the resilient economy. As I noted, I had the pleasure to do the session with His Excellency Khalid Al-Faleh about resilience in the system, and it's the resilience after the pandemic, of course, but phase 3 of how to grow out of this situation in 2023. We have about 9% growth in the kingdom this year, and they're predicting that could drop all the way down to 3%. So everybody's had their growth projections cut next year by about 2/3. Does that have to happen? And what sort of resilience measures do we have in the banking sector? The banking sector is transforming today, as we know, with fintech, and in another decade may be unrecognizable from where we are today. There's no doubt about that. But what does that mean in practice? So let's introduce our superb members of the panel. First, let's welcome up to the stage His Excellency Saad bin Abdulaziz Al Qab, the CEO of the Saudi Exim Bank Group. Let's give him a warm welcome. Charles Scharf is the CEO of Wells Fargo. Good to see you, Charles. Thanks. Tong Li is the CEO of BOC International Holdings, joining us from Hong Kong. Dame Susan Rice is the chair of GEFI, Global Steering. Please. and Francois Watt, Managing Director of Rothschild & Company, and Dr. Samar Haj Yahia, the Chairman of Bank Leumi. Thanks. I have to say, this is a all-star lineup for a day three. It's almost an embarrassment of riches to have in 35 minutes. But I'm going to ask all 6 of you to be extremely direct with your interventions. Let's go through the first 2 rounds of the questions. And then I'd like to have you interact with each other in terms of points that are raised and the challenges that I laid out in my opening remarks about 2023. It's almost like we're staring down the barrel of a shotgun and not knowing what it's going to be offering to us. I'm wondering if I can here, engineers, how the role of the XM banks in this crisis, because the lending that you're doing is extremely important in Saudi Arabia, of course, but internationally to some of the more vulnerable markets as well. So you want to be able to provide that lending, of course, but then in a climate which gets more difficult, how do you measure risk versus reward? And I think that's going to be a common theme for the panelists here. Do you want to start, Saad, with that?
Thank you, John. Good morning. Good to see you back here in Riyadh, and good morning to the audience this morning. It's a pleasure to be here and participate in the FII 6th editions. ECA and Exim banks are development banks, development financial institutions, and an integral part of global financial systems, where they are strategic partner to the commercial institutions, financial institutions, supporting them in their credit offering and mitigating financial risk in cross-border transaction and long-tenor transaction. This is exactly to the point that you have mentioned, where how we support as a development financial institutions, commercial financial institutions, and customer in continue investing in the economy, especially in the infrastructure and global trading. To give some colors on the size what ECAs and Exim banks provide on annual basis. The Bern Union, which is made of over 80 ECA and Exim representing 60 countries around the world, they provide financing and financing cover of 13% of a global trade on annual basis. That's equivalent or a little bit less of the trade passing through Red Sea on annual basis. So that's the amount of size of financing that we provide as entities. We in Saudi Exims, our main objectives to ensure that no Saudi export cross-border transaction fails due to lack of insurance or financing.
Oh, very interesting. So I want to try to take this opportunity, because we're looking towards the future, Charles, on how much banking is going to change. But now, 12 years after the crisis was evolved into a global financial crisis, and the work that Wells did, for example, to deal with it, how bad do you see 2023? We saw the results from Meta, and the market started to panic. And I always look at the technology companies as lead indicators, of course, right, because of the order books for digital advertising. And does it have to be such a shock to rein in inflation? Do you want to see if we can look towards the future if we have such a turbulent 2023? Do you want to tackle that for me?
Yeah, I think, we have to separate out what we're actually seeing in our results versus what we're all concerned about, especially in the U.S. when you've got the Federal Reserve being very clear the direction of travel. We see extraordinary strength across our consumer businesses and our corporate businesses of all sizes. We see a little bit of stress in those with less affluence and those who are in industries that are particularly inflation affected, but it's really a very, very small piece of the overall customer base that we see. So what we're all concerned about and what we think is inevitable is very, very different than what we're seeing. So we sit here today and we're pretty confident the next couple of quarters will continue to be extremely strong. And beyond that is where we, get concerned about the effects, the effects of the continued significant rises in interest rates and effect on housing markets and things like that. I think from our point of view, our hope is that this is the measure, the measured impact that people we'll be able to work through because the known direction of travel will help to ease the strain that they'll see. It's possible that the significant changes and the cumulative impact of that can have a much bigger impact, as well as the course of geopolitical events, which could certainly change everything. But we just have to separate what we see in the markets versus what we see in the real economy. And today, the markets are appropriately incredibly nervous, but the real economy is still particularly strong.
Okay. Very quickly, due to the financial crisis, do you find that, take it from your market, of course, with your international bank, but is the American banking system much more fit for purpose to manage this recession? Because it's so extraordinary, as you said, with the geopolitical shock, number one. You have inflation that we haven't seen since we were probably in high school and in university, which is extraordinary. Huge stimulus at the start of the Biden administration, which others in Europe followed through with. But are the institutions able to withstand this kind of hurricane that could hit?
Oh, I think the answer is no question. The institutions are so much stronger today than they were pre-financial crisis. And it's not just capital levels. We all talk about capital levels going from 6, 7, 8% to 10, 11, 12, 13%, and for some institutions still heading higher, which we're all able to achieve and still continue to support the marketplace. But when you look at the quality of the assets on our books, when you look at the way we've underwritten mortgages, the way we're underwriting commercial loans, the documentation, the credit standards are much, much different today than they were pre-crisis. And the real question that we get concerned about is some of those things are still being done, they're just being done outside of the banking system. And so the question is, what ultimate impact can that have on the broader financial system? But the banks per se are still just in really great shape.
It's good. It's excellent to get your kind of temperature of how the U.S. banking system is viewed as we have it today. Let's get to the center of our discussion here, and that's the transformation in banking. Tong Li joins us from Hong Kong with the Bank of China International, which has also had a significant role here in Saudi Arabia with Aramco, which I hope to ask you about afterwards. But what are the trends that are here to say? Do you think, for example, the influence of cryptocurrencies and consumer banking, more digital banking, what are the major trends you're looking at from the Bank of China on the international branch, of course, that are here to say? Would you suggest?
Great. Thanks, Jiang. Thanks for your question. Allow me to say hello to our Arabian friends here. I just learned a greeting word, Assalamu alaikum. Good morning, everyone. I'm not sure the pronunciation is correct.
I think that was pretty good. I mean, I've been coming here for 30 years. I don't speak Arabic, but it sounded correct. Am I right?
That's very good.
Okay.
Thank you. And I'm very honored to be here again. And this is my 6th FII. So from the very beginning up to now. So it's an amazing FII journey. I very much enjoy it. And back to John's question, with the increasing popularity of mobile internet technology and the rapid growth of financial self-media industry, so more and more individual investors have been tapping into capital market with a lower transaction cost and higher information availability through various online platforms. So I see as a trend is inevitable, and I tend to view the impact of this trend in the long run would be positive, as it will boost the market transparency and also enrich the source of household investment. Thus, in the long run, will benefit the economic growth.
Okay, thanks very much. We'll circle back again on some of the other issues we talked about yesterday in terms of the Bank of China and the collaboration between West Asia and East Asia, if I can put it that way. Does that make sense? But they're obvious partners because of the export relationship and natural resources. Now the relationship's much deeper beyond oil. Dame Susan Rice, I think it's excellent as a former central banker to have you on this panel. And GEFI is the Global Ethical Finance Initiative. I think it'd be great if you can pick up on where Charles left off in terms of resilience in the banking system today. He kind of gave us a temperature check of the U.S. banking system. I'd love to pose what we saw a dozen years ago and how we've evolved in banking today, and then the level of disruption that's taking place with digital banking and cryptocurrencies and regulation into those new instruments as well. Please.
Thank you. That's a big question. Let me say...
We know you have the expertise, so give it a whack.
Let me say, first of all, I was nodding as Charles was speaking, because what you said about the US banks, I would also say about UK banks. The resilience, the testing of difficult scenarios, sometimes out to 100 years. I mean, extraordinarily challenging requirements for a bank, and the institutions are kept to these. So I feel, and I know lots of colleagues do, that the system is really quite strong. But however strong it is, that doesn't mean that something might come along, or several things come along, which we often think in linear ways, you know, one problem, but there may be a number. So I think the resilience is there, and the desire to be resilient, because no one wants to go through what happened in the financial crisis. In terms of resilience, if I turn that on its head, you're asking about the institutions. We need to think about our customers as well. So I've run a bank, so I think always from the angle of the customers and the businesses. When the economy becomes very difficult and challenging, probably the most important thing for them and for our institutions, and I would sum it up in one word, is the word trust. If we can demonstrate that we understand the pressures and the issues of the customer, and they continue to trust us, that is really good. If they don't, they will turn to others who are less regulated, who are less experienced, who are less well financed, and they may well get into trouble, both businesses and people. So it's important that we keep our customers with us as institutions. That's an important factor. If I could just hop quickly, you mentioned crypto and digital banking and so forth. We're never going back to running to a branch to get some money. I mean, we're well past that. But if you think about the history of money, I mean, it started with what? With exchanges in kind, with cowrie shells, with gold, with precious metals, then it went to paper, then it went to plastic. In a way, crypto is another iteration there. And again, it's a matter of trust, that we have ways to protect customers from anything untoward that might happen to them. It's a really important thing to think about the customer and the impact that financial services will have on them, as well as the economy at the same time.
Can I follow up just quickly? I remember interviewing Christine Lagarde before she was at the ECB, so at her time at the International Monetary Fund, and it was 4 years ago, and she said, we're going to start moving into regulation of cryptocurrencies, and we see the dance taking place. When I file my taxes every year, the IRS is asking me which crypto assets I own, which are none, but nevertheless, they're trying to dabble and test the regulation. It's not evolving very fast when it comes to the new products in fintech, I don't think. What do you think?
No, as with all things, a lot of things are tried. There's a lot of resistance. Anything that is new is, just a bit wild at the beginning. And then often because there are problems, people recognize the need for regulation and start developing it. The better scenario would be that it happened ahead of time. And of course, good regulation that isn't too restrictive either on the institutions or on the customers is what will maintain that trust that I was talking about.
Good. You made a very interesting point that if there's not trust with the consumer, we have two very established banking names in the international banking on this panel here, and I'm going to circle back afterwards. I'm just going to finish the first round. But I would think that consumers and customers would trust more the institutions that have been around for so much time. But you're saying that the next generation of consumers is going to come in and may have a different view, Dame? Is that what you're suggesting?
They may be. I've spent a lot of my time working in what's called financial inclusion or exclusion, but working with populations with very little means to bring them into the banking system. But very often, they fear that, they don't want to enter it, it doesn't work for them, and they're dealt with outside by other bodies which may not serve their needs as well.
Wow, so interesting. Thank you very much. Francois, where would you like to pick it up? I mean, Rothschilds is such a respected name in the world of boutique investment banking, I would suggest. Are you going to be prepared for radical disruption, or is investment banking stay almost the norm? What are the biggest trends that you're looking at to the theme of our subject matter this morning? Please.
Well, I think we are seeing, some dramatic changes in our industry, that's for sure. The volume of online and digital banking, has increased by more than 50% pre-COVID and post-COVID. So, by definition, the activity is moving online very quickly. It's also interesting for us to see that competition, there were in 2019 about 15,000, new startups in fintech. In 2021, this number rose to about 25,000. So the number of players in the system now have increased dramatically. And it will be very interesting to see how that will consolidate, because with this financial crisis, raising money, or are we going to have as many disruption or players that will be able to entertain the disruption? That's a big question mark. I would expect the traditional banks and the big banks to be able also to take advantage from these trends by maybe trying to consolidate some of the market and trying to incorporate a lot of this financial innovation within their own products. The clients, using fintechs and digital systems, are still very much on basic products. When you need advice, when you need more sophistication around how you manage your saving, you will end up, with models which will be, I guess, more balanced, more multi-channel. And so it's a big challenge, but it's also a big opportunity for the traditional banks, whether it's in retail banking, investment banking, asset management, to figure out, what kind of innovation has emerged from the digital environment, how to incorporate, how to compete. So I think the game is by far not being stabilized, and this crisis, which will maybe last, for some time, especially for the startups, will create opportunities for many people.
Good. From your vantage point today, though, looking at the Gen Xers and Gen Zers, what would be a Rothschilds in 15 years, do you think? Is the leadership giving that some thought of what a merchant bank does in the future?
Yes, quite a lot, because a lot of our business can be more digitalized and optimized, that's for sure. But I agree with Susan that our clients will change, the needs for advice will change, the new generation will step in, and we have a lot of question mark on our side of the business, how to attract young people, how to market clients going forward. The world is changing dramatically, so we need to adjust.
Good. Do you think this is a very interesting? I'd love to, Dr. Samer, to have you remind everybody the origins of Bank Leumi. I've been in this region off and on for 30 years and 10 years in Abu Dhabi, so I know the experience. But you're very keen also on addressing fintech, private equity, venture capital in this region, the wider region of Middle East and North Africa as well. It is taking hold. Most wouldn't think so outside, say, the UAE or Saudi Arabia. Do you want to give us a snapshot of what Bank Leumi's thinking?
Thank you. So, Assalamu alaikum. Good morning.
Are you trying to compete with our friends from Hong Kong in the right pronunciation? That's not even fair. You're a homegrown boy.
So it's a great pleasure and honor to be here. Thanks for having me. I think the entire banking system is going through significant evolution in general. And when you analyze the banking sector, you look at two evolutions. One is the technology and one is the business. And what you see now is the vast majority of the fintech and innovation is actually happening in the emerging markets in general and in the Middle East in particular. And that is the green field and a blue ocean for investment. If you look at, for example, Africa, you have the high-tech startups tripled to 5,200 between 2021, and half of that is from fintech. The economy here is thriving, and you have significant programs for 2030 well under execution. The GDP is growing. It's 12.2% here in Saudi, which is one of the highest in the world, with very low inflation, 3.1%. So there is a lot to do here from a GDP perspective, which is coupled with the banking industry. That together, when you look at the population that is growing with a high percentage of youth, tech savvy, you have a high penetration of mobile, about 100%, and there are a number of places that are unbanked or underbanked. So the potential here is huge. And it's becoming attracting the talent and the technology and the potential for what the technology is doing by microservices. So you can see that there's a lot of investment going on, and we want to tap into that kind of investment, whether it's in the payment side, whether it's in the retail side, whether it's in the cryptocurrency side, anything that we can leverage from the microservices and the cloud, we would love to do that.
Great. Okay, thanks very much. Now, I'd like to spend this round on the challenges we've seen. I talked about the global financial crisis with Charles, but the pace of extraordinary shocks. In my opening remarks, I was saying it's historical disruption, but it's also hysterical disruption. And I think every leader on this banking roundtable would say, if in business school or whatever training you had, if you had to deal with that much disruption over a period of a dozen years, you never would have dreamt of it, including once in a 100-year pandemic, the requirements to make sure your institution's fit for a recovery, and then if that wasn't enough, of a shock of inflation and the potential for recession. So from the XM Bank's point, the role you had in COVID-19 and then the role you have in making sure the logistics and the connectivity that Saudi Arabia wants to have with Asia and Europe, and the key role as a logistics center for Africa. Can you look at the infrastructure challenge coming out of a COVID-19, would you say, Saad? It's incredible, is it not?
Thank you. That's a very complex question, first of all, John. You put everything in one question. I think the main mandate of EXIMs and ECAs,
just to clarify, ECAs for the audience.
It's export credit agencies.
Thanks.
Which is they provide facilities, development, financial institutions owned by government to support global trades and export activities. The main mandate is to support economy and flow of goods, trades, and infrastructure and long-term projects. So if there is any downturn in the economy, pandemic, geopolitical tension, climate change, or a significant hike of rates that we're seeing in a very short period of time, there is where ECAs, Exim Banks, has to step in and support the flow of trade and cross-border transactions. We were started in February 2020, exactly in the pandemic year, and since then we have approved over 20 billion Saudi riyal to support Saudi exporters. Some of the European ECAs during the same period witnessed 300% increase in the volume, despite of the slowness of the trade.
So you're saying they're very responsive to the
They have to be very responsive. Asian ECAs saw 20 to 30% growth during the same period to cover the risk for financial institutions and customer during that period. Going to the second part of your question, being a logistic hub, Saudi Arabia announced the Global Resilient Logistic Initiative just last Sunday, which focusing on enabling global trade by utilizing Saudi capability, capacity, and location as a central hub. We have 1,200 kilometers of sea lines, 6 ports on the Red Sea, a lot of capacity and capability can support global trade and Africa. Africa, there is 1.3 billion people, a lot of natural resources. With the right sustainable financing to Africa, there will be a lot of benefit on a global level. I think I can end this following your instruction to be short and precise, that during uncertainty and doubts, customer, investors, and commercial financial institutions turn to ECAs and EXIMs for assurance.
Yeah, it's interesting. That resilience initiative is extraordinary because you launched the national industrialization strategy and then followed up with resilience. So I was suggesting that Vision 2030 was not a fixed document. It continues to expand, am I correct?
It continued to expand, and it was part of the core headlines of the Vision 2030 to make Saudi Arabia a logistic hub, central logistic hub to support the world. All the other strategies has to be made, so we have the roadmap for the future. We know what we're going to do. In the logistics strategy, the expected investment is 40 billion Saudi riyal in the next 3 years.
About $10 billion, yeah? 10, 11 billion.
10 plus billion dollars in 3 years. That will require financing from financial institutions and ECAs locally and globally.
Okay. Charles, let's go to my question here. Could you ever imagine in a span of 15 years of banking that you'd get that many challenges? It's extraordinary, the level of, I said, hysterical disruption. That's pretty much what it must feel like at a bank, no?
Yeah, it does. I think, I would say my experience always tells you that whatever time you're in, it always feels like the most complicated and the most disruptive versus what you saw in the past. So I'm not sure that what we're seeing today is different than what we saw in the 90s, the 80s, the 70s in terms of how the world changed. But this time of disruption in financial services, that is the new normal. And we're far from done in all of this. And you're right, if we think back to what's happened over the past 10 or 15 years, aside from the economic disruption, and you think about the rise of blockchain, crypto, direct lending, all of the things that, the technology companies entering financial services, the fintech community themselves. Sure, 10 or 15 years ago you said, that probably people would be surprised that it would be as significant as it is. But the landscape has not been, it's not clear who the winners and losers are. And so as we think about what the future looks like, this battle is just beginning. And there's going to be an incredible battle between the established financial institutions, the governments in some parts of the world as they figure out the role that they want to play, the fintech community, which I think is the most at risk in all this, and the technology players that have ecosystems that have the ability to figure out how broad they want to be because they own relationships. And I think that, just speaking parochially from the bank's standpoint, I think we've all learned a tremendous amount over the past 10 or 15 years. A lot of the things that have been created, yes, exist because of the opportunities, because of new technologies, but they also exist because banks just moved way too slowly in most parts of the world. And I think that we live in a different world today in terms of the bank's understanding of what they need to do, the vision of where things need to go, and the battle ultimately will play out between the banking space and the pure tech space, and that's the unknown in terms of where that winds up.
Can I just do a quick follow-up with you? I noticed when I went to my bank, and I don't have to mention which one, but it's one of the leading UK lenders. I live in London, and they had, because of law now, you have to list the quality of service and customer satisfaction. And of the top 5, 3 were new entrants in the last 10 years. And they're all internet banks to give you that sense of the relationship you were talking about. So does Wells Fargo adapt quick enough, in your view? Does it make acquisitions to fill that space in perhaps where you're not as swift as a digital bank? How do you manage that? Because you're one of the biggest banks in the United States.
Yeah, I think there's no question that I think most of the big banks, the answer is no, have not reacted quickly enough. We've approached things in a way that works for us as opposed to the way things work for our customers, whether it's on the consumer side or the wholesale side. But again, I think that is the dramatic wake-up call that everyone has received. And I think to answer your question, I think, yes, there are things that we can either buy or companies we can partner with to change the quality of the capabilities and the quality of the interaction. But I think when you look at the financial institutions across the world, they're rethinking what their platforms look like, the way they were designed, and thinking about it much more from a customer-centric point of view as opposed to a bank-centric point of view.
Okay, very good. It's just such an interesting conversation. Tong Li, I think this audience would love to hear what the Chinese Hong Kong model is for innovation from the Bank of China. Charles talked about the US example. Saad was talking about the role of the XMs. What's the evolution of fintech, the speed at which China is moving in this space, and how is it going to reflect at the Bank of China, would you suggest, these new trends in fintech?
Okay, thank you. I would not address it in a theoretical way. I would like to take BOCI, my company, as an example. So BOCI is a leading broker for retail investors in Hong Kong stock market, and we believe financial institutions should accelerate operational innovation and transformation. So, you know, more and more individual investors I have already mentioned, so we need to pay closer attention to the growing pool of this group and explore ways to adapt it to the customers' new habits with the new technologies. So 3 years ago, we developed and launched a platform. This actually is an internet and digital technology-based application system for securities trading. So I named this system Super Platform. The Super Platform served for providing our customers with continuous access to quotes, trading, information, and social networking and other premium functions through online channels. You know, our feature is the employee stock ownership plans. So initial name is ESOP. So use our platform, we have covered more than 200 leading listed companies, mostly tech companies, including Tencent, Alibaba, which covers more than 100,000 executives and core employees. It's quite, you know, it's quite efficient and it's quite, you know, effective. In addition to centrally processing various business for customers, it also supports modular management and rapid iteration, and also provide agile response to new business needs, thereby bringing our customers a better experience. By leveraging this new platform, BOCI has enhanced our market competitiveness as leading player in stock trading and margin financing. So I would say BOCI is more than happy to assist the global individual investors to tap into Hong Kong markets through our super platform, sharing the tremendous opportunities of China's massive market.
Okay, thank you very much, Tong Li. We have 5 minutes to go, so we're going to have to be very focused on their last three answers, and I don't want to rush anybody. But I think, Dame Susan, it'd be good to have you address how GEFI can influence the future of investment banking, this ethical drive, because in some of the emerging markets, as Saad would probably know, you have to have these safeguards in place in lendings of the developing world, say Latin America, Africa, and some of the other markets trying to come to the fore. They're making major infrastructure investments. How do we know that they're soundproof, if you will? Please, Dame Susan.
Yes, thank you very much. So Jeffy, the Global Ethical Finance Initiative, we partner with the UN and some major public and private bodies to focus on ethical finance and helping organizations find their way if we can. So we have a number of products and we convene a number of people and sort of have these conversations. One of the things that was going through my mind as I listened to fellow panelists is, and we think about this all the time at Jeffy, that we here talk about East-West. That's how we think. I was brought up to think East-West.
Yes.
And that's what we do. In Jeffy, we have a lot of conversation about North-South because the Northern Hemisphere, in general, has had the economic prosperity and growth to be able to advance in most countries and to move into the digital world and to be able to develop and deal with the challenges, but actually bring that digital finance to life and make it work. But if this conference is about the future of humanity, that's the word that is used.
Yes.
If we think about humanity, that's people everywhere in the world. And goodness, don't we have an obligation to think about what happens to those countries which have not moved at the same speed as we have and need to move now. Now, it's possible. Technology is wonderful because you can, even going to mobile phones, you don't start with 1G, you start with 4G in a country that hasn't had. So there are lots of ways to do this, but I think it's important to look at that through that other lens, and we at Jeffy help lots of organizations do that. We have a platform for SDG products, and we vet those, done in conjunction with the UN. Launched that last year with Aegon, putting the first product up, and we have a lot of conversation about where finance needs to go and will go in the future. So I'll stop there.
Good. Thanks very much, Dame Susan. Francois and Dr. Samar, I'd like to have you finish if you can. I was looking at a number of the international pieces about the Davos in the desert, right? This is the 6th anniversary of the FII, so I'll keep my questions short. But it's quite extraordinary, the panel that I chaired yesterday on the Resilience Initiative and the level of co-investment that's coming from Saudi Arabia. Share from your different perspectives in a minute each, if you can, and I'm going to stick you to it if you can, please. The opportunity in Saudi Arabia, this is extraordinary transformation, well outside of hydrocarbons. First from Rothschilds and then Bank Leumi, please. Francois?
Yeah, no, we see the kingdom and has entered into a massive development and transformation plan. This is attracting a lot of new initiatives, new talents, and new players. So we are all very engaged, to follow that. But we're also very impressed, by the capacity to bring and deliver innovation here, and to be able to implement that at a very large scale.
Wow, it's extraordinary, is it not? A lot of people don't believe it from the outside, but it is real. No?
Well, we've been participating and looking at that, for many years now, and I think that the standard and the quality of the development is is very impressive, and it's only the beginning. So I think that international investors, international players, will spend more and more time here, to try to understand, how it works and to participate.
Good, very good. Dr. Samar, for Bank Leumi, yeah?
Yeah. So as I mentioned, the opportunities are amazing, and the fintech industry in particular is on the rise. We see the economy is very healthy, unlike other economies around the world, and the prospects for the future are very positive, and they are on a fundamental basis. If you look at the regulations, which are very fundamental for the sector, for the banking in particular, the regulators are giving the tailwind to support the change, whether in the open banking that is supported by SAMA, or even open finance, cashless economy, and more technology on the go. And the population is adapting technology. You have a very advanced mobile technology. So all together coupled with the attraction of the capital, even at the seed level, which hasn't been there here in the past. Even at the seed level, you are getting a lot of capital here invested. So the opportunities are amazing.
Okay, thanks very much. I would like to go through all your names and titles again, but the red light is flashing. I just wanted to say, number one, I wanted to thank the Institute for a bit more time, because they gave us an extra 10 minutes because we had 6 on the panel, and we used it wisely. And thank you for handling the diversity of questions across the board. I covered energy for 30 years for CNN, Tong Li, and I saw with interest what the Bank of China did to support the Saudi Aramco IPO, which has been pretty extraordinary in itself. And it kind of talks to you about the East-West relationship that Dame Susan was talking about, and now reaching into the South as a priority with Africa as a logistics hub. Can we give a nice round of applause? And I have closing remarks right afterwards. Thank you very, very much.
Thank you. Thank you, Joe.
That was superb. Thanks.
Thank you, Joe.
Just a reminder of some of the things I was suggesting at the very beginning. If you're interested in the expansion of the Institute itself, please identify some of the representatives from the FII. which I think would be interesting membership opportunity for the events that take place outside of Riyadh. We yesterday were talking about what the FII will look like when it's 20 years old, not 6 years old. So join the journey, if you will, if you want to talk to Richard Atias and his team. I wanted to thank our chairman who's here today, Marjorie Krause of APCO. She always attends my sessions, which I'm very flattered by, so that's good. The new fraternity that I have at APCO, I've been involved with the FII for 6 years, and I appreciate Richard and his team inviting me again. They juggled 520 speakers this year. I think that's a record. And they kept, as we like to say, all the trains on the track with all the communications to all of us that have been moderating as well. I talked about my present fraternity. Let's talk about my past fraternity, and that is with CNN. I'd love to welcome to the stage here. You're going to have to swivel your chairs to see my colleague, Elise Labit. Let's give her a warm welcome. Thank you very much.
Thank you, John, and thank you to everybody. It's been a great 3 days, well, 2 days, and just about to kick off the last day with some really transformative conversations about a lot of exciting things happening here in the region and around the world. And that's what we're talking about today, is the potential impact for some of these amazing projects, investments that are taking place. We're talking about investing for global impact. Now, minimizing the negative societal consequences of an investment is no longer nice or some kind of philanthropic PR move. Investors today are increasingly prioritizing positive and measurable environmental governance or social outcomes alongside financial gains. And global impact investing has shown significant momentum despite disruptions caused by the pandemic, topping now $1 trillion for the first time last year. And some investors have been making impact investments for years, but recently there's emerged this new global international collaborative effort to accelerate the development of a high-functioning market that supports impact investing. And it's a significant milestone, this $1 trillion, but it's also a call for further action, because to achieve the UN Sustainable Development Goals by 2030, to reach net zero emissions by 2050, there's an estimated $4.2 trillion funding gap. And there are questions about the balance between financial return and social valuation, and that's prompted calls for adequate metrics to ascertain whether these investments are truly helping humanity. And so I can't think of a better panel to be talking about this with me today. Brian Hook is the vice chairman of the Cerebus Global Investments, and one of the architects of the Abraham Accords that we've been talking about a lot this week. Jenny Lee is the managing partner of GGV Capital, among other things. Jacques-Philippe Piverger is the CEO of Good Light Capital, and Rodrigo Tavares is the founder and CEO of Granido Group. Thank you all so much for joining us. Jacques-Philippe, let's start with you. Now, impacting and sustainability is really at the heart of Good Light's mission. So, when it comes to social impact investing, let's talk a little bit about what the investors need to consider and do in order to really ensure that positive impact.
Sure. Thank you, Elise. And I just want to first thank the organizers of FII. This has been amazing. I came to the first one 5 years ago, and to see the progress over this period of time has just been outstanding. And I just want to make sure I say thank you and how much we appreciate the work that's gone into it. With respect to impact investing, I think what we'll hopefully triangulate on here in this conversation is that there's a high correlation between purpose and high returns in investments and in terms of mitigating risk. And if you look at the last couple years where there are significant dislocations related to the economy, if you're simply investing in companies that are bottom line driven and they're not solving for things that are of consequence, they're going to be more exposed to risks and challenges, and they're not particularly important in many ways. So for example, on our end, we specifically target companies related to climate, health, education, future employment, fintech. And what we've seen in our portfolio is continued high performance, irrespective of what's happening, because unfortunately, right, wildfires are still happening. So if you're investing in a high growth tech company that's solving for that, it's not likely to do as poorly, or health, right, around cancer, things of that sort. So what I would say there is investors should really start to think of impact as something that correlates highly with performance, as opposed to something that might be concessionary. Have a lot more to say, but have a lot of respect for our fellow panelists. I'll pass the mic. Thank you, Elise.
So, Rodrigo, you advise companies on ESG and impact investing. Let's dispel some myths. Is there a trade-off here between social impact investing and financial returns?
Not necessarily. Thank you very much for the invitation, FII. It's a pleasure being here. Well, for starters, we have to distinguish ESG from impact investing, ESG from impact. When two hungry people, same age, same size, they go to a supermarket, both are hungry, and they are going for grocery shopping, they are hungry and they want to prepare their meals for dinner. Some of them might buy ingredients for a pizza, the second one might buy ingredients for a moussaka or something else. So the supermarket is the global encompassing ESG world. And within the supermarket, within these metrics, these policies, these factors, some people might just look for information in order to apply it in an impactful way. Other people might consider the risk profile of those investments. Let me be more explicit. Impact investing, it's about investing in companies whose products and services generate positive social and environmental impact, and that impact needs to be measured. This accounts for $1.2 trillion. There are 1,289 organizations, 50% of them from North America. This is impact investing, and this amounts to around 1% of the global ESG world of this global supermarket. On the other hand, you have risk management. Risk management is when you go to the supermarket, you collect data, you collect policies, you collect factors, you collect characteristics from companies, and you integrate this information into your risk management tools, into your valuation tools, with the ultimate goal to identify risk with more precision. This other field, ESG integration, accounts for 99% of the global sustainable finance world. So impact investing is important. ESG, statistically, it's way more important. And ESG is gradually being weaved into traditional finance. So to your question, is that a trade-off? No, not necessarily. So over the last 10 years, there has been 1,500 studies, peer-reviewed academic articles, demonstrating there is a positive correlation between purpose and profit, a positive correlation between the more sustainable companies are, the better performance they would have. So you don't need to sacrifice returns, neither if you're doing ESG integration, nor if you're doing impact investing.
So Jenny, you've been in this field for a long time in ESG and impact investing. Your desire to tackle food insecurity has led to many investments in food tech and sustainability, for example. So we're supposed to achieve the UN Sustainable Development Goals by 2030, right around the corner. Should we be celebrating the $1 trillion that have already been made towards this impact investing, or when there are trillions more, $4 trillion to move to the SDGs?
Yeah, thank you, Lisa. Very happy to be here. So as Elise mentioned, I do wear many different hats. At GGV Capital, we've been a global venture capital firm investing in US, China, and Asia, some of the largest markets over the last 20 years. I also wear a different hat. I'm also on the board of Temasek, which is a one of two sovereign wealth in Singapore as well, on the Risk and Sustainability Committee. And so I think my response is that it's great that there's a target. It's great that there's a time frame. And I think that the increased awareness across all the conferences, the discussion is definitely great, but a lot more needs to be done. And so I think whether it has, the Temasek hat or the GGV hat, our belief is that more needs to be done. And one of the key driver is really technology. We believe that, as we all saw as well, we're now in an extremely complex world, right? Whether it's macro politics, economic, geopolitics, and so, we have to come down to a common goal. And in our view, I think the common goal is, how do we use technology? How do we invest in the right technology and leveraging the power of capital to ensure that all of us sitting here, all of you sitting out there, every investment that we make actually has an impact. And so just to share, Temasek has a charter. It's actually built into the Temasek charter to always do well, do right, and do good. And they are actually, there's no front or it's essentially a balanced weight across all three initiatives, right? And so I do believe that we got to do, every time we think about investment, whether it's an early startup or later stage startup, that's a key consideration. And I just want to maybe highlight some examples, right? So in the US, we've invested in the early software company. The company is what they call providing software to help, say, retail shop, the Starbucks of the world, manage their inventory a lot better. So it's about data. It's about tracking the flow of cups of coffee that's being sold every day and being able to supply the amount of coffee beans and, cakes and all that goes to the retail, right? Just the fact that they use data to capture all this information along the way means that they can reduce waste on a daily basis, right? So is this a software company? Has this software company done good? At the end of the year, it's highly measurable because you can track the number of coffee that's being sold, the number of pieces of cakes that's being sold, versus the excess wastage that's going to come from just over-ordering on a daily basis, right? So I think one is definitely a great company. It's helping to digitize and make more efficient the supply chain. On the other hand, the actual data that's being produced as part of this is extremely measurable, and you can tell particular Starbucks store that you can do better. It's one example.
Yeah, and I want to go a little bit more into the metrics in a bit, but I think what we're taking from this is, clearly public funds are not going to be enough, and it's about mobilizing. It's not just about going to conferences and talking about it, but it's about mobilizing that private capital to, close the growing gap on that.
Every single investment.
Yeah, yeah. So Brian, let's go to you. You're one of the architects of the Abraham Accords, which we've been talking a lot about in the at FII this week. How has that enhanced cross-border investment in the region? And let's talk a little bit about the potential for impact, not just here in the region, but around the world.
Thanks, Elise. I've been coming to the region for over 15 years. What we're seeing here is nothing short of like an economic, cultural, and social transformation in Saudi Arabia and in the Gulf broadly. I think this is one of the most economically dynamic regions in the world today, and that is going to continue. You see increased people-to-people ties, greater privatization in a number of Gulf economies. The Abraham Accords, which you mentioned, has unlocked investment opportunities that we have been hoping for I think, some time. In 2021, you had $2 billion in trade between Abraham Accord countries. In UAE and Israel, it's a 163% increase in trade since August of 2 years ago. And so we recently celebrated the 2-year anniversary of the Abraham Accords. The economic benefits have been significant, and that's going to continue for companies and for firms that want to make an impact, that care about a lot of the themes that have been discussed here over the last week. I think this is the region where you're going to make the biggest impact, where there's the greatest opportunity. The leadership in the Gulf is transformative. And it's a very exciting time to be a part of it. As I said, having come here for 15 years, it's It's profound change, economically, culturally, but it's the people-to-people ties that I think are going to keep expanding, and that's going to create new opportunities for investment and for growth and for impact.
Yeah, and when you talk about the impact here in the region, I mean, that's what FII is all about. It's not a conference where we go and we're whining about the problems. It's here's the problem, here's the potential solution, here's the project that has the potential for impact, and let's go. So those are the conversations that are taking place here this week. Jacques-Philippe, as the global economy grows more volatile, aid budgets are being stressed, you know, the SDGs, financing them are becoming a little bit more challenging. And, you know, there's a lot of talk this week by business leaders about the upcoming recession. You know, how likely do you think that is to disrupt impact investing from a purely financial perspective when the human need for social entrepreneurship and the finance behind it is only going to rise exponentially? How is impact investing going to meet that challenge?
Sure, Elise, I think that's an excellent question. And I plus one what has been said on this panel so far. And, you know, one of the things that we talked about earlier around that $3 trillion gap between what's being spent on impact investing and what's said to be necessary for the UN SDGs. 18 months ago, I moderated a conversation with Sir Ronald Cohen after he had just written a book called Impact, and it was called the $40 trillion gap between impact and ESG investing. And the idea is that in the previous year, about 40 trillion had actually poured into ESG, and less than $1 trillion had gone into impact. And that represents a massive opportunity, especially as you have a new generation that's coming into wealth that is really keen on impact. And the way that Sir Ronald Cohen defines impact is that it's measurable, right? So people put money into ESG strategies because they're thinking that they're having impact, but oftentimes it's not measured and it's not actually clear. And so I believe capital, LPs, investors are actually going to drive that shift. And so that $3 trillion gap that the UN is talking about is not actually that big relative to the amount that's already being spent on ESG. So I believe that in the next 5 years, you'll have more than $4 trillion going to impact type investing because it's just going to be driven by the investors. Now, to your specific question with respect to the opportunities and how ESG or impact investing is going to be hit given the downturn in the economy, I think, you know, what's been said earlier is something that everyone should focus on. It's the idea that impact investing is somehow concessionary. It actually is not. It correlates highly with performance. And one of the things that has not been brought up yet is the benefit of diversity, equity, and inclusion, right? So McKinsey did a report not too long ago, and it showed that having a more diverse board, diverse leadership actually leads to something like 30% higher revenues for large corporations. BCG did a study on gender equity, gender performance. $1 provided to female founders or co-founders leads to about 78 cents of revenues, whereas that same dollar for all male founders, it's less than half of that in revenues. And then when you look at where the money is actually going, less than 6%, at least for the United States, and Europe is similar, less than 6% of the capital in venture investing is going to that entire demographic. So as an investor, it's about finding opportunity, and if one believes that talent and expertise are broadly distributed, it's a no-brainer. There's so much more opportunity there. And so for us, that's why at Goodlight, that's part of our thesis, right? We're specifically targeting amazing founders that are solving for challenges that are relevant in the world. And in the last couple of years, we've just seen that, you know, this is something that, you know, leads to outperformance on a relative basis. And, you know, whereas historically, I've been in the industry for a long time, AIG Investments, Pinebridge Investments, lots of different, you know, large platforms. There was a time where people saw investments as a kind of zero-sum game, whereas we're in a place now where I believe everyone needs to come in. So the more folks are participating in impact investing, the better it is for all of us. And, you know, I'll stop there.
So, Rodrigo, when you're talking to your clients, how, and we're headed towards an economic downturn. How do you kind of tell them to stay the course? Like what you're telling them in terms of the financial climate? How do you tell them to stay the course when financial gain may take precedence for a while over social impact? We talk, again, you said there's not a trade-off, but if we're heading towards a recession, does one of them have to give?
Well, there is a recession, there is ESG backlash. So we get a lot of questions from our financial clients in different countries on the future of ESG, whether they should be allocating resources through ESG lenses, whether this is a reliable field or not. And most of us here in this plenary are asking exactly the same questions. Shall I bet on this? Does it make sense? Is it something that I should pursue or not? And when we get those questions, and a lot of them are asking us, there's a lot of political debate around ESG in the United States, a lot of criticism. Shall I press the pause button and let things be quiet for a while before I re-engage with ESG? So our answer to all these questions is no, don't do it. So let's go first to the United States. ESG was caught in a shooting between Democrats and Republicans ahead of the November elections. It started off in May when former Vice President Pence decided to criticize environmental activists for persuading ExxonMobil to make renewable investments. Later, it was picked up by DeSantis in Florida, and it was picked up as well by Abbott in Texas, Governor Abbott in Texas. And just a few weeks ago, the governors of Louisiana and the governors of Missouri decided to pull out $1.3 billion from BlackRock because BlackRock was doing moral investing.
Yeah, we saw this letter, right, to Larry Fink, the CEO, by 19 Republican states saying that he's pursuing environmental ESG policies to the detriment of their state pensions.
That is very right. But on the other hand, you had the Democrats and the pension funds, state controlled by Democrat-led governments, counterattacking. For example, in New York, the pension fund sent a letter to Larry Fink saying, Larry, if you don't step up your game on climate change, we will withdraw our resources from BlackRock. So it's clearly a political game. It's noise. It's a cacophony. It will fade away very quickly. So I would recommend everyone not to pay that much attention to it. It will be akin to, shall biodiversity be criminalized in Brazil? Just because we're going to have elections in 3 days and one of the contenders is a climate change denier and is favoring deforestation of the Amazon? Obviously not. So it should be framed in a very political way, and it's going to fade away very quickly. But the important point is, there is no good investments without integrating ESG. It's irresponsible, it's unsophisticated, it's unprofessional. ESG is a set of characteristics emanating from the financial asset that investors need to incorporate into their traditional investment making to allocate resources. Not doing that will be a violation of their fiduciary duties. So ESG, it's not necessarily about saving the planet or doing good. That is mostly impact investing, which is noble, it's gentle, it's important, it's fulsome, it's interesting. But an investor on late October 2022 in whatever part of the world, including this kingdom, a traditional investor could be a $5 million family office, it could be $1 trillion sovereign wealth fund. An investor, as we speak, that does not integrate ESG policies, metrics, factors into their risk policies, into their asset management, with the intention to leverage and maximize their profits, with the intention to identify with more precision the risk profile of those assets, quite frankly, it's not a highly sophisticated investor.
And Jenny, we were talking before the session about how you think that ESG investing and impact investing should be in every fund.
Yeah, so I always feel that for us to embark on a common goal, there are many different tactical ways to do it. It starts with one, setting the goal, but more importantly, it's increasing the awareness. So I wouldn't go that far into saying that if you don't incorporate ESG policies into your investment, if you have a family office, and it's not incorporated yet, that you're not sophisticated. I do feel that we're trying to do this globally together. And so the most important thing is going from 0 to 1 in terms of awareness. And so that awareness has to be alleviated and maybe represented by different stakeholders, right? I think the government in many, many countries has the task of setting the right goal, right? In Singapore, for example, we have a green plan, which is really by 2030 to have all newly registered automotive or cars to be green energy. They have put in specific targets to plant, like 1 million trees to make sure that 20% of all schools are actually sustainable. So I think governments needs to do that. On the other hand, on food, Singapore again declared that by 2030, they want to get to 30% self-sufficient protein provision, in the next 8 years. So I think that for government, you do have a role of setting the guidepost, setting the target, setting the time frame, but not be overly stringent in terms of telling people how to go from 0 to 1 to 2 to 3. So once awareness is set, I think the other stakeholders will be the capital allocators, the investors, the family offices, to say that, that has to be kind of top of mind, right? And I think it takes a long time to change the world, right? And this is one that's, again, on a global basis. And I would hesitate to say, oh, you are not sophisticated or you are sophisticated, because at the end of the day, how do you define sophistication? Is it because they made money or do they not make money, right? So I also want to then make this real into the startup world. As a CEO, as an entrepreneur, when you're trying to change the world and you say, I just want to build this great product that's going to, for example, I give an example, education inclusion. We have a company in China that was using AI technology to allow learning to be mechanized on a mobile phone, so that they can actually allow this learning to go out across all the population, regardless of city. As you know, China is highly penetrated in terms of mobile phone access. For those who can afford it in tier 1, tier 2 cities, you pay a little bit, as you download and use the app. The company went as far as actually leveraging the same technology, the same product, and providing it free to the villages out in the mountains that has no teachers, because you couldn't get teachers to go to those villages, right? So now for a company like that, they first have to do product market fit. They have to make sure that that tech is working, that it's great, curriculum is good. Obviously, there has to be a paying customer, because then the paying customer is helping to continue the R&D effort. But because there's awareness within the company management team to also want to do, to make sure that the average person can get access, they actually provide it then free to the rest of the population. So that's why I think the awareness needs to go in, and to the extent, if you do well, great product, you do the right thing, and what's the right thing is making sure that you price this accessibility the right way. And then the company would do well, right? Because then you get the support. So that's the step that I would go through.
Ryan, pick up on that. She talks about awareness and kind of the sophistication of investors. For some that didn't traditionally come to market with a whole, ESG or impact, mindset, it's a whole new paradigm. Whereas, these type of investments years ago, before it became a thing, were more of a philanthropic type of thing, or a PR type of thing. And now it's about, measuring impact in addition to financial return.
We are seeing a new paradigm in the United States, as you pointed out earlier. It has become a divisive issue. I think you had pointed that out. We have almost half of the states in the United States have expressed concern through their Attorney General about ESG policies. I think characterizing that as noise is not productive. I think if somebody disagrees with you, it isn't fair for debate to characterize it as noise. And I think when we do that, we increase the polarization in the United States. Just because somebody disagrees with you, it shouldn't be dismissed as noise or political. debate is healthy. It's healthy for ESG to have the debate. And so that debate is going to continue. We ought to encourage it. If we try to silence the other side, it's bad for debate. And so as a process matter, I think we ought to be spending more time listening to each other than demonizing each other. I think we talked a little bit earlier about some of the macro headwinds that the global economy is going to be facing, is currently facing. What effect will that have on things like ESG? I think here in the Gulf, there's been a real focus on new partnerships, new alliances, on sustainability. Regardless of the sort of economic downturn that I think we're going to be looking at around the corner, that's going to continue. There is a great focus on sustainability and on renewable energies and resource conservation. As I said earlier, greater people-to-people ties. All of that's going to continue because I think there is a new paradigm that we ought to encourage. At the same time, I think we ought to be having a very healthy debate about these policies, which we are having in the United States. It's a good thing. It's not a bad thing.
Rodrigo, you want to quickly respond to that?
I want to think about the future. I don't want to think about the 2022.
Yeah.
So how do I look at ESG and impact in the coming 2 or 3 years? I think we are in the ESG 1.0 version.
Good point.
So ESG 1.0, we are facing numerous difficulties. One of them in the United States, and I agree with you. So ESG 1.0 is characterized by lack of standardization. No one knows exactly what an ESG fund should look like. If you are in Kazakhstan, New York, or in the Kingdom, the way you define an ESG fund varies. There are way many ESG rating agencies, over 100 of them. The legal setting of ESG needs to be more consolidated. The terminology is inconsistent. So the whole infrastructure around the ESG and partially the infrastructure around the impact, it needs to be improved. ESG 2.0, we are moving from 30 reporting frameworks to 1. We are moving from 100 ESG rating agencies to 3 or 4, and a process led by Brazil and by the UK. We are moving towards fund standardization that is coming along very, very, very quickly. So ESG will be more precise, scientific, mathematical, simple, coherent. That's ESG 2.0. ESG 3.0, Elise, I'm so passionate about ESG that I believe the future of ESG is non-ESG. So ESG will be so incorporated, so weaved in traditional finance that we're going to stop talking about it. A good analogy is the social quotas. It makes sense to have social quotas, temporary social instruments to carve out portions of society in order to find the right balances. We have been able to carve out ESG as a subset of important fundamental metrics, and very soon those subset of metrics are going to fade away. ESG will be absolutely banalized, normalized, and become mainstream.
Okay, that went so fast. We have so much more to discuss on this. We have about 30 seconds left. Jenny, say a quick word about metrics. What's the key thing we need to know?
For measurement?
Measurements.
Yeah, so maybe the limited, I do feel that I agree. I think ESG is in level 1.0. To have, so what's very important to progress to 2.0, 3.0, to incorporate thought processes and measurement, we do need to have what we call an ESG operating system, right?
Yeah,
much as all of us
framework.
are using iPhones, Apple operating system, or Android operating system, I think the stakeholders needs to come together and do define one set of operating system that can be replicated and recognized and shared and cooperated across the world.
Okay, Jacques-Philippe, the last word to you. Quickly, some of the areas that are showing the high growth, people in this room, what they need to know about where impact investing can have both the most impact and financial return, you think?
Health, climate, education, future employment, things that are important in the world. And for the rest of my 30 seconds, I want to add to the future. 2000 was the Millennium Development Goals. 2015, Sustainable Development Goals. Sooner rather than later, it's going to be regenerative development goals. Sustainable development goals keep us where we are, and we're at a point where more needs to be done in order for us to actually save ourselves. And I think that's also going to correlate with outperformance, and I'd like to leave you with that. Regenerative is part of the future.
Okay, people, we have about $4.2 trillion more for impact investing. It can start today. Thank you very much to our panel, and thank you to FII for a wonderful week.
Wonderful.
Good morning, everyone. Great to see you all here. My name is Fadi Ghandour. I am the chairman of WAMDA Group. We do venture investing across the Arab world. We have a fantastic panel and incredible panelists today to discuss venture, what is venture doing in fueling the growth of the startup ecosystems across the world, and specifically maybe in emerging markets. Let me introduce the incredible panelists this morning. His Highness Prince Khalid bin Al-Walid bin Talal Al Saud, founder and CEO of KBW Ventures. My friend Hani Inaya, Chief Investment Officer of Sanabel Investments. Christine Zai, CEO, founding partner of 500 Global. Dr. Klaus Hummels, founder and CEO of Lakestar. Mr. Saleh Al-Rumeih, who has just become a Saudi citizen last month. So Saleh has deep origins in Saudi Arabia, and now he's been granted the Saudi citizenship. So welcome, Saleh. He's managing partner and head of operations of Europe, Middle East, and Africa for the Vision Fund. And last but not least, we have Ravi Shankar, managing partner at Sequoia, who covers India mostly, but he's also been exposed and has been living in the region out of Dubai for the past year and a half. So welcome, everyone. We want to address the challenges that we're facing today, the venture funding that is facing today, and maybe question some of the issues that venture has created in the ecosystem of technology across the region. So I'm going to start with you, Your Highness. So is it time for us to revisit how venture invests? Is venture really the way venture capital, the way it's structured, 10 plus 2, etc., is the way to fuel the growth for an industry that requires long-term?
Sure. Bismillah, alhamdulillah, salatu salam ala rasulullah. Thank you very much for the kind introduction. Obviously, I look up to Fadi very much, so this is a real honor being at this stage with everyone, obviously, here. Venture is absolutely not going anywhere. Venture is the stepping stone of all of everything innovation. Anything that comes out of venture really grows into all the next stages of a company's cycle of raising. We've actually seen a number of increased amounts of innovation happening in the past years, and that's only going to follow in the next years to come. As a matter of fact, there's more dry powder or more capital on the sidelines from vintage funds than ever before seen, and I think now is the time. Now, in the next few months, is the time to actually really capitalize, save up a lot of capital to really invest in this next economic downturn that we're having. And the best times to invest really is after an economic downturn. So venture is definitely not down and out.
And are you feeling the changes that venture is creating in in our own region?
Oh, yeah. I mean, if it wasn't for venture, you wouldn't have anything like Web3, of metaverse, crypto, blockchain, and all the other technologies that are here to stay. Venture, again, is the foundation of everything that's going to evolve from there when it comes to growth capital, when it comes to going IPO, and the natural rounds of investing. So honestly, for me, there's more money being invested in venture. We've seen numerous studies, but there's more money being invested in venture in the first 3 quarters of this year than entire last year. Yes. So the venture is definitely still there.
And I'll take that to you, Hani. And you deploy globally. You deploy also in the region. You're an enabler of the ecosystem in the region, specifically in the kingdom. What are you seeing now? I mean, the global markets in general have been in turmoil. Are we feeling this here? What are we expecting to happen in our own markets? Is it going to come here? Because I don't feel it yet in this market.
Well, thank you, Fadi, and great to be here with you and my fellow panelists. So yeah, you see overall like negative sentiments, but let's take a look back. I mean, overall, like if you look at the years that followed the global financial crisis, it produced one of the best vintages in the VC market. And as a matter of fact, I think what's happening in these markets today is a very healthy recalibration. And if you look at the data, like the first 2 quarters of this year, like fund raised similar amount almost to what they raised like a year ago, but something very interesting is happening. So the dollar amount is healthy, but actually much fewer funds raised that money. So there is much more consolidation happening. Lots of dollars raised, fewer funds are raising. So LPs are basically favoring those very established fund managers with very proven strategies across market cycles and with deep LP connections. But something interesting that's happening, if you look at the dry powder that these VC funds have, it's actually at an all-time high for this year. But what's interesting, the deal activity has plummeted this year. So there's lots of dry powder, no investments in the early and much less investment in the early and late stage, which can make next year very interesting, hoping no more negative news come, which is something that the market did not price yet.
And are valuations getting to a place where one should jump into this now? I mean, are early stage and a bit later stage companies and founders realizing that it is no longer la-la land of the past 5 years?
Oh, yes, definitely. So everything eventually followed public markets, and there was lots of public market volatility. However, like private valuations always lag. So if you look at Q1 this year, it was la-la land. Nothing was happening, like the valuation was still high. However, you see the effects starting in Q2 and this quarter as well. And we expect also major recalibration happening in the next few quarters as well.
Fantastic. Christine, you are committing big time to the kingdom here. You're doing, I know, I mean, you're exposed globally, obviously, but I want to focus a bit on the commitment that you have for the kingdom. What are you seeing in Saudi Arabia? What is it at a stage where you must have where you experienced in your more developed markets in terms of the number of startups, the areas, the founders, the quality of the founders? Tell us why are you committing to this specific market here?
Well, definitely. Well, it's good to be on this panel with my fellow panelists. 500 has been investing globally since the beginning. We've been investing for 12 years. And specifically for the MENA region, our first investment into the region was 2012. So we have been investing in the region for quite some time. But what we have seen is a very significant shift in terms of the center of gravity. Our first investment into a Saudi company was 2016. And over the years, we have been investing further into the kingdom. Our regional headquarters is now here in Riyadh. Our team is based here, and while we do continue to invest throughout the region, we see so much potential with Saudi. We've worked quite closely with partners like Sanabil, and it has been really instrumental in developing the startup ecosystem here. And in terms of the potential, we, to date, have invested in over 60 Saudi companies, and we only see that growing further, especially because of the deal flow that we see at the early stages. There's been tremendous, tremendous support from the kingdom itself to spur entrepreneurship at all levels. And what we have seen both here as well as our work in emerging markets and mature markets around the world is that to build a very sustainable venture ecosystem, it takes multiple parties. It's not just at the early stage founder side, but it's also support from the public sector, from corporates, and that cycle needs to happen over the course of many years in order for it to be truly thriving. Certainly Silicon Valley has had that benefit for 50, 60 years, such that you have those cycles. Companies that grow, raise capital, exit, the liquidity happens, comes back into the market, more founders go off to start companies. So, in terms of our global approach, we see our efforts here in the kingdom, but broadly in the MENA region, only increasing. And we hope to see more and more unicorns, although that's, of course, not the most important thing, but we do see big outcomes happening here.
Maybe you can add a couple of points on the enabling environment in the region here, so that we're making it a bit relevant to where we are. What are you seeing? I mean, how do you feel about the enabling environment? I know there's a lot of capital, but what are other issues that you think we should be addressing in emerging markets in general, but also in this very rising region?
I think broadly with emerging markets as a whole, and certainly this applies here, but in many markets where the startup landscape is continuing to mature, is that there certainly is, capital is still certainly important. I mean, there's capital that goes into the later stage companies, like at the public side or pre-IPO side. And then here, I think there certainly is a number of, at the angel, pre-seed, seed stage, many seed funds cropping up. So there is starting to be an increase in that early stage capital. Typically in nascent markets, that's the hardest thing for founders. They can't get that first round. Many are forced to bootstrap. So that's a nice development. But all along the growth of the founder, as you get towards Series A, Series B, Series C, in many markets that actually still is a gap in terms of companies raising that next round. And unfortunately, when you get to that point past seed, say Series A, Series B, you're large enough that you will raise a larger round. Series A's and Series B's are getting larger, but from the global capital perspective, there aren't that many global investors that will invest at that stage. It's still early. So these founders are still looking for local capital, and that can be a gap. And in terms of other things that we see where there's still work to be done is certainly on the mentorship, founder education side. I'm based in Silicon Valley, although our team is global, and as you can see, you can walk into any coffee shop and there's founders and investors talking, and it's much more accessible. Yeah. And over the 10 years, there is a lot more that is accessible in terms of resources online through technology, but it's not the same as founders who have been and won in that market. So there is still work to be done in terms of the mentorship and resources.
Thank you, Dr. Klaus. So I'll pick up where Christine ended there and talk a bit about how you see also challenges. And you invest, you're based in Europe, you invest mostly in European companies and probably have exposure globally. But what do you think are the challenges that worry global investors when you look at emerging markets where we think the next big opportunities are? Why are we not seeing we do see some, but trickles. But there is still a big worry. Is it because you want to make the highest returns possible in emerged and already developed markets, and you worry about our fragmentation and the other political challenges that are in the region? I mean, what what are the issues that global funds have when looking at our markets here and emerging markets in general?
Yeah, thank you. So, I mean, Europe is a little bit complex in terms of pushing decisions through. It has been set up to avoid war, which has worked very long. So that comes at a cost of being more progressive in pushing things. But now I think it has developed hugely the last years. And I'm amazed how forward-looking and advanced you are here. You have already discovered, and you're very much pushing that venture is the decisive assets class for the next years to come. Yeah? And so when you look at it in terms of the necessity, the narrative for Europe is a little bit the complexity. So I did a study with McKinsey where we analyzed why Europe has become rich. And basically, Europe is very famous for its Mittelstand, for its family businesses. And they have been financed. Europe has financed innovation with 4% of the GDP. In earlier times, this innovation was called Bosch, Siemens, BMW, Mercedes, and banks financed this innovation. Now banks in Europe have a stronger regulatory framework and are not in a position anymore to finance innovation. So this is beautiful for venture funds, because if you think about the rejuvenation rate of the industry is something like 3-4%. So at a DAX, that is 100 billion a year. And if you see Europe, it is 300-400 billion a year. This had been financed by banks, and this will be financed structurally by venture and growth funds in the next years. So if you ask me like problems, so the revelation and the clear vision on the political side to do that is what is missing in Europe. So for example, regulation on insurance, regulation on pension funds prohibits the money to come in. Endowments we do not have to that extent as we have them in the US. So the core sources of money going into the funds is in a different way. So states have to do the jump start financing. And then we are very happy that the interest from different regions in the world is also clearly accelerating because the ecosystem has now reached a maturity which is perfect. So you see that with the Sequoias and others opening office in Europe. That is a clear testament to the attractiveness of the market.
Thank you for that. Saleh, we were talking right before we came in that the Vision Fund has deployed $120 billion.
Give or take 10.
$120 billion in 5 years.
Yes.
A bit less than 5 years. So, and so you get exposure globally, and you've seen, you are part of the absolute booms and a bit of what I can call maybe the bust now. I mean, what are the lessons learned here? What have we learned from what you are doing and what we're seeing now?
Sure. Well, first of all, I'd just like to reiterate that I'm very proud to be a Saudi citizen. I was granted citizenship this year, so to all my Saudi brothers and sisters, it's an honor for me. Thank you. Thank you. So in terms of lessons, well, just to put some context, as you said, Fadi, we invested over $130 billion in 450 companies. So we have a lot to draw lessons from. First lesson, I think, is that innovation comes from many different parts of the world today, right? It used to be the Valley, Berlin, London, but today innovation comes from all over the place, what I call the capillaries of the world. India, for example, is a huge area. Here in the kingdom itself, we have some investments in common with Hani, and I've met some incredible founders. So the good news is that innovation is coming from all the pockets in the world, and I think it's important for all of us as investors to be present in these capillaries to pick up on the innovations. That's one. I think the other lesson we've learned is that, and you mentioned emerging markets, and although I don't associate the kingdom as an emerging market per se, I think we all coexisted for many years in a system of globalization where there was interdependence between different regions. That today, I think, is going to get challenged given where geopolitics is headed. And I think the role of different countries is going to have to get redefined because some of this interdependence is going to dissipate, right? So what does that mean for a lot of our tech companies and a lot of these early stage companies? It's going to be, I think, harder for them to cross borders. In fact, when you look at our portfolio companies, one thing we've noticed is that going cross-border, becoming international, is a much more difficult task. A technology may be adopted by the US or Europe, or wherever it is, but it's hard to grow cross-border. I think the other challenge, of course, is as investors, we're obviously very focused on returning capital to our investors. For different parts of the world, the question becomes, what's the exit? And one of the biggest challenges today is that the stock markets are now recalibrating, and it's not as accommodative towards companies that have what we call long duration, profits that are backdated. So back in the old days, I think, well, not that old, but just recently, it was much simpler for companies to try and target NASDAQ as the prize to exit. That's becoming much more challenged. But luckily, we have stock markets in India, here in the kingdom, the Tadawul, that can accommodate these companies. And it's important for investors that we have an eye on exits. That's very important as well. And so far, we have yet to see that wave of local markets being able to accept and adopt these new companies as they come and provide enough liquidity and enough depth for investors to not just exit, but also new investors to come in and invest. And I think lastly, and this is the elephant in the room, we have a new paradigm where money is not free anymore, Fadi. You know, since 2008, we enjoyed zero interest rates for very long. I mean, effectively, that means capital was free. Capital was abundant. And I think many investors lost a bit of discipline in terms of deploying that capital, and the companies themselves didn't have to work that hard. If capital is free, equity doesn't have to work that hard, right? Today, the risk-free rate is, depending on what you consider the risk-free rate to be, it's around 4%, probably headed to 5%, maybe even higher. All risk assets, as a result, is getting repriced. So venture capital, venture equity is going to get repriced as well. And I think that's something we need to be mindful of. And I think in the past, people lost sight of the fact that there was a required return that you had to adjust depending on which part of the world you were investing in, what stage of the company you're investing in.
Great. I have a couple of follow-ons, but I want to go to GV. Couple of questions. You're Sequoia. You're focusing on India and other emerging markets now. Last year, so there is that emerging market element, but you're also the global, very famous venture fund. But last year, you came out with a big statement on Sequoia transforming into permanent capital. What does that mean? What does that mean to startups? What does that mean to investors? What does that mean to the venture industry in general? I think, there's a lot of lessons there about patient capital.
Absolutely. First, pleasure to be here along with my fellow panelists here. Thank you for having me. I want to start with the story of, the pre-story to this is maybe 2014 or 15, when we all met at a global offsite. We did this exercise called the pre-mortem. Pre-mortem is really like a post-mortem, but done much ahead, right? And the statement was, Sequoia's dead, it's 2030, Sequoia's dead. What went wrong, right? And that really kind of made all of us look up and say, what, Sequoia's dead? We just completed 50 years, by the way. But at that time, the question really was, if Sequoia becomes irrelevant, why did we become irrelevant? And that really pointed us to a couple of things that came out of that session. One is the fact that companies, the way they were invested in and how they exited, et cetera, over a period of time dramatically changed. If you were in the late 90s, you start a company in 2 or 3 years, you're a public company, right? And even before some significant maturity has occurred. When you're high growth, you go public. But what's happened in the last 10, 15 years is companies are just staying private longer because there's just so much more value accretion that's happening in the private markets. So you need longer term, more patient capital. So venture can't think like, hey, I've got 10 years and I've got to get in and get out within that time period, because significant portion of the value accretion happens later. And founders are expecting you to be with their journeys because you are the first capital in or the first couple of capital providers in. You understand the company best and they expect you to stay with them longer, right? So that's one. Second, I think this notion of capital being the differentiator is gone. This capital is not anymore a differentiator. Capital is now available from various different types of vehicles, whether it's family offices, seed funds, others. And so founders are actually asking the question saying, how are you going to add value to my journey through the company? And so company building has become a very significant portion of how you need to think about it. So those were two kind of insights, and we started saying, hey, how do we shape Sequoia towards kind of doing both well? And last year, we had the opportunity to kind of go to this permanent structure, which is essentially like saying, look, LPs trust us with their capital. Many times when we have a 10+2 structure, when we return capital, they actually don't know what to do with it. They're like, hey, if you guys, should I hold this stock when we distribute a stock, or should we sell it? Most people end up selling it because they don't really understand the underlying company that well, right? So we felt it was better that for the enduring companies, we hold them for much longer because some of them surprise you on the way upside. And we have the flexibility for people to come in and come out through a public pool. But for us as capital managers, we have much more long-term permanent capital that we can support our companies with, where we can go and tell a founder today, look, we can be there from idea to IPO and beyond, right? And that's a very powerful kind of partnership that you can strive with a founder. And so that's the reason we went to a permanent capital structure. And we think this is the question on VCs being relevant for the long term. I think we have to adapt ourselves to be relevant to the changes in the market.
Quick one. You're famous to communicate with your founders, the companies that you've invested in. What are you telling your founders today? Quickly.
Yeah.
What are you telling them?
Absolutely. So we started telling them maybe September, October of last year, saying, look, cut your burn, conserve capital, make sure you don't have to be in the market for 24 months.
Do they have the skill set to do that? Because in the past 12 years, I say
some
entrepreneurs,
people do, and some people are learning the hard way.
Entrepreneurs were told, don't care about what you do with your cash, just spend, and their skill set is spending. Do they know how to actually do something else?
Fadi, great question. Some of them do, but most of them don't, and they have to learn the hard way, unfortunately.
It's hard for founders to suddenly switch from growth mode.
Yeah, but we've
and it's their baby typically, right? So it's very hard for them to suddenly.
Yeah, and we have to take some responsibility for that.
And I think that's the role of the board. I think that's the role of the board.
And so I'll take that to you also, Your Highness, on have we spoiled the founders? Have we spoiled them in a way where they've focused on one area and then suddenly they discovered that the world is much more complex than triple-digit growth?
I think the model of growth at any cost has definitely been broken, and I think we're thankful for that. I think the road to profitability is the way to go. With governments printing money during COVID did not help the road to profitability. However, it fueled the growth at any cost model. However, I do see a lot of VCs pulling back from that model, a lot of VCs giving a lot of advice to founders to start conserving their capital. And I think this is a good thing. We have to focus. Right now, we should have done that before, but regardless of that, interest rates are zero. There's a lot of liquidity, and there's a lot of possibility for founders to raise money anywhere in the market, whether it was a good company or whether it was just an idea just out of thin air. So from my point of view, honestly, I do think that this slowdown is a good thing, and I think there's a lot of money being put in the sidelines for the next, let's say, 8, 12 to 16 months, or 18 months rather. And I think we're going to see a good amount of quality capital going to be deployed in quality companies in the near future.
Yeah. Hani, I'll take the same question to you, but I'll also add, I want you to add a little bit and say, do investors, venture investors, have also to build a different skill set in, since that past 10 years, in how we actually help our startups? So, because if they don't know, then that skill set needs to be built somewhere else also to bridge them.
I agree 100%. And I think in this market, we will learn like the difference between experienced investors and non-experienced investors. Because growth will always be the core of VC investment. However, like it's different modes of growth. As Khalid mentioned, in an era of like near zero interest rate and ample liquidity, it might make sense to fuel growth by subsidizing the customer, basically. Because, the VC asset class is not isolated from the overall market, and the market goes through cycles of boom and bust. So when there is a boom cycle, a seasoned founder or a seasoned investor will understand that, yes, growth at all costs can make sense. However, when we enter the boom cycle or the bust cycle, things have to change. And I think boards have to take ample responsibility in these markets. For our portfolio companies, we are emphasizing with lots of them, you can't grow at all costs right now. You have to basically emphasize sustainability. And you need to extend your runway. For example, if someone is having a runway of 6 months now, they're almost in a bad shape, in my opinion. You have to optimize for extending runways to like 18 months or more, because so many like bullish investments happened in the last 6 months or the last 18 months in the region, and no one knows whether this momentum will continue or not. So many things are not yet factored into the market, whether there will be a US recession next year or not. So it's really a wait and see, and no one wants to catch a fall or a knife falling, basically. So I think boards have to take lots of responsibilities and monitor things very closely because of the lack of certainty.
Go ahead.
Yeah, maybe I'd chime in here. So I think that's where also you will have like two different kind of VCs. The ones being founded after 2010 and 2011 that have only been momentous investors so far, and those that are there before. So when those that were there before, they had it basically twice, with the meltdown in 2001 and then with the 2007, 2008. And I think if you cool down and have a long-term view, that is the right attitude to founders. You mustn't forget these are the stars. So they have a one-trick pony. They put their CV for 7, 8, 10 years on one number, so to say. And if you guide them with a sort of being relaxed and having a midterm view and taking sober decisions of the momentum moods, I think that is something that is now demanded for the top founders.
Right. Christine, is this the dot-com crash similar moment as the new companies that had emerged from that dot-com crash back in 2000? Are we experiencing something similar today where the new companies that are going to create the next wave of the digital landscape are emerging now? Is this a blessing in disguise that we are having this disruption in the market?
I think there is, when you look at the different crises over the past 20 years, certainly the dot-com bust, GFC, and what we're going through now, there are parallels, of course, but I think what we're going through is not going to be anything like the last two crises, simply because there's different drivers for what is going on. So I think that's what is creating a lot of this fear and uncertainty, because people want to try to connect it to something that has happened. But I do think that it is due for correction. Your earlier question, is venture dead? Is this, what does it look like? Certainly I don't think so. I don't think any of us on the panel believe that. But I do think there is a correction, just because we've had an incredible bull run over the past 15 years. There's been a lot of capital into the market. And in terms of the growth at all costs or sustainable growth, I don't believe that it's going to swing completely the other way for that long, where investors only care about profitability. At some point, that's what the big focus is right now, because there has been very reckless growth, companies with very poor unit economics that are just burning cash and really just ultimately don't have product market fit. And they're really looking at these top line numbers, very misleading. So I think what's really critical is to understand that venture still looks for growth. We're looking for the big outcomes, and you can't do that by just kind of very, very, very slow growth. But what we want is sustainable growth, and sometimes it's hard to find that balance. But even in our portfolio, we do have examples of companies that are profitable, have very strong cash on the balance sheet, but they are growing. So those businesses are out there, but I think our role as investors is to help our companies operate prudently. And I think there hasn't been a lot of that for the last year. The people have been quite greedy. So I do think that in terms of, do we expect the next game-changing, iconic companies to come out of this crisis? I think if history tells us anything, we're going to have a very good vintage this year, next couple of years, because there will be some very amazing companies coming out, and they will be coming from all over, not just Silicon Valley.
Last question. We have practically a minute. Are LPs knowledgeable enough to understand that it is time to invest now because the market this is the time to invest, or are they worried because of the disruption? What are you seeing?
I think we're headed towards a very good part of the cycle, right? There's no doubt. But I think things have to settle down first. We have to see where interest rates settle down.
Right.
There's not consensus as to what that's going to...
JV?
Yeah, I think right now there's a dislocation because the public positions are down, so the private exposure has actually increased, so there is a concern. But that said, for markets, India particularly, and maybe even Middle East, I do think these markets fundamentally are still seeing growth, so there is a lot of interest even today.
Fantastic. Well, this could take us days to discuss. Thank you so much. Incredible panel. Thank you all.
Thank you.
The next panel, please stay. The next panel is China is Back. China is Back, moderated by Mina Al-Uraibi.
Good morning, everyone. It's great to be back in Riyadh and great to see everybody back here sitting comfortably together without masks. So hopefully, may the era of COVID-19 be far behind us. I'm delighted to be moderating this session entitled China is Back, although we may deliberate what that actually means and where it's back to at a time where the global order is going through incredible transitions, hurdles, and moments of reflection, I hope. So, post-COVID-19 era, Ukraine war still ongoing, a sense of huge transformation with digitization, the emergence of Web3, greening of the economy. Many of us in the region are looking forward to COP27 happening in Egypt and then COP28 happening in the UAE the following year. A lot of interest in what's going on globally, and what that means for China, but also China's influence on these developments. China is still the world's largest exporter, and foreign trade, depending on the numbers that you read and which entity, but foreign trade is estimated to be 35% of its GDP. Now, despite geopolitical tensions, its main partners remain the US, China, South Korea, Vietnam, Australia, Germany. So the headlines for journalists like myself are still very catchy, but the reality is trade is still strong and remains important. FDI in China grew in the first half of this year by 17.4%. So our esteemed panel here is to talk about what this all means. I'm going to start by introducing Ming-Po Chai, who's founder, chairman, and CEO of Cathay Capital. We have here also Nicholas, also known as Gucho Aguzin, who's CEO of Hong Kong Exchange and Clearing. Nelson Peltz, founder, partner of Trian Fund Management. And Patrick Zong, who is founding managing partner of M31 Capital. And Dr. Han Feng Wang, who is Chief Strategist and Managing Director at CICC. So, Gucho, I want to start with you. The world is going through incredible turbulence on a both geopolitical but also economic level. In the last 2 days, we've been hearing about what the next year or two look like, especially with countries going through hyperinflation in certain parts of the world, but also uncertainty. What is the view like in Hong Kong and wider China, and where do you see the opportunities during this change?
Yeah,
Thank you very much. I mean, clearly the global environment is really tough, and the environment in China specifically was affected not only by geopolitics, by COVID and the situation. So without a doubt, it was a difficult period. But the numbers you quoted just now are quite evident that there's still some reasonable level of activity. When we look at GDP in the third quarter, 3.9%. The number you quoted around FDI, which is 17%. Most of that, by the way, coming from the US, from Korea, from Germany. And then you have quite a good level of exports and import trade balance as well. It's doing okay. It's a little softer than what perhaps some people would have expected without the COVID, but it's okay. Now, the elephant in the room is like, what's going to happen going forward? Are we seeing a bit more of a closing down of the economy? I mean, is it like becoming a bit more like less willing to interact with the world? I mean, and I can mention that what I see from the Hong Kong side, Hong Kong exchange side, where a number of years ago we introduced a really interesting product, which is called Stock Connect, whereby international investors can connect with mainland investors or companies or targets and the other way around. And that worked really well. Then for a number of years, we didn't have many things. And over the last few months, we've just seen a barrage of initiatives to open up to the world in a way. I mean, things like we call it ETF, connectivity around ETFs, connectivity around swaps, swap connects, derivatives products, future products, bond futures that in the past you would not able to do. Now, all of a sudden, you're able to do, and international investors will be able to do. International banks that were restricted from potentially having and setting up their operations in China, all of a sudden, they have all the ability to have fully owned subsidiaries, wholly owned entities in China. I actually think that there is quite a bit of more connectivity. If I look at the last few months, it's becoming much more interesting. I believe that the key objective that we're seeing is China is very focused on development. So they want to make sure that they double the GDP per capita by 2035. That will give you a little bit of a floor of growth. That would be 3, 4, 5%. I mean, it's still reasonable flows. They want to continue connected with the world, so connectivity is very important. They want to modernize their system. They want to make sure that they find new ways for the market to play a key role. And while there are some doubts, is that going to be market-driven? It's very clear for me, the market will play a role in the allocation of resources. And the other area that is of a lot of focus, you highlighted opportunities. I would mention two. Technology, number one. The number of technology companies that I see all the time, just like coming to our exchange, trying to list, trying to be part of the public markets. And the number two, sustainability. I mean, it's just like that some of the numbers are mind-boggling in terms of their production around green products, whether it's renewables, whether it's trees. I mean, China is going to be planting 70 billion trees by 2030. 70 billion. I know the kingdom is thinking about 10 billion by 2025 and 40 billion by 2030, but this is just like massive. So great opportunities.
And so that momentum, especially what you've spoken about in the last few months, is that opening because there's been almost this pent-up period of time when the world felt like it had come to a stop almost during COVID-19. Mingpo, I want you to follow up on that idea because there is this enthusiasm, as we're hearing from Gucho from China's side, for development and to grow markets. But at the same time, the geopolitical tensions that I started with could make the flow of capital more difficult as we go into the coming few years. So you work across 4 different continents. How do you see that happening, and what's your advice to investors?
Yeah, thank you. I'm always amazed by seeing how people lose their interest. Before is lost the interest in Western, and very quickly now they are losing the interest for trying to look at the room. It's empty. Before, a couple of years ago, this session should be the whole room will be packed. I think the nature teach us a lot of things. I don't know why human nature don't accept that you have a sunrise, you have sunset, you have tide high, tide down. Before, we see China always in the morning, but sometimes you have to allow China to have also sunset. Sunset is also beautiful. If we come to China, the topic, we have to talk about the entrepreneurs. When you see the young generation entrepreneurs, how they are hard worker and they really want to do things, make things happen, and you give them digital resources, they bring you kind of oak. But the takeaway of this situation for me, there are two. First, this is of the investors outside of China. Don't take your perception as reality. You know, we always use the perception as reality. Actually, China never changed it. They continue their pace. And in this situation, for the Chinese entrepreneur, from their side, I think the mindset also should change. I'm Chinese. I went to France 33 years ago. I built one of the biggest private equity PE firm in Paris. Well, I'm still hold Chinese passport, but in France, no one take me as a foreigner. Why? Taking example, I come here thanks to Hishar invitation. My first question it is what I can do for this region. What it is the unfulfilled demand for this region. Within 3 days, I met dozens actors, local entrepreneurs in the AI, in the logistic, local funds. I realized that here, you have to bring the ecosystem. It's not just one technology or one deal or investor here or there. You have to bring the startup with the corporate. It is what I have been very successful in France. I have a half of a French CAC 40 as my partner, my LPs, alongside all the bankers, sovereign funds. So here, when I come, my obsession, I embrace the land. I want to desert. I say, I love you, Saudi kingdom, and I come to see what I can do for you.
And is that a wider
This is a very good
perception
approach.
in China, or is that your personal approach, or is that how China's going to the world?
For tomorrow or for today, you are asking questions?
For today.
For today. Don't take your perception as reality.
Okay. Nelson, I'm going to turn to you about perceptions and realities. So your perspective on, this moment where people are waiting for China to reopen again post-COVID, but also this pent-up growth that we see. And for quite some time, the world's been relying on China's economic growth to help stimulate the global economy. Can we still rely on that? And is our perception of China accurate?
Look, I'm the only American on this group here. I look at things from a different perspective. Number one, I see there's a reason that we are successful because we are a nation of immigrants in America. Okay, every year we take in more legal immigrants into America than any nation in the world. And every night we take in more immigrants sneaking over the borders of the Rio Grande to come into America. Now, there's a reason for that. What's the reason? Are people trying to sneak into other countries overnight? I don't see that happening. Because they want freedom, they want democracy. It's a very sloppy way to do things. It's not efficient. But that's why we get the best technologists, for example. They all want to come to America because they can do their thing very comfortably. And China is trying to unseat us as number one in the world economically. Forget about the geopolitical issues for a moment. I doubt that will happen. I doubt that will happen, and they have a very strong focus. And today in America, I don't know what our focus is. Our focus is woke. Our focus is all kinds of crazy stuff. But yet we have those people coming in every night, every day. Many of them are very talented. They couldn't do their thing wherever they're coming from, but they're coming to America to do their thing. And that's what made America great for the last 150 years. And probably no guarantees with all the sloppiness and craziness that goes on in our country, we are going to continue to attract that kind of talent because that kind of talent wants to be free.
But Nelson, can I ask you to comment on or elaborate more on this idea that the US, in your view, will stay the preeminent economic power, but China's very much there. Are we looking at a bipolar world where the two can work together, or is it an inevitable split?
Look, when there's number one, there's got to be a number two, okay, by definition. Sometimes the number two is happy to be number two, sometimes they're not happy to be number two. There are two kinds of relationships geopolitically. We look at them, well, this country is an ally, this country is not an ally. But that's too simplistic, because if you look at America and Japan and South Korea, we're clearly military allies, we're clearly geopolitical allies, but we are truly economic adversaries, okay? And I think that's good, because it's respectful. We respect the way they do things, and we're happy to compete. Sometimes the competition isn't always fair and balanced, tariffs and so forth, but that's okay. We can live with that to a certain degree. But I think we have to keep that in mind as we look at all this greatness that we see around us, and we see China doing great things. And I have a great deal of respect for China, because the companies that we invest in do big business in China. Procter & Gamble, Unilever, Mondelez, GE, big businesses in China, and love the business and love the growth. But do not forget where people are trying to come every day and every night because they really want to be able to express themselves and do their thing. And I think that will always keep America number one. And I don't blame China for trying to become number one. That's what we all aspire to do. But relax, guys, and enjoy it.
Well, we'll wait and see. We'll see how many FII meetings we have before that changes or it doesn't. Dr. Ong, I want to come to you because, one, to comment on this idea of, this competition between China and the US, but importantly, also looking at China, do we see that competitive edge there that can overtake the US and become the number one economy with that creativity and also attracting the best that there is out there?
I think this is a very big topic. I think I firmly believe that communication and cooperation is, other than competition, is also very important for humankind and also for a better future for everyone. So even though I understand that given the situation we are now facing, if you look at the topic of FII conference on the first day, China shares a lot of similarities with the rest of the world, especially in this region. If you look at the topic we covered, like common prosperity, anti-poverty, and also green development, and digitalization and the technology, all this kind of topic, if you look at the message from this latest Congress, National Congress of the party in China, they're almost the same. They emphasize this high quality development and also green development, technology and education. And I think this kind of topic are shared by, not just by China, but also by the people from this region. Different countries have different history and culture. So even the target are the same, people do it differently, right? They have their own way. So I think other than competition, I think right now, especially for this world, we should have more communications and we should have more cooperations to tackle with the kind of common challenges we are facing. So, just on that, instead of competition, I think communication and the cooperation is something more important at this juncture for the world.
And I think coming out again from COVID-19 pandemic and also facing the climate challenge and the technological advances that Nicholas was referring to. You know, we have sustainability and technological advances as opportunities. You would think there would be cooperation, but there is a lot of competition. So I guess from the Chinese perspective, where are the opportunities for cooperation?
I think the biggest thing for China right now is, the competitive edge for China is the very big home market. You know, the 1.4 billion people are trying to, working very hard for better life. I think that's the competitive edge for China. For example, I can give you an example regarding the green development. You know, this electric vehicle industry in China, it's very vibrant. And you know, China right now produces more than half of the electric vehicles for the whole world. I think grab more than 50% of the shares. And I can give you the number, like if you look at a lot of electric vehicles is only on the road in China. And then you need to build the infrastructures to facilitate this. You need these charge stations. And I checked the number, I find that, you know, China right now owns almost more than 60% of the total number of charge stations in the world. Mm-hmm. So right now, China has more than 1.3 million charge stations. And for the US, they only have like less than like 20, I think it's something around 110,000 or something, that number. Mm-hmm. I think, so given this very big number of population and also the consumer demand, you can find these manufacturing industries in China, they have the competitive edge to scale and enjoy the relative low cost associated with this big scale. So I think that's kind of competitive edge for China. And also, if you look at the Chinese, because the market is huge, and they have a very complex industry system. That is why China survived this pandemic more competitively than other nations. Mm-hmm. As you mentioned at the beginning, that if you look at the trade, China actually export and import, the number is like 50% higher than before the pandemic. So I think that's one of the edge China has when compared with, other markets or other regions in terms of competition.
Mm-hmm. Patrick, I want to bring you into the conversation because, there's the scale issue, which I think is definitely a part of the competitive edge of China, but there's also people who are looking to invest in next generation companies and will look to China and see where the opportunities. Where are those opportunities?
Before we specifically talk about next generation companies coming out of China, and I think in our conversation, language is a vague thing. Sometimes when we talk about China, we confuse ourselves by saying what China you're actually talking about. Is China the market, China the population, China the consumer, China the government, or Chinese GDP or Chinese companies? And here I want to talk a little bit about Chinese companies so we can sort of just stay focused on this. I have invested in my career in many American companies. And actually, a good number of European companies, a lot of Chinese companies. There's actually great similarity among the entrepreneurs. And this trip, I brought with me 50 CEOs from China. And many of them, they're 30 years old. They're very articulate. They have a vision. And when they talk, they say, I'm number one in this, I'm number one in that, not in China, but also in the world. And let's wear the hat of a global investor, not just a hat of a Chinese investor. Think about China in a sort of a narrow-sensed way. What interests us as global investors? What are the growth themes in the world today? I would say number one is renewable energy. Even Saudi Arabia, the kingdom itself, is supportive of renewable energy. Who are the suppliers to renewable? 97% of solar supplies are coming from China. Then people say, all right, that's commoditized manufacturing business. During the last 3 years, I was kind of stuck in China quite a long time. but I took advantage of it. I just went to see a lot of companies. I've seen a lot of factories in my life. And this year, I walked into a number of factories. To my surprise, I couldn't find human workers. It's highly, highly automated. And it's all robotics. This year, you look around the world, America had a really strong growth with robotics market, about 27% of growth. But China was the largest adopter of robotics in the world. It's highly automated, and people say, okay, just the Chinese, this is just replace low-cost labor. No, when you really analyze it along the whole kind of margins, and you start to see them moving up, doing a lot more sophisticated work. And as a result, they actually can bring their supply chain to the other countries. Most of people are talking about, this global supply chain will be kind of relocated, broken apart. I actually see something different. It's the same owner of this supply chain. They just bring their know-how, their expertise close home to America, in Tennessee, in Mexico. And if they got, they got 5-year contract from a lot of German companies, so they would move their business to Romania, to Germany. And so it is the Chinese supply chain 2.0 in place right now. So if I may just, and what's driving all this stuff is, and also I think my friend here just talked about electric vehicles. This year, 10 million electric vehicles will be sold in a year in the world. Chinese companies will sell 5.5 million cars. But look, they're not selling those cars under other people's brand. They're doing it under their own brands. If you show up in Shanghai, I'm sure a lot of people haven't been there for quite a long time. There are some really, really beautiful products available. And they're just, people driving them on the street. They're very much comparable to Tesla. And the way you analyze, you value electric vehicles is totally different. And I'm not going to details of this, but I just want to say this. Let's put China aside, just look at important growth themes in the world and see where everybody kind of fitted in. Number one battery company in the world is called CATL. And there's a company called JNT Express. It's a logistics company. They actually started in Southeast Asia, led by a Chinese founder. They're very big here in Saudi Arabia. And so we see Shein, most of people thought this is a European company.
Sorry to cut you off, but I think you will have many more examples, but I think you've made the point. I know Mingpo wanted to come in on the supply chains, and then I'll come to you, Nelson. So, because supply chains was one issue that I want to talk about. I'll give you the floor.
Yeah, supply chain is clearly, because China is so stronger. And now, talk about a bit of common sense. Of course, we are not be negative on the stage, Fox here. But a bit of common sense, 15 years ago when you go to China, at the time I used to say China is important, but not only China, I'm Chinese. Because you go there, the buffalo is so big. Anyone else grab meat and you believe you are intelligent. Today, in my village, we have a common sense say, even a skinny buffalo still have 300 kilos of bone. Before you used to eat the meat, today, with the bone, you can cook a very good soup. So you want or you don't want, 1.5 billion consumers are there, the country is there. You cannot ignore China. How much you allocate your investment in China, you can calculate. I met a couple of prominent investors in the region. They are very lucid. They know they need China. They need to increase the investment in China. I think this is common sense.
Thank you. Nelson.
Yeah. Talking about supply chain, I say to many of our elected officials in America, if we were fighting World War II today, America, we would lose. And they look at me like I have 3 heads. They said, why? Why would we lose? I said, every plane, every ship, every gun, every bit of radar was made in America. Okay, these last few years have shown us that we cannot rely on supply chains that cross many oceans. We cannot rely on it, either because they're not our friends or because we have COVID, or because we have strikes, or because we have anything. It doesn't make a difference. And you will see in America a lot of this outsourcing become insourcing, or go to Canada, or go to Mexico, or go to places where we don't need ships, we just need trucks to get them there. It's going to be a slow process, but I think you're going to see supply chain changing. And this whole concept of globalization, it's a wonderful word, but that's all it is a word. It's yet impractical.
If I may, Nelson, I just want to add one quick point. I mean, you might disagree with me on this, but...
I doubt it.
And I actually thought last 30 years, we didn't see inflation until like a year ago. I think it was a Chinese manufacturing capacity taking a lot of liquidity into the system, in addition to housing, in addition to capital markets. Because of COVID, there's less exchange. All of a sudden, we got a big problem, more expensive for everything. And as everybody bringing their, kind of supply chain back home, there will be further inflationary pressure on a lot of people's.
No, you're right, but there are other things that occurred as well before we bring it back home. You know, to have things made in China was terrific because all the systems were set up. The roads, the harbors, everything. So it made it easy. So an American company could be lazy. Say, let's make this thing in China and it'll come like it's supposed to come on time. And you are to be congratulated on this. But after COVID and after some of this stuff, some of the American companies we're involved with have started going to Vietnam and other places where you've got to be a little bit more hyperactive because they don't have the system set up to accomplish exports the way China does. But every day they're getting better, and every day their labor is still way cheaper. And so the cost of goods
So Nelson,
takes more
I
effort.
apologize to interrupt you, but because they're telling me we're completely out of time. But you said something very important. Globalization is just a word. So I'm going to ask each of you to answer with one word, yes or no. Is globalization over? China joined the WTO 20 years ago. Is that financial order that we knew 20 years ago over? Yes or no? Is the global financial order that we knew 20 years ago when China joined the WTO over now? Is globalization just a word? Yes or no?
You know, you have
No, yes or no?
Reinvent yourself.
Okay.
I hope it's not over.
Okay. Are you sticking with it's
I
over?
said it right. No, I don't think it's over.
All right.
But it's changing.
It's changing. Patrick.
No, I think there will be a new version of it.
That's right.
Dr. Wong.
It's changing.
You and I agree.
It's changing, actually.
Yeah, right. Yeah.
It's changing. Thank you all. Thank you to my great panel. I apologize for cutting you off, but we're out of time. Thank you so much. Thank you. All right. As this panel wraps up, we have our next panel who will be coming onto the stage shortly, so please don't leave. The next panel will be Beyond ESG. On this stage will be moderated by Anthony Barkley, Director of ACT and Head of Investment at FII Institute. So please enjoy the next session, and thank you for your attention.
Hello, hello. I'm going to promise some big announcements towards the end of this panel, so please stay seated if you can. Join us for this discussion of the controversies and current context of ESG, investment strategies that take seriously environmental, social, and governance factors. I'm Anthony Barkley, and I'm with FII Institute. We're a global, independent, nonprofit foundation and think tank based here in Riyadh, opening an office in the US, and will soon to be opening other offices globally. Our mandate is impact on humanity. I'm very privileged to be the leader of our investment team, and we have two other key operating pillars that allow us to advance on that mission. One is the group, which we call Exchange, which organizes these amazing events. And stay tuned. We've got a full series of convenings planned for 2023, beginning early in Q1 in the US. So it'll be a very exciting event. I'm looking forward to that announcement. Last year we convened in London and New York. So stay tuned for similar events around the calendar and hopefully around the globe. Our third team is a think tank, and they provide the depth and substance for our thinking on the foundation and our main priority areas, which are sustainability, health, and education. I'm extremely excited today to be joined in this very current, critical, and timely conversation by market leaders and market makers in ESG, but more broadly in finance itself. Let me do short introductions, and then we're going to cut into the conversation here. To my left is Laura Cha, chairman of the Hong Kong Stock Exchange. To her left is engineer Khalid Abdullah Al Hussan, CEO of the Tadawul Group, Saudi Arabia's stock exchange. Next to him is John Quinn. John Quinn is one of our foremost legal entrepreneurs and experts. He's the founder and senior partner at Quinn Emanuel. Next to him is Laurie Heinel. Laurie Heinel, Chief Investment Officer at State Street, manages one of the largest and most interesting investment portfolios globally. Next to her is Doug Johnston, partner at Ernst & Young and a key thought leader and partner and ally of the FII Institute in our own work around ESG. Next to him is Rebecca Mingala. Rebecca Mingala is the founder and CEO of Clarity AI, an analytics and data provider key to successful implementations in the ESG space. How did I do, Rebecca?
Great, thank you.
A little better. And then Darren Rovere, our very own Darren Rovere, based here in Dubai at Sustainability Excellence. Many of you probably know him. He's a lead strategy consultant, works with many organizations in this region on ESG and sustainability issues. Well, let's jump right in. Look, it's been a very bad year in the financial markets for many of us, for investors. My wife, by the way, is a financial advisor, so I deal with this every day on the kitchen table. And I tell you what, as bad as it's been in general, it's been even worse for many ESG investors, many of whom exclude the oil and gas majors and are suffering for that. In addition to the financial unpredictability in the markets, we've had an unprecedented level of political, legal, and policy controversy and backlash. I say unprecedented because the ESG community, and I count myself a proud member, has really had a wonderful steady rise into prominence. And we really haven't had a turning point, an inflection point, or a backlash moment. But if you're in New York or London, you are feeling that now. You're seeing your 3 ESG letters talked about on the talk shows, discussed in a political way that was never true in the past. And I want some help cutting through all this noise. What's real here? What should we really be concerned about? And most importantly, what's the future of ESG? John, let me turn to you. You're actually active right now in litigation around some of these issues. Can you paint a picture? How do you see the current controversy, and what's unprecedented and interesting to you about this year in ESG?
Well, my sense is that ESG is on the defensive right now. After a historic movement of money and investments into ESG, you have to say the pendulum has swung now. And I think there's a number of reasons for that. One is there's still a fundamental view, which is widely held by some people, that ESG has no place in the business world. The focus should be on returns for shareholders and what is seen as promoting a particular ideology over returns on investment has no business. Now, that view has been discredited a lot in the recent past, but that fundamentally, that's part of the landscape here. The second thing I would say, what has come back, one of the problems that ESG has faced, is it is simply too vague. Most of the discussion about ESG focuses on the E, on the environment, and we'll talk about that for a minute. But how about the S? What is the S that's being promoted? And you hear different things. You hear social justice. You hear about contributions to community. You hear about corporate ethics. Well, whose concept of social justice? I mean, how are we going to measure that? What should we be looking for? Is there a consensus? And of course there isn't. And how about the G? What is the G? To the extent you hear anything about the G, it's kind of like, well, there shouldn't be bribery. There shouldn't be corruption. Well, do we need a concept of, those are illegal. Do we also need a concept of ESG to guide investments in order to say corporations should avoid illegal activities? Another problem, I would say, is the lack of metrics and comparability, including on the part of E, the environment. There are at least 300 purported rating agencies that purport to measure metrics and give scores or grades for investments. And there is very little agreement as to what is being measured and how those things are being weighted. If you look at ratings for credit agencies, they correlate pretty much 98, 99% of the time. There have been efforts to correlate ratings for ESG ratings, investments, and they don't correlate. Maybe half the time do they correlate. So this is a real problem. And then there's a fundamental disconnect. Some people talk about ESG, they're talking about what is the risk to this company or to this portfolio? What risk do they face in the future because of the environment? That sort of risk. What is the risk to the business? Other people talk about ESG in terms of impact investing, wanting to do good. Two entirely different concepts, and in some ways may not overlap, and they may actually be antithetical. So we have, I would say, an utter absence of comparability because there is not a shared understanding of the metrics. So we have there's an element of subjectivity. And then we've seen ESG become politicized. It's seen by some as the pursuit of a leftist agenda in the business world, and that it has no place, that this is something government should do. Funds shouldn't be doing this. Private equity firms shouldn't be doing this. We look to government to make these decisions. So it's become politicized. We have this phenomenon of governors in the United States saying our pensions funds are not going to invest in any businesses, entities, or funds which say they promote ESG. You have something like 20 attorney generals in states in the United States saying similar things, that the funds, teachers' funds and the like, are not going to invest in anything that purports to be ESG. And then the final factor I think, is the Ukraine war. I mean, we've come to understand that unless we want to end up like Poland or Germany and burning coal or wood, it's going to be necessary to do what? Invest in fossil fuels. That needs to be done. That's being done in this country. It needs to be done. We can't just ignore it. So we're going to need fossil fuels for a long time, and there's a growing recognition of that, which I think has come out particularly because of the Ukraine war. So I think those are the factors that have caused this kind of shift in the sentiment about ESG.
John, thank you. Your realism is appreciated. I don't want to face you in open court. But Doug, let me turn to you for immediate reaction. My other thought is, I've heard a lot of this before and for many years. So what about this context feels to you new and unprecedented, and how do you react to some of that skepticism that we hear from John?
I mean, I value skepticism, and more of us should be skeptics. I think the really important sort of reaction I have is that the problem isn't ESG per se. The problem is how we've all done ESG and what we understand in it. So, I mean, I see ESG as being a title for fundamentally a process that is about an organization understanding how societal issues will impact upon an organization's ability to deliver its strategy, to create value for its shareholders, and to create value for stakeholders. And I think we get it wrong by actually seeing it as a bit of a tech box exercise. You've got to meet these specific criteria. Whereas actually, ESG and what good ESG looks like needs to be judged very much in the local context. Who are the stakeholders you're serving? What are the markets that you're serving? What products are you bringing to market? What communities are going to be impacted by your operations? And ESG priorities need to be geared to that. Now, am I allowed to plug something? We have a panel at 1:30 where we're exploring exactly this, to look at how can you look at ESG in a local context, and it specifically focuses on emerging markets. So you're all very welcome to come to that. 1:30, Palm Grove 1.
Thank you for the plug, Doug. So FII is the largest, certainly the most significant investor conference in the Global South, right? And Doug, you're in London. John, you're in Los Angeles. One of our deeply held beliefs is that we do have to widen the circle of conversation and become more inclusive about the viewpoints that matter, whether the topic is ESG or any other pressing concern. So Darren, I turn to you. Sustainability excellence might be the leading strategy consultant in this region around these matters. And so you have a particularly keen view on how, if at all, any of this resonates here in the GCC, in the Middle East, or in emerging markets more broadly. What are you thinking now? Is this backlash something that you think is something that will need to be taken seriously in the market? Does it really more reflect the political contexts of the US and Europe?
Well, I guess, first of all, thank you for having me here. I guess we look at it from first of all, the bigger picture. And the bigger picture is that, fundamentally, financial markets are misaligned with sustainable development.
No.
And this has been mentioned many times here. The markets do not price in the Earth's ecological services. The markets don't price in climate change. They don't price in positive or negative social, environmental, and socioeconomic impacts. So there's a misalignment. And that's where ESG comes in. It's trying to be a solution to that. And investors are recognizing, and all other types of financial and other stakeholders, that we're going to need to have alignment. You can't continue to have misalignment because it'll lead to an unsustainable future. And every transaction that happens now is taking us in the wrong direction. So how do we fix the markets? We look at ESG information, and we give that to different stakeholders to take action on, and we try to structurally fix markets at the same time. When it comes to emerging markets, actually we see incredible possibility and potential in this context. Not all emerging markets are equal, but generally speaking, if you look at all the ESG indices that are out there, almost consistently they say that there's a positive correlation, this was mentioned earlier, between companies that adopt sustainability and outperformance in the market. But the delta, the difference in emerging markets is even larger than it is in, let's say, Western markets. And there's many reasons for that, but one of them, just as an example, is if you have two businesses side by side that want to expand globally, and one of them is practicing ESG and one isn't, that one is going to be more successful in international markets that are asking for that. So there's a bigger outperformance. So companies might say, well, this is a Western market kind of thing. No, actually, the opportunity is even bigger in emerging markets. Yeah. I think also, people say, well, they've been doing this for 20 years or 30 years. Well, and from that, there's been lessons learned. So here you can really leapfrog. You can really say, well, let's say in the banking sector, what are the most critical competitiveness aspects that I need to put in place, from a current financial markets point of view and maximizing, impact for the future. And I can just jump there a lot faster. So I can get to those competitive points faster. It might have taken a bank 20 years before. It could take them 6 months to start moving at a similar kind of, progression now. The other possibility, again, not all emerging markets are created equal, but this region in particular, it's very exciting because you have things like the national vision, the Vision 2030. You heard all the senior people here talking about, my job is to achieve the Vision 2030. These visions are sustainable development plans. They have economic, social, governance, socioeconomic, human capital components. So as a business, I should be in a strategically stronger position than my counterpart if, let's say, I'm competing for some kind of project or bid, and I have all of the main requirements, plus I can show how I'm meeting or exceeding all of the different Vision 2030 criteria. So actually, this is a great tool for competitive advantage in the local market and in other markets where they have those national visions. And you could say from a broad point of view, the more that you encourage ESG in the market here, the faster it's a tool for getting to achievement of the Vision 2030 faster. Yeah. It will get you there faster. And the last comment I would just say, let's say in terms of opportunities, is, again, not all emerging markets are created equal, but in this region we have sovereign wealth funds. Yeah. And this is just an incredible possibility. Because if sovereign wealth funds are saying, well, these are financially material issues and they're going to shape our competitiveness, our national objectives and our international competitiveness, then we need to look at them. And as a case in point, there was a few years ago, 6 of the world's largest sovereign wealth funds created the One Planet Sovereign Wealth Fund framework. And this framework is saying climate change is financially material, so we need to think about how we want to respond to that. What do our portfolio companies need to think about? How do we want to invest going forward? How are we going to manage this transition? And come out still in a leading position. And 4 out of those 6 sovereign wealth funds were from the Gulf, from the GCC. And so then imagine if those sovereign wealth funds say, we want our businesses to take these risks and opportunities into consideration, and you move that portfolio, that's moving a huge percentage of the national market right there, just with that one intervention. So the possibilities are actually quite breathtaking in certain emerging markets.
Darren, thank you. And thank you for locating a view distinctly from the emerging markets, not just reflecting what's going on in the developed markets. I think that's a key element there. Laurie, let me turn to you. When I hear misalignment of markets, I think of investing opportunity. How are you feeling in your practice today about ESG as a tool for helping State Street do the best investing that it can? Is it still relevant for you, and has anything changed in your mindset?
Well, the thing that's constant is, as one of the largest global asset managers, our primary responsibility is our fiduciary responsibility to deliver value to investors. And we've been on an ESG journey for many years, starting back really in the 70s and 80s with more investor-driven, socially responsible mandates, but more recently focusing on integrating ESG. There is informational value about a company's footprint in these ESG issues. And to the degree that you can understand what a company is doing and what kinds of risks it might be exposed to and how its management of those risks aligns with its long-term corporate strategy, you can actually capture value creation moments. And so through our indexing book, we're very much voting our shares on behalf of our investors, and we're focused on those things that we think are value accretive. So to the degree that boards are acting in their fiduciary capacity to hold management accountable around understanding ESG issues, whether they be governance related, whether they be human capital related, whether they be environmentally related, to the degree that they are really working with those managements to make sure that they're understanding and addressing those kinds of issues, we think that that's critically important. I think the second point that I would make is that different investors have different ambitions and intentions as it relates to ESG. So where we have the fiduciary and the discretionary responsibility, as I mentioned, the most important thing is the long-term value creation. But there is an array of investors, and it was hinted at earlier. There are some investors that are willing to forego certain investment outcomes to get the impact that they're actually driving towards. And that's perfectly within their remit if they're acting responsibly, but they're also aligning against their own intentions. So you need to have different tools that can let you navigate the different outcome that you're trying to accomplish. And so the ubiquity of data in and of itself is actually a positive thing because it lets investors pick and choose among those things that align with their value systems and their intentionality and be able to demonstrate that not only are they getting an investment performance outcome, but they're getting an ESG performance outcome. And then the last thing that I would say is that it is a very quickly evolving space, and we've heard some discussion about how it's even becoming politically evolving, which is not necessarily always constructive. But the thing that I would say is that there are many forces within the industry that are driving coalition. A lot of the NGOs, for example, are aligning around frameworks and even to some degree methodologies, and we think that's actually helpful because it lets companies navigate what's required to be reported, what investors want, how they can do that consistently. The area that still requires a fair amount of work, in our opinion, though, is the kind of broader regulatory framework. You've got lots of just different jurisdictions that are going at this in different ways. It's creating complexity. Oftentimes, there might be a framework, but not a lot of guidance around methodology. And we're concerned at times that great will be the enemy of good enough, because what we really want to see is compliance by companies that do adopt certain metrics and report on those in a consistent fashion so that investors can make informed choices.
Thank you, Laurie. Rebecca, one thing I'm hearing from Lori, ubiquity of data, complexity, and now we're adding controversy to an already fairly complex set of questions, certainly at scale with the large portfolios. What can we do to really make sense of this data and to make sure that whatever we call it, it's smart and we're on the right track and we're asking and answering the right questions about our investees?
Yeah, I completely agree with Lori that there is information in the sustainability data that the investors care about, and it depends on their objectives, as she said, and they have different objectives, right? And many investors might not care that much about any sustainability metrics, but others might, right? Depending on the type of investments they want to do. So the important thing is for them to have the right data, methodologies, or some kind of like a standardization of how to apply that data, but most importantly, the tools, like Lori said, and having the right information at the right time when they have to make the decision. Now, I agree with all the challenges that John pointed out, but we need to also acknowledge that it's a relatively nascent trend, right? The sustainability trend. The ESG framework started being used early 2000s, right? So it has been maybe 15 years or 20 years since the investors started using ESG frameworks. Now, the most important thing is how do we solve those challenges? And honestly, we hear a lot about the agreement and the correlation of ratings or not correlation, the methodologies that are being used and are popping up, and the confusion. But the reality is that the most important thing is having tools to apply whatever methodologies, right? There is no agreement today on many other financial metrics that we use every day, like GDP or inflation, and how countries calculate those numbers. And still, we all use those numbers every day, right? So even if it's complex to calculate certain metrics, we need to do it, and we need to incorporate those metrics. The same with the accounting systems, right? Everyone complains that there are different regulations being developed in Europe around sustainability, or in the US now with the SEC discussions, right, about what to do about sustainability. But it doesn't matter if they don't really agree on one methodology, right? As I said, the accounting system is also different. So it's more about having the right tools to apply whatever views the investors have to. And on that regard, as an entrepreneur, we focus on solutions, right? And we believe there is a very positive trend. There is more and more data being disclosed. To be clear, even if the companies don't disclose, the data can be estimated. So we don't really need, so the disclosure levels are increasing, but still there are estimated data that we can have. Methodologies, there is a certain standardization, so it's trending positively as well. And tools are more and more available for investors. So I guess I'm an optimist about this space, for sure.
Thank you, Rebecca. Let's turn to the exchanges. What I'm hearing is that there's smart ESG. If you work with Doug, Rebecca, and Darren, you're doing smart ESG. But I think, as this year has shown us, there's also what? Dumb ESG, let's call it that, where people are slapping the label on financial products that don't merit the label. And then you're going to be facing John in court. In this context, Lauren, I'll start with you. What can the exchanges do to help us guarantee that we've got credible, smart ESG products being traded and help us push back on whatever these concerns are around the misleading use of the label?
I think it's a terribly well-put question. There's a lot of controversy nowadays on greenwashing and labels about sustainable product, green financial product. What are they? So I think the first and foremost from the exchange operator's point of view is that we really need to have standardized requirements and harmonized standards and so on, so that we are all talking about the same thing. Now, I know that it is very difficult in this very diverse, complex, different part of the world, as well as different industries. There may be different standards. But what the exchange can require is clear and accountable disclosure. So for HKEX at the Hong Kong Stock Exchange, for example, we've been advocating the disclosure since 2017. And we have upgraded the requirement each state and make it clearer, and also helping the companies to comply. We have a ESG Academy online telling people, what to do. And I agree that the E and the S and the G has to be separated. And not all companies can satisfy a very vague ESG requirement. Are we talking about the E or the S and the G? Some of the smaller companies listed on our exchange feels that they embrace the S and the G. The G in terms of governance, in terms of the company's own responsibility to its shareholder. Better requirement, better governance. Social, this particularly came out during the pandemic, how you take care of your employees, your stakeholders, things like that. Companies can digest, can understand, and can be measured, and investors can understand. So those are the more practical and at the micro level where people can put ESG into action. And then, of course, we have the larger issue on the environment. Now, there is a lot of talk about climate, and where the exchange can play a role is that in the transition from the fossil fuel to the renewable, and I think it will take time, and we cannot have, just stop fossil fuel right away, and the transition will rely on technology, whether it's, electric vehicle, whether it's solar, whether it is wind turbine. All these are available now, but they are still too expensive to be very popularly applied. So the transition to that, whether China has made a commitment for 2060 to be net zero, and that's a long journey, that needs funding. Technology needs funding, and that's where the exchange can come in, the capital market can come in to play a role to help companies satisfy the E part of the ESG.
Khaled, does this resonate with you from your view from Saudi Arabia and the Saudi Arabia Exchange? What are you focused on in moving forward?
Well, as Laura said, and I agree with everything has been said on the discussion, as exchanges, we always think about how do we facilitate the practices between issuers, investors, financial intermediaries, etc. And honestly, when it comes to ESG, we find it a little bit very difficult. One angle, you look at it from a standard point of view. Corporates needs a very clear framework on how do they report and what do they report. And in the other side, investors, we see two groups where groups follow the standard issued by ESG rating agencies 100%. Where other groups that have their own definition of what they focus on ESG, on their investment responsibilities. And I'd like to also go back to John's points. The way I look at ESG, and I would agree with you, Laura, on the separation between the E, S, and G, but I'd like to illustrate it as a three-step ladder, where G as the first step, to me, it's more clearer than any of the other two letters because mostly it's governed by regulations within capital market, and I'm specifically speaking about capital markets, or by guidelines of practices on the governance, even if it's outside the required governance. And if you go to the second step where social, it's becoming the coverage of that letter is wider, where you go whether that within your own corporates or wider to your customers as well as your community. And here, the standard get a little bit vague and definitions varies among people. And it goes to, I would use the word worst when it goes to environments as the third letter, because it goes to an impact that your corporate will have on not only in your country, but even on the contribution on that impact to the planet. And as we evolve, I think not only a responsibility of both the investor and corporates on their impact on environment, for example, but we can see global cooperations between countries and even within their own jurisdictions and countries. And that will evolve, in my opinion, to even a more restricted regulatory framework around the environment. And I think you could argue with this is the right direction to go to framework environment and social just like governance, or no, you want it to be for a long-term perspective as a mindset of accountability and responsibility to corporates. So it is an involvement period for all of us, whether we are capital market investors or issuer, but I think it is a good subject to continue to think about, and I think there are a great deal of cooperations today.
John, how does this talk of shared responsibility resonate for you?
Well, I mean, obviously it's important, and there is a lot of laudable things associated with the ESG movement. No question about that. Who could quarrel with wanting to pursue social justice or being concerned about the environment and wanting to invest in a way that promotes those laudable goals? But surely there has to be a way to measure these things, right? And if you're an investor and you're trying to make decisions, shouldn't there be agreed metrics? Shouldn't there be a transparency and a comparability? So if I'm an investor, you know, I know what I'm looking at when I'm comparing investments. So that's just what I'd suggest going forward to kind of bolster this movement, is to focus on trying to get some agreement, some transparency on what exactly we're trying to measure.
I think we're making some progress with John. I want to hear what the panelists have to say about the future of the acronym ESG. Are we going to be using these three letters to describe our thinking in this area 2 or 3 years down the line? Rebecca, you're shaking your head. What are you thinking?
No, I mean, I never liked the ESG framework, I have to say. It's a framework that was defined to assess risk linked to sustainability. And even in that case specifically, our view is that, as researchers as well in the topic, is that the risk factors need to be included separately, like specific metrics on specific topics. To be clear, I used to work in private equity, and we used social like turnover of the employees was a metric that we were using like decades ago, right? But you use in a specific context of your model, right? So why would you need to take those metrics out and create a rating for that? So we never really liked the framework, to be honest. So hopefully we will move away from that and include risk at the metric level specifically. But of course, I agreed with John that we need better methodologies, standardized, certain level of standardization, but also freedom for investors to do what they want to do, right?
Thank you. Darren, what's the future of this acronym?
I don't know. I mean, I've seen so many iterations of it. I mean, you know, going back to what I said at the beginning, we're trying to make financial markets align with sustainability. You know, we absolutely need reliable, credible, comparable data that investors can use, and investors and different stakeholders will all have different opinions on it. I think we're moving in the right direction because the IFRS, you know, which oversees the International Accounting Standards Board, has created the International Sustainability Standards Board. So now you're going to have, you know, accounting and sustainability side by side, and ultimately it would be that these two come together and everyone just is reporting on this set of metrics that include today's nascent ESG metrics, but basically work to align financial markets with sustainable development.
Thank you all. We are out of time. I want to thank these panelists. It was a fantastic discussion. There's more to come. John, we're going to continue to work on you. I promised an announcement. I've actually got 2 big announcements. The first one is we're getting really close to lunch. We will break for lunch right after my second big announcement, which I want you all to stay here, turn over here, and look at this amazing technology, Konaku, that Ashagabi and his team have brought in. They brought them all the way from San Francisco. It's an advanced robotics system for detecting smells and solving a variety of health and safety issues. We're so excited to partner with them. They're going to be providing a demonstration. So let's give them a couple minutes of our time, and then I promise lunch will come, and we would ask everybody to think about coming back in here about 1:20 so we can kick off promptly at 1:30.
Building a better crypto economy. Investors were warned that it could be a wild ride. The crypto sector spiked at around $3 trillion in total assets before plunging to less than $1 trillion in the second quarter of 2022. The creation of Bitcoin in 2009 introduced the world to cryptocurrency. This decentralized kind of exchange still appeals to investors for its potential for high return, but its volatility has proven that it's risky. Plus, there's no evidence that crypto can survive inflation, and it's vulnerable to cyber attacks and fraud. In a climate-conscious world, cryptocurrency demands a lot of energy. One single transaction could use the same amount of energy that it takes to power an American home for 2 months. Yet, many leading innovators are convinced that crypto is the way of the future. Crypto and blockchain technologies are weaving into the fabric of the global economy. National authorities are launching new regulatory frameworks to rein in the wild frontier of decentralized finance. But can governments ever effectively regulate cryptocurrency and blockchain? Will it still be cryptocurrency if they do? In what ways are cryptocurrencies reshaping the investment landscape? What measures can be taken to strengthen cryptocurrency against fraud? How can we work together to build a better, more stable and sustainable crypto economy? Building a better crypto economy.
Welcome to Cryptopia. This is our summit within a summit. We're going to be looking at digital technology, and particularly blockchain, can lead us to better government, better connections between each other, and a better independent, decentralized currency. My name is Edie Lush. I'm the executive producer, co-host of the Global Goals Cast. It's my pleasure to be with you here. We're going to talk more about crypto and blockchain shortly, and we'll also delve within this mini summit into the world of gaming, NFTs, and regulation. First of all, let's take a look at where crypto and blockchain are. We know, of course, that the most famous is Bitcoin, created in 2009. It's got 1 or 2 or possibly a few million rivals now. There's a market cap of $2 trillion. The rise of cryptocurrency has, as you've just seen on that video, created many opportunities and also created many questions. So we have all the answers for you right here. We've got an incredibly impressive panel assembled for you to give us the answers. Our speakers are Nicholas Carey, co-founder and vice president of blockchain.com. We've also got Andrew Durgee, head of crypto and tokenization at Republic Crypto. Tim Grant, head of EMEA at Galaxy Digital, and Hani Rashwan, co-founder and CEO of 21 Shares. Let's give them a warm FII welcome. Hello. So one of our tasks today is to demystify crypto. And I'd like to try, each of you is involved in crypto and blockchain in a different way. Could you each briefly for me describe what you do and tell me what you see as the purpose and value of crypto? Nick.
Thank you, Edie. It's wonderful to be back in the kingdom for FII this year. I've been working in crypto now for 10 years, so we've seen some booms and busts, and at blockchain.com, we're concentrating on building a resilient business that can survive for the duration of time. We're going to build a neobank for the future of finance, and it's our mission to build a more equitable financial future by putting tools in the hands of people all over the world that makes it possible for them to send, receive, secure, trade, and exchange digital forms of wealth.
All right. Carry on. Andrew.
Hey everybody, first time here and super happy to be here.
Welcome.
The Republic is the first real vertically integrated digital merchant bank, combining everything from funds and investments to tokenization to a token sale platform to infrastructure and treasury management. I've been in the space over a decade, similar to you. As we look at what that space really means in the short and long term, I always try to describe it in the simplest terms, which is blockchain is the first ability to transfer a digital asset from one entity to another without creating a copy. And that creates a series of opportunities, whether that's through finance or governance or gaming, and really flips the narrative of what ownership really means and produces the ability to democratize it in a way that we haven't seen before.
Thank you. Tim.
Hi, everyone. Also, my first time here. Really a pleasure to be here at FII. So firstly, Galaxy, we've actually dropped the digital because, of course, it's digital. So we're just Galaxy now. We're a publicly listed, global, diversified, regulated financial services company. So we do sales and trading of tokenized assets. We have an asset management unit, an investment banking unit for capital raising, a ventures unit where we invest off our balance sheet. And also we're an operator of mining. And so we do that globally, and we work with the largest institutions globally and really try and increase the velocity of that institutional adoption cycle. So the why is a great question. I'm gonna just bring it right back to, especially in the context of FII, which has been quite inspiring. What really matters, we can talk about all the technical elements of what you can do, but really this is about a better future for corporations, governments, and individuals. This is about democratized access, faster, better, cheaper, removal of intermediaries, removal of frictions. And I think it's really for the next 10, 20, 30 years, one of the biggest drivers, I think, of economic growth and prosperity that we're seeing, among others. So it's a big moment for us.
Great. Haney, welcome.
Hello. Not my first time here, but the last time I was in Riyadh was in 2002.
Bit different.
It's changed quite a bit. I'm with 21 Shares. We make it easy to invest in crypto using your existing bank or brokerage. We're the world's largest issuer of crypto exchange-traded products, ETFs, ETPs, and we have them listed on stock exchanges all the way from Australia in the east, across all of Europe, and we just listed the Middle East first in Dubai 3 weeks ago. As to the why, I think a lot of people like talking about once-in-a-generation opportunities. I think if you look at history, reserve currencies in the financial system does not often change once in a generation. And so crypto to me is a world-changing technology, and it's more of a, let's say, once in a century, once in a couple of centuries kind of opportunity. And it's early, and I couldn't be more excited to be here.
We might come back to the idea of just how early are we in this technology. But I want to talk about the volatility, because you mentioned, I think, crypto winter. Somebody talked about crypto winter that we've been through. There are times when cryptocurrency looks incredibly volatile, and maybe that's all it is: high volatility, high risk, the tulips of our current age. So Andrew, how do you respond to that?
Yeah, I think that narrative has been consistent for a while, but has really been turned upside down this year. In fact, Bitcoin's less volatile than both the NASDAQ and the S&P 500. Crypto volatility has fallen over, or Bitcoin volatility in particular has fallen over 40% since its high marks in January. And we've seen NASDAQ 100 volatility increase over 90% since earlier this year. So the correlation that we've seen in the past to macroeconomic data related to that Bitcoin volatility has really shifted in the opposite direction. Then you tack onto it things like inflation and hyperinflation that you see in Turkey and Argentina, Sudan, and areas even in this region, and you start to find yourself looking at Bitcoin as actually a much more stable asset than more traditional securities.
Interesting. I'm going to ask you guys, feel free to jump in if you've got something to say. But let's talk a little bit about where we are now. A panel a little bit later, we'll talk more fully about regulation, about rewriting the rules or writing the rules around crypto. But let's talk a little bit about how we can regulate and stabilize cryptocurrencies. And Nick, I'd love if you could take us off. We've had some pretty interesting developments in the UK where a few of us live just in the past few days. And actually, these are quite positive for crypto, right?
Yeah, so the UK has obviously been having some tumultuous political changes this summer, as well as seeing some fairly strong volatility in the pound. But just recently we have seen that Rishi Sunak was elected and now put in power as the new prime minister. He's 42 years old, he worked in finance his whole career, and he has a very pro-tech and knowledgeable understanding of cryptocurrency and sees some of the benefits of building a technology hub in London to invite innovation. And I think this is a really important signal for Europe. I'm really excited about Rishi's appointment as someone who has an understanding that there is this opportunity to invite all this talent, to invite all this capital, and to build the next generation of financial services that are digitally native. The scale that that will potentially provide is innumerable. There are billions of people that don't have access to basic financial services yet, but we now have the tools, and everyone on the stage is currently working to deploy those so that we can build a more equitable, just, and fair financial system.
Interesting. Yeah, Andrew.
Yeah, I think Nick makes a really important point. And in fact, just this week, we've seen Rishi get out of the gates really, really strong. If you go back to April, you know, there was always a big question mark about the UK. Is it really going to support this or not? In April, Rishi, who was then Chancellor, and John Glenn, his secretary, made a very big statement that was heard around the world of you want the UK to be a crypto hub. And then things went a little bit quiet, and of course, yes, it's been a little bit tumultuous. Let's not talk about that. Let's look forward, not backwards. And to your point about volatility, I mean, at one point last week, Bitcoin had lower volatility than UK rates and currency, so that's kind of
pretty
mind-blowing.
interesting.
So that kind of really changes the game a little bit when we talk about volatility, so I love that it's been upended. But now Rishi's in power. He's got John Glenn back with him in the cabinet. He's got a wonderful gentleman who I met last week called Andrew Griffith, MP, who's now the FST. Now, why is all this important? So there's a financial services and markets bill that just went through the UK Parliament this week, and a last-minute addition that was put in by Andrew Griffith last Friday basically posits, and this has been passed, so in theory this is on its way to a 2022 bill, that crypto will become within the regulated perimeter. What does that mean? That means that any regulated entity in the UK, if this passes, will be able to trade unencumbered crypto assets overnight. Now, it also means if you weren't regulated, you cannot, so there are other consequences. But this is pretty unusual on the global stage to have just basically, without question, recognized this as another risk asset that should be allowed in portfolios, should be traded alongside everything else, should be regulated, should have all the appropriate modern risk management elements around it. And I think we might find, this seems to have gotten less press than I think it should. We might find in time that this is a turning point globally, and other jurisdictions might realize it's time just to think of this like another asset class.
So I don't want to focus too much on the UK, but Heine, you decided to locate your company in Switzerland, and I've listened to you describe how the Swiss authorities, when you met them, kind of got it straight away. And I'd love you to take us through a little bit about where you think Switzerland is in terms of the mass of regulators and regulations.
Well, I think one of the most exciting things about crypto is how global it is, and how global it is from the very beginning. It's one of those technologies that absolutely will not be built in Silicon Valley. Despite my American accent and living in Silicon Valley in San Francisco for 10 years, we based the company out of Switzerland, and you see a lot of innovations around the world in markets that maybe would not have gotten that.
Right.
I think it's very relevant for the region, because if we were able to build regulated frameworks really well, there's a lot of growth there. The Swiss got it mostly because at the very beginning, a Bitcoin wallet looked to them a lot like a Swiss numbered account. And as it morphed and transformed and became more digital gold, well, they're also some of the biggest gold traders in the world historically, and it all sort of clicked for them. As you look at additional attributes of crypto assets, the decentralization perfectly describes how Swiss, as from a governmental level, runs their country. And you end up seeing a lot of, on the technological, ideological, economic, and political fronts, crypto is quite Swiss in identity. And before basing ourselves in Switzerland, even though we have global operations now, we did look at 27 total jurisdictions.
Right.
So we really did our homework, and we found a good home in Switzerland.
Interesting. So the conversation isn't all about Bitcoin, but it does tend to be dominated by Bitcoin. And sometimes it obscures what the larger opportunity of blockchain is and what it could be used for many purposes. You mentioned, Nick, a moment ago, the ability to bring in so many different populations. I'd love to hear from a few of you about what you think the larger opportunity, and give me a real solid example, one that maybe isn't in the public awareness at the moment. Nick, and then Andrew.
Yeah, sure. So I think for the last decade, we've sort of proved out the use case that you can use cryptocurrencies and digital assets to do basic things like make payments over the internet. There's still a lot of work to do, to get the mass scale that's necessary for worldwide economic activity, but there's a lot of progress that's been made. I think over the next decade, there will be a confluence of things that occur that are going to expose some new use cases beyond just payments and new digital assets. So you'll see the tokenization of a variety of precious goods, whether that's intellectual ideas, music, art, maybe tickets to concerts, and much more. And so it's very easy now to essentially issue a digital asset that's counterfeit resistant on all kinds of different blockchains. The Bitcoin blockchain is the most well-known one, but there are many others now that are building very developer-friendly APIs to essentially expose all these new capabilities. And so young people are really getting this. Over the last 12 to 18 months, the cultural zeitgeist around the world has woken up about how to form new relationships with their communities and fans. So if you're an artist, or you're an NFL team, or you run a soccer franchise, you want to find new ways to engage your audiences. And building digital assets into your fan experience is something that's really exciting. At blockchain.com, we partnered with the Dallas Cowboys, which is the most popular and most valuable NFL franchise in North America, to start to explore how new fan interactions can be developed over the next few seasons. And so I'm really excited about some of the things that will come forward.
Give an example about how you think that might work.
All right, so Dax Prescott is the quarterback for the Dallas Cowboys, and he's a partner of ours at blockchain.com. Imagine maybe next year they're on a run to the Super Bowl. He scores the game-winning touchdown. We mint that moment in the form of a digital little movie that then gets gifted to a fan in the audience. That fan will own that asset in their wallet for the rest of their lives. And there's a world where they would be paid royalties for owning that moment. Now, that could be exposed across all kinds of different exciting events, from horse racing to all kinds of things. But that's a small moment that I think is extremely exciting about the types of opportunities that are out there to reimagine how we interact with our fans, with our communities, with anybody who is basically minting moments in life.
Interesting. Andrew, what about you?
Yeah, I mean, the opportunities are nearly endless. Blockchain's vertically agnostic, right? It can touch anything, whether it's a sports team or healthcare or finance. It spans multiple industries. Even for us, on the Republic side, we're doing practical implementations. We do tokenized film financing. We do tokenized music financing. We do tokenized litigation financing. You can truly tokenize nearly anything. The bigger issue is not how it's deployed. Actually, the bigger issue is when it's deployed, like how is it managed, how is it handled, how do people adopt it, and this is all infrastructure. Mm-hmm. And when we talk about opportunity right now, infrastructure is the opportunity. There's so much infrastructure that still needs to be built.
Like what?
Well, like one of the pieces that people don't love to talk about, but the reality is this tax infrastructure. How do you handle this from a tax perspective is extremely complicated. Mm-hmm. He's at Galaxy. They have a huge trading desk. And if you talk to the CFO, he'll be sure to tell you that the tax component is one of the more complicated things that they work on. Mm-hmm. So we look at tax, we look at custody and storage. Everyone wants to do gaming, wants to do GameFi, wants to do Web3 gaming. But what does that look like from a custody perspective? How is that handled? What are the regulatory frameworks and regulatory infrastructures in place? We may see something in the UK happening here soon, which would be fantastic. But that's just one jurisdiction, right? And this is a global phenomenon. It spans. It's a very rare instance where there's a playing field that everyone can participate on. That's the democratization aspect, regardless of where they are. You add things like open source that anyone can access, anyone can share that tech and that information. You add in things that all programming languages are in English, so everyone's able to operate, basically from the same environment, and then mix in globalization. It really becomes, a universal environment. But infrastructure is the area that we need to be spending most of our time. One of the things that there's this push for hyper commercialization. Like everyone wants everyone in this room to be the adoption layer, but it's just really not the case. If you look at some of the larger follies that have taken place and hacks and bridge hacks, that's all because we've tried to push commercialization ahead far too soon. Right? Right now, every 13-year-old on the planet has existed in a world where Bitcoin has existed. 3 years from now, every 16-year-old on the planet will have existed in a world where Bitcoin has existed. Right? That's the adoption layer. Right? We're building the roads and pipes and railroads for them. They're the ones that are going to be building the adoption piece.
Okay, Haney.
So I think there are two ways of looking at infrastructure, and I actually think this is one of the biggest misunderstandings of the crypto opportunity space. Yes, we as an industry have a lot more to build, and we're still working on it. But it is my very, very strongly held belief that the biggest impact of blockchain and crypto will come not from all the consumer applications that we talk about, which are easier to visualize and easier to understand and easier to sort of study, but rather the invisible infrastructural underbelly of the entire world. And no one really thinks as much about that.
Like what? Give me an example.
I'll give you a great example. The oldest bank in the US happens to be a custody bank. What do they primarily do? They custody assets, and they're one of the biggest fund administration platforms out there. What does that really mean? It means that they have, among State Street and BNY Mellon, I think they each have probably $30 to $40 trillion under service that they administer. And it's a lot of accounting, it's a lot of record keeping, and it's incredibly poorly done. It is not technologically driven at all. So you have a 240-year-old institution that's primarily run off of Excel spreadsheets, that does not have a lot of the automation that we know comes standard with blockchain. And they're working on it, as are others, but those are the kinds of things where it's not very easy to talk about these things. They're not very sexy topics to discuss either, but actually that drives more value.
You don't really know, you need to know how the blockchain works, right? But what's the analogy that will kind of bring it home for all of us as just mere mortals and normal consumers? Well, I call it the Casablanca principle. And what the Casablanca principle is removing the asset from the medium. Casablanca, great movie, 1947, Humphrey Bogart, classic. That was originally developed on celluloid and distributed on celluloid. And then through time, that changed. We saw it go to Super 8, and then to VHS Betamax, and then to Laserdiscs, if you remember those. I used to have those. Then DVD, and then Blu-ray. And at the time, Blu-ray was pitched as a very high-fidelity digital medium, but it really wasn't. We still had to hold it. Then we went to streaming, and now we've seen the lines materially redrawn across the entertainment industry in how we record assets, how we distribute assets, and how we view assets. And it has really changed the economics of that industry materially. And we're not even finished, and I'll come back to that in a second. But like that's not happened yet, and I think this is exactly Hani's point, is spot on. That hasn't happened in hundreds of trillions of dollars of assets, derivatives, equities, debt, private equity all around the world that still operate in this very analog, I'd claim in some cases it's not even Blu-ray. I mean, we're still back in VHS in some areas. There's still fax machines being used out there, which is mind-blowing. So the outcome that we get to drive over the next 10, 20 years is moving the entire financial system from this last step into digital. And here's the missing last piece. Even that last step wasn't quite there in entertainment because, as we were pointing out, music NFTs is a whole new way, and film NFTs is a whole new way of owning the asset and distribution and asset rights. So streaming is not the end. We're now going to get to this later point, and a great project, to be very specific, that we're involved in is called Token Tracks, and there are many others out there where we're tokenizing the music itself. It's being owned by the consumer. The rights are owned by the consumer. The artists get most of the money. It's changing and redrawing the lines again. Watch that happen in traditional finance and see how far we get next as a next step.
That's pretty exciting. We might come back to the idea of what else we can tokenize. I wanted to talk a little bit about trust, and trust has been a theme that has percolated into pretty much every different session. And trust in this whole industry has been a little shaky, right? Stable coins, to take one of the examples, were supposed to be a solution to some of the volatility, but I wonder if they can recover trust after what we've seen in the collapse of Terra. And I believe that, Haney, you might have had a little exposure to that. Is that right?
We had the world's largest Luna ETF, and so I know about that situation intimately. Look, I think there are a couple of ways of looking at this. One is Terra was an algorithmic stablecoin. What that means is that there's nothing that is backing it up. It is pegged to the value that it was pegged to, which was the US dollar, presumably, algorithmically, not by actually having a dollar in reserve in the background, as other regulated, audited stablecoins are. Stablecoins represent somewhere between 10 and 15% of the total market cap on any given day. They're incredibly popular, and the vast majority of them are collateralized, and our ETFs are collateralized. Collateralization is a wonderful thing. I think the better way of looking at some of the trust elements is actually not just the Luna collapse, which again, not collateralized. We were very, very, very adamantly advocating for full collateralization, but rather you have a lot of you have a lot of these different kinds of technologies that miss out on the regulatory elements. If you asked anyone, should I build a regulated stable coin versus an algorithmic one, we would go with regulated. And then when you look at the traditional finance versus decentralized finance, even in some of the biggest hedge fund blowups, Three Arrows Capital, et cetera, they paid every single cent of every DeFi loan that they had outstanding. Why? Because it's a smart contract. Because there's no one that you can call on the phone and say, I'm going to default. Can I buy a few more days? And so I think that some of these collapses have shown us how DeFi infrastructure, decentralized infrastructure, how decentralized lending protocol, insurance protocols actually work perfectly under the most stressful of conditions, whereas the centralized counterparties, I'm old enough to remember, Lehman Brothers being a very prestigious place to have worked, are not as relevant in this instance. And so I think, if anything, some of these collapses have shown how resilient and how strong some of the more technologically driven decentralized finance infrastructure really is. And then on your stablecoins point, keep it regulated, keep it audited.
Right.
There are some very basic table stakes here that sometimes people tend to ignore.
Okay.
Yeah, I think the Luna example is another great example of us pushing commercialization when it's not truly viable yet, right? That algorithmic-based stablecoin solution, which was actually Do's second attempt at it. His first one, Do Kwon is the founder of Terra Luna. His first attempt failed, and he came at his second attempt, and the second attempt failed. And even just a couple days ago, Near Protocol's algorithmic stablecoin also failed. And we're finding ourselves in a scenario where we think this is a commercialized product and it just simply isn't.
Right. Nick, I can see you scribbling away there.
Yeah, I just want to, this is a complicated topic. Algorithmic stablecoins are really at the cutting edge of trying to build a totally new way of managing supply for some type of currency. And it's very experimental. People should treat it as an extraordinary high-risk asset. And so there are alternatives, though. USDC is a fully regulated, fully collateralized stablecoin. It's a really interesting instrument, almost as an extension of American financial foreign policy. It makes it possible for anyone in the world to basically get a US dollar-denominated bank account on a wallet, on their phone, anywhere in the world. And so there's some really good use cases for digital dollars, digital pounds, digital...
Like what?
Payments internationally. Right now, you could make a payment on USDC from a wallet in the United States to a wallet in the Philippines instantly with settlement basically for free. And so I expect the use cases, not actually so much even in the retail side, but just in the business side, to pick up. The faster we can make payments, the more efficient the economy becomes, the faster we can make more investments, and the more liquid everything becomes too. So I'm actually quite a fan of stablecoins, just not necessarily the algorithmic ones yet. I think they hold promise long term, but getting the incentives aligned correctly is proving to be extraordinarily difficult.
I think the bigger conversation around stablecoins is centralized versus decentralized, right? USDC is a highly centralized product. They can freeze that asset nearly anywhere, burn it, claw it back, whatever, where a lot of the algorithmic-based stablecoins are a more decentralized solution. And in the industry, we try to walk this very thin line of, do we want to be centralized? Do we want to be decentralized? What does true decentralization mean? Is it something that's attainable? And over the next decade, that is going to be the bigger hurdle, I think, for us to come over. I'm a huge fan of DeFi. DeFi is generally on a decentralized platform. And I'm also a fan of code as law, the idea of however it is written is the law of which it abides by. And so getting people comfortable with that idea, but also moving these products to a proving ground to where we can trust them is going to take a series of time.
And a bit of a contrarian opinion on this, by the way. A lot of people talk about dollar supremacy potentially ending as a result of Bitcoin or other crypto assets. There's a very good argument to be made for if we're building bridges that represented a 10 to 15% of the total market cap of the crypto market that are mostly built on stable coins related to the US dollar, there's a real argument that if proper regulations exist, that this should add to dollar supremacy. Because by and large, a lot of the new entrants that are purchasing USD-backed stable coins are not in America. And there's additional volumes going into the US dollars through this, and the GBP and the euro, and as we see more regulated stable coins out there, that it could actually strengthen and work hand in hand with fiat currencies in a non-zero-sum game, then I think sometimes we...
This seems like a good moment to bring in a conversation around central banks and where the thinking is, and I understand that there's different thought in different countries, but I'd love you to take me through a few examples of where you see interesting moves by central banks. Nick?
Central bank digital currency may not actually be necessary because of stablecoins. They already have the technology to essentially issue the currency on a digital medium. So digital dollars, digital pounds, and by extension, the ability to manage the currency supply from a central bank exists today. So I'm not sure it's really necessary for central banks to implement their own technological fabric to issue their own currencies, because we can do that already on the existing blockchains. I think there'll be the conversation as they go through learning more about how to do this, but I also think it's pretty complicated for a central bank as an old human-driven institution to basically become a software entity. Right. And I think it's more likely that open source
but aren't
utility
we all
protocols...
becoming software entities?
We all have to get better with software, I agree with that. But in short, the conversations around central bank digital currencies today are mostly about what could the potential benefits be. And I think, as you just described, I think they're pretty extraordinary for countries that understand that if anyone in the world could actually have exposure to their currencies quickly and easily, that would probably benefit that country. And so there's kind of a strategic conversation to have about how do we increase the amount of people that have access to dollars, pounds, euros, or any currency, and the central banks can lead that conversation.
Yeah, Tim.
Yeah, I actually agree with you that we may not need it. I tend to take more of a centrist view in this space, which is, it's very easy to get DeFi versus TradFi. I mean, a few years ago, it was my blockchain's better than your blockchain, which gets very tiresome as a conversation. What we really need is just a better system. And I think there are parts of TradFi which we definitively would need and will be there. They've been around for a couple of hundred years for good reason. And there are powerful parts of DeFi which a lot of people in TradFi simply don't understand yet and don't recognize that it's going to make things materially better. Central bank digital currencies is a great example of where we've kind of got this mix. And you've got to be careful. As soon as you say stable coins, you then need to get into a taxonomy of all the different types that exist. As soon as you say CBDC, you're into the same problem. There's wholesale stable coins, there's retail stable coins, there's different ways of backing them. Where I will agree with Nick actually is this is not a new thing. I was involved in one of the very first. I actually set up the first one with Singapore, Project Ubin, back in 2016, and that's still alive. And one in the Bank of Canada, and then we did one in Hong Kong, and they're all over the place now. They proliferate, and there's lots of different examples of banks looking into it. The state of the art is there. You can totally do it. Where I think CBDC could be helpful as a stepping stone, and I think it will happen, and Switzerland has been quite prominent here, and when I was the CEO of Six Digital Exchange a couple of years ago, we were working on Project Helvetia with the Swiss National Bank and using our infrastructure to create this. So I have the first-hand experience of working with the government to actually make this a reality. And we did prove that it could work. Why is it important? Well, because if you can bring the traditional institutional financial system, which is, by the way, where all the money is, like by
Right.
orders of magnitude, then you're able to settle in a way that could be more, the settlement element could be much more efficient. That just as a single stepping stone, not saying that's the end game, not saying that maybe that as a stepping stone ultimately demonstrates the level of efficiency we can get to, which brings more sort of belief from the institutions and the regulators, and then it goes out of existence. I could see that being a sort of route where we go. But that's not that far away. I think ultimately the question is that going to happen? I think you'll see Switzerland and some others do that pretty soon. And these are big, material economies that matter from an institutional.
Rainey, you live in Switzerland.
Yeah, look, I think one of the biggest advantages that central banks see, one of the biggest drivers for CBDCs seems to be more on the regulatory front. And this fear, perhaps, of nefarious parties coming in and such. And so I think it's really, really important to sort of split the two, where CBDCs will exist by some central banks. The Swiss central bank is a highly sophisticated one. They probably have the ability to do it well. But so should private companies. And oftentimes private companies will lead with better, more innovative consumer-facing products because they're closer to the space. But it's very, very important to know that that doesn't necessarily mean that the private companies are unregulated and the CBDCs are the only ways of doing a stablecoin that's regulated. We have private companies that are highly regulated in this space. USDC, which was brought up, you can go and redeem your dollars for physical dollars in New York, provided you go through some KYC steps. There are a lot of DeFi aspects as well, where there's a decentralized element, but then once you interact with the real world, which works similarly in a lot of other use cases, you then have to go through some of these regulations. And so I think we have to really, really, really remember that it is possible to innovate. It's possible to do it outside of central banks, which are not technological giants, and still abide by all of the laws and regulations that are put in place to make us more comfortable going through our daily lives.
Interesting. So actually I want to ask the audience here, how many of you here have some exposure to crypto? How many have bought some crypto? And how many have yet to take the plunge? Anyone still? All right, so we've got some adopters here. What should the audience do now? Where should people be thinking about moving their money into? What should they be? What kind of questions do you think they should be asking, Nick?
So blockchain.com, we've had over 85 million people sign up for a wallet. And if you're new to crypto, you're going to want to sign up for a wallet or a brokerage or an exchange. And we support all of those at blockchain.com. We have 40 million users. 1/3 of worldwide Bitcoin transactions originate from blockchain.com wallets. When you talk about trust, it is very important that you work with a partner that has been here for a while, that has seen the ebbs and flows of the industry. And right now is an amazing time to get involved in crypto. Not when it's at the record peaks, but when there's time to build, when there's opportunity like there is in this market right now. And so I do think it's important to do your homework. There are a lot of different crypto assets out there today.
What are those questions you have to ask when you're doing the homework?
So I think you need to look at how long the firms have been around. Are they reputable? Do they have sound governance? Do they have a good track record in customer service and customer support? These are fairly basic things. Companies in our industry that have been around a long time really care about their customers. And that's true of everybody on this stage here. We want to make sure we're taking care of them. And so you want to work with firms that are reputable. And it's easy to do that research.
Interesting.
Yeah, it doesn't have to be finance related. Right? If you're interested in this space, doesn't necessarily mean that you have to make some type of financial commitments. You don't have to follow the speculative markets. There's other areas of blockchain that are super interesting. Whether that's the NFT space or the infrastructure space, there's other areas that you can participate in and learn. So I say first thing to do is just try to be the best student you can, consume as much as you can, ask questions, find experts, build relationships. Got to remember that this industry is community driven. It's the most community-driven that there is. That's why things like tokenizing all these assets is possible because there's other people that are interested. It's the reason the Dallas Cowboys are interested in this opportunity, because it allows them to engage on another level with their fans. Actually creates a bi-directional informational flow.
So if you're a fan of a band and you want to buy into their music, is that a thing that's coming super soon? In fact, you can already do it for some.
I mean, we already do it. We just
For who?
partnered with the second largest music catalog on the planet, $4.8 billion worth of music catalogs. And we're going to be selling those catalogs out to the crowd. Our token sale platform is the only platform that can sell to US retail investors, and we can sell internationally. So we can sell to everybody. So you'll be able to, if you're a big fan of Elton John, you'll be able to own Elton John tracks and earn royalties on Elton John tracks. If you're a fan of The Weeknd or whoever it may be, or if there's an upcoming artist. If you are an upcoming artist and you want to raise capital from your fan base and you don't want to pay highly predatory financing options from, production agencies, you can raise capital from your own fan base that you've built and you've spent time developing that want to be a part of whatever your next piece is. So this is all still very early, but this is coming fast and furious.
So this is an interesting question. So how early are we? If you were going to give us an analogy for comparing us to some other technology, we already heard about Casablanca. Where would you put us? How early are we?
I mean, typically, it takes human beings somewhere in the 25 to 30 year range to adopt a new data transfer solution. So if you look at radio was invented in 1889, wasn't commercially viable and in homes until the 1920s. You look at television was created in 1920, really wasn't in homes till in the 50s, right? And actually it exploded. In 1950, there was only about 6,000 televisions in homes. By 1955, it was in over 50% of homes in the US. And then you get a little bit more advanced. You start looking at TCP/IP. TCP/IP is the protocol that the internet is built on. It was developed in 1970. Well, internet really didn't become popular until 1995. Right. That's when it became a commercialized product. There's a really interesting parallel that's happening between TCP/IP actually and blockchain itself. We're 13 years into Bitcoin. Right. Well, in 1983, 13 years into TCP/IP, it became the standard protocol for internet development. And we're starting to see that now. We're starting to see standardization of protocol 13 years after Bitcoin, just like 13 years after TCP/IP, right? So, where are we as far as in the development? Are we in the 1983 stage of the internet? No, probably not. There's things, like I said before, open source and all coding languages in English and globalization, that will make this accelerate faster. But we're still incredibly early in that development process. And this is a human condition problem. Like, this isn't not really something that you can use technology to leap everything forward. You just have to deal with it. It's a generational shift. Back to that younger generation is what's going to really pull us forward.
Haney, anything to add?
I think if someone were to come to you in the 80s or early 90s and tell you about how big the internet would be and how big Amazon.com would be today as a company, you should sit up and listen and at least delve into the topic. Yeah. And so what I'm telling you here now is that over the next 20 years, crypto will in some way, shape, or form build a new reserve currency or change it. Rejigger our entire financial system, change every bit of everything that requires a middleman, and have a number of both infrastructural and consumer applications that we cannot imagine while creating a new internet from scratch. That's what Ethereum and Solana and all these smart contract platforms are. And so what would I recommend? I'd recommend to learn about it and to study. All of our research is free. It's on 21shares.com/research in 6 languages, including Arabic. And it would behoove you to really delve into this, to dive into it and see it, because we're so early, it's not even funny. We have yet to see a lot of the really revolutionary ideas and applications and uses. Yeah. And everything so far has been quite exciting. That, again, it would behoove everybody here to learn more about all of this, because it will represent a disproportionate amount of our future over the next 20 years or so.
Blockchain and crypto are going to change everything, Nick.
Yeah, I think I would add one last thing to that, which has sort of been stated, but basically crypto adoption is essentially tracking the internet adoption almost identically. So the first version of the internet allowed us to consume information that was published, a read type of internet. Then we heard about Web 2.0, which was read, write, and led to the era of social media. What we're experiencing now is read, write, and own, and a whole new incentive scheme for how people can participate in an economy where all people all over the world can send and receive precious information over the internet. So as you continue to see this,
as long as you have a smartphone.
you will need a smartphone and you will need access to the internet. So that is still a barrier to entry, but one that has decreased significantly over the last 10 years.
Still
the cost
half the world.
of ownership of smartphones, though, is continuing to drop. So I'm long-term optimistic about that. I think you're accurate to say, though, that it doesn't blanket the entire planet today. But if you think about what people are asking for, it's better, cheaper, faster, and you need good tooling to deliver on those things. We've now proven out some sophisticated infrastructure to continue to improve how people interact with their wealth. And I'm quite optimistic about what the next 10 years will bring, but it will require a period of time where we continue to build, and we continue to get feedback for how we can improve, and yeah, that's what we're concentrating on.
I want to reiterate a point that he just made, because I think be long-term focused. Crypto is not a get-rich-quick scheme. You will get hurt. Crypto is difficult, it's complex, it's going to be part of the future, and the only way to do right by something that we're all talking about what's going to happen over the next 10, 20, or 30 years. Be long-term focused, and you'll be handsomely rewarded in myriad other ways.
All right.
And don't take our word for it. I mean, do take our word for it. Because we know what we're talking about. Trust us. And by the way, solidarity, brothers and sisters, for all of you who said you were investing already. So we're clearly in the right group. But like, look at Andreessen Horowitz. These were the guys that figured out the internet before everybody else and really made huge long-term bets in the late 90s that ended up being the backers of some of the biggest companies of the world today. That same company raised $4-5 billion like that earlier this year. They didn't even have to flinch, and they got that money. They see this. So the smartest guys in the room who understand how this technology and network effects really work, because they've done this before and multiple cycles, they're backing it. And to Hani's point, this is the long-term investment. So this is already underway. You know, we had something like 23 billion of VC investment last year. We've already eclipsed it this year, and it's a bad year for this space. So don't take our word for it, but do.
Andrew, last word to you.
I would just say anyone here that's looking to be onboarded in this space, anyone on this stage will help you do it. And in the industry itself, you will find other people that will help guide you and help you. It is a very collaborative environment. It's very community focused. We care about the long-term viability, and this will be a very hot political topic for years to come. But the youth is coming, and this is inevitable.
Well, gentlemen, thank you very much for joining me here for this discussion around building a better crypto economy. Let's give them a huge round of applause, ladies and gentlemen. Thank you very much. This is only, of course, the beginning of a discussion around building and using blockchain to build a new reality. We're going to talk now about gaming, in particular, how it shapes our reality. We've already seen the adoption of NFTs. We've seen new innovations coming together. I'd love to be able to pass the floor now to my friend from Euronews, Jane Witherspoon. She's going to be speaking with the founder and the executive chair of Animoca Brands, Yatsuo. Animoca, by the way, is a leading NFT gaming blockchain company. So Jane, over to you.
Ladies and gentlemen, esteemed guests, it is a pleasure to be here. And I really feel like this is our rock star moment yet, coming out into this stage, which is fabulous, to talk about how gaming shapes reality. Now, many people think of it just as a form of entertainment. I remember sitting in my bedroom with a Nintendo. Things have absolutely changed since those days. Yatsuo, fantastic to meet you. You're the founder and executive chairman of Animoca Brands. as you've just been introduced there, also by Edie, thank you. Let's start by dispelling the stereotypes to start with, please.
Well, first of all, the average gamer is about 35 years of age, so it's not just our children that are playing games. Half of the world's gamers are female, they're women, right? And especially in the kingdom as well, I think it's almost 47 or 48%. The other thing is that gaming is larger than movie and music business combined, about $200 billion as an industry. And another fun fact is that esports gamers typically are 21% more healthier and more fit than your average person.
Wow. So there's not a case of just sitting in your bedroom
No,
playing
absolutely.
it.
Couch potatoes, that's something from maybe 30 years ago.
How would you say gaming influences culture and identity? I mean, these days it really does infiltrate every aspect of our lives.
Gaming is a predominant culture, particularly for youth, right? It's not, movies used to be that, and to some extent television, but people don't really sort of look at the newspaper as much, or people don't really sort of read books in the same way. Games is a predominant form of culture. We spend around 10 to 11 hours a day on average, basically online, of which a big part of it is gaming. There's 3.4 billion people who play games. That's more than roughly 2/3 of the world's internet today.
Wow.
And they consume all that time gaming. So that's your form of culture absorption. And the culture absorption isn't just content that you see, it's also social. Speaking a little bit about the myths, some people think that I'm playing a game and I'm a loner and I'm just doing it by myself. The most popular games are social. You play with your friends, and the glue isn't the game content. The glue is my friends, my social communities, who I'm hanging out with. And that's really the paradigm that's changed here. So that reality is true for them. When you play a game and you have real excitement, you feel real passion, anger, frustration, love, all these things you feel truly inside games. These are real feelings to you. These are not fake feelings.
What do you take away from that gaming community? Do they have much influence in what you develop and what you make?
So in the traditional form of gaming, actually, there isn't that much influence that gamers have because it's still used as a form of consumption. So you make games as a form of content. That's the old way of gaming. But the future form of gaming, is basically where you have ownership. And that's where non-fungible tokens and blockchain comes in. Because, one of the biggest games that is very popular, for instance, in this region is Fortnite. Tons of money is being spent on these gaming assets, on the skins and all these items that you buy inside the games. But what you purchase in the games don't belong to you. They actually are rented. Yeah. But ask a gamer, whether they're renting their assets or whether they're owning them. They will tell you, I think I own this, don't I? But in reality, they don't. So the future of gaming is one where you actually own your assets because you own your time as well. The things I purchase should be mine, shouldn't it? Because I'm spending billions of dollars in this industry. Last year, over $110 billion was spent on virtual goods in gaming, but they were entirely rental. What happens when you actually take those and turn them into real assets, which is now possible with NFTs? We're not talking about just a small increase. You're going from fake rights to actual real digital property rights. We're talking about a magnification of value that potentially, in terms of ways that you can use these assets in other games as well.
It's interesting as well, I think, where it's not just a case of taking part of the game. You can actually earn from it. You can make money.
Yes, so one of our earliest portfolio companies, Axie Infinity, for instance, created effectively millions of employment in the Philippines. Yeah. In the rural areas of the Philippines where they were unbanked, because a bank couldn't give them a banking service, they can't have a credit card, but they can have a crypto wallet in which they can basically transact on their time and get value from that. And this is the thing. Games create value for people. When I'm playing a game, even if I'm not paying any money, I'm playing and interacting with another player who might give value into the system. That's why he's paying. After all, you can't play a game just by yourself. So that value now is being shared to the community. And I actually think the future of work is going to exist in the metaverse, in gaming, for instance, where we went from the first stage where you went into virtual development. So you were making games, you were making apps. 10 years ago, the app economy was a $0 economy. Now it's a $5 trillion economy. The next step is going to take that from where we are today, which is people who are making this a reality, to people who are inside this reality. So people basically buying virtual real estate, which is doing Sandbox. HSBC, Standard Chartered, for instance, Gucci, Prada, all these brands have bought land in Sandbox, for instance, which is, again, one of our metaverses. And there, they build experiences to attract their audiences, and it's their reality. It's the reality of this generation.
I mean, looking at the technology, and like you say, what is reality, what is not? We've got the metaverse, it's how do you keep on top of it, because it's moving at such a rapid scale.
Well, I'd say this to everyone: if you want to enter the space, you have to be there. I live in Hong Kong, and typically when people outside would tell me, well, how does this work in China? We don't understand it, but we want to sell to this market. Seems like an opportunity. I tell everyone the same thing. You have to go there, right? You have to enter that world, because you can't just sell something there. It's the same for me when I came to Riyadh for the first time. I didn't understand anything about this, and I was blown away, and I learned a lot about the space and maybe began to understand it better. The metaverse is just the same. If you want to understand the metaverse, if you want to be there, maybe sell products or engage with the next generation, you have to be there. And the perfect lens to do that really is through your children. In some ways, if you can see what your children love to do, ask them what they want for Christmas. They probably want something virtual. Very likely that they want something digital, because that's their identity. They don't care about the physical things as much, they care about the virtual things.
Do you think, though, that the virtual will eventually overtake the physical? Are we at risk of that? And how do you foresee that happening?
I actually don't think there is a risk of that, because we already exist virtually. Think about the things you purchase. How much of the clothes you wear, or the cars you buy, or the houses you live in comes from the fact that it's physical? The value of a Birkin bag, or the value of your Ferrari maybe, or maybe whatever car you purchase, is 99% a non-utilitarian, completely sort of societal sort of value that comes from virtual, because of its network effects, because how famous it is and whatever. And the same is true in gaming assets. People covet, for instance, gaming skins or gaming assets because it denotes a kind of status. It says something about themselves. So, consumption is actually something that says something about who we are. And since we exist most of our time virtually, for instance, it may matter to us more how many likes we get on Instagram than it may matter where we are seen physically, as an example. So that means that we're already denoting our value in virtual terms. So I think it's just a natural evolution of where we're going.
As it becomes more accessible, what kind of impact do you think it will have on humanity?
So I think the impact it can have on humanity in the context of Web3, I think, is foundational. Because right now, when you're actually playing a game, or when you're on the platform, say like Facebook or something, none of that time belongs to you. But in Web3, you actually, through a form of tokenization, actually become a member of that community. For instance, if you own land in a virtual game, say like the sandbox, if the ecosystem grows, you get the benefit from that. But right now, in the old way of gaming, you're basically simply just a consumer. So the future, what it is for Web3 and blockchain gaming, is it introduces a kind of stakeholder capitalism, where every player actually is someone who gets to benefit from the growth of the activity that they themselves have given to the ecosystem, as opposed to today, where they're being completely extracted.
You mentioned there's some pretty impressive figures in terms of how many people are into their gaming. Do you see much variation geographically?
Well, actually, gaming is pretty universal. I mean, if even some places like here in Saudi was, the average population is, under the age of 30 in the majority. Most of them play games. That seems to be a universal truth around the world. In Asia, which is about more than half of the world's sort of gamers, they're all excited about games. So I think it's a universal language. It's a kind of, you could view it almost like a sport. A few things unite us from a cultural standpoint, right? And if you think about them, they are games of their own. Even sport is a kind of game. And in this case, games is the ultimate game, perhaps.
You mentioned backstage, we had a lovely little chat. You told me about what got you into this career. You started out in music, which probably
yes, right.
people might be surprised at.
Yeah, I grew up in Vienna. I studied classical music. This was in the 80s, so I'm completely dating myself. And my first job was with Atari, so that's how I got into the gaming industry. And back then already, it was more single-player gaming. But the form of gaming that we had was that we would gather around in the living room, and that was social, right? We would play and compete, and my mom and my friends would gather around physically. Now we've just extended that, where gaming is not an activity that you do inside a living room as a community. Now it's the whole world. You can engage and interact. And in some ways, I actually think it's a net positive, because you could be playing with a high school kid, with a teacher, a CEO, a billionaire. They're all in the gaming world actually, in that sense, the same, and they can be together. I actually think gaming can enhance diversity.
What do you think is going to be the biggest challenge for your industry in the next 5 years?
I mean, I think the biggest challenge in any industry that's growing that fast is that you have to make sure that the actors in the space are doing the right thing, because there's so much money involved in the space that naturally there'll be elements of players that might sort of be more extractive of the other. There used to also be a generational shift, because gaming is something that maybe older people would view. I think the risk, I think, is more of a generational danger of people not understanding gamers. Parents typically are worried about their children playing games because they say they're just stuck on the screen, they don't come on time for their lunch, they don't do their homework, they don't care about the physical world. It's a common complaint. But the issue is not the fact that it's an issue, it's the fact that as parents, older generation parents anyway, are not equipped to understand the virtual world.
Sure.
They don't play these games. We used to play sports, so we understand the context of sports. We watch our kids swim, or play tennis, or play football. These are the rules we understand, so we can engage this way. But in the gaming context, how many parents here are playing Fortnite with their kids, for instance? Who's doing Minecraft, for instance? So there's a generational shift there, but I think you can bridge that understanding by just entering their world.
What do you think are the opportunities here in the region we're in here?
So I think it's an incredible opportunity for the kingdom and for the MENA region. Gaming is, I actually think that the place here for gaming is the Web3 element, basically blockchain gaming, NFTs, I think is the future for this area. Sure. Because you can have a leapfrog effect. One famous example of this is Finland, today a mobile gaming powerhouse. But 10 years ago, Finland was really nobody in gaming. The gaming centers were in the US, in the UK, EA, Activision, all those big companies that are still big companies today. But they all said, mobile gaming, we don't think that's the future, we're not going to focus on that. And they left the field wide open to new players. And a tiny little country like Finland became a mobile gaming leader with companies like Supercell, and Rovio, Angry Birds, right? And blockchain gaming is the same. We believe blockchain gaming, Web3, is the future of gaming. And the playing field is level for all. In other words, there is an opportunity to basically be a leader instead of being a follower. If you're trying to copy basically what other gaming companies are doing in the world that have had decades of experience, you can certainly do it. It will take longer, and you're playing a very different kind of game. I think the leapfrog game, suits this area better.
You talked earlier about the challenges probably over the next 5 years. What are you most excited about?
So I'm most excited about how gaming can teach children.
Sure.
Play is the way that we all teach children, if you think about it. Where do our children play? They play online. But there's one difference here. In blockchain gaming, they can learn about financial systems. They can learn about economics. If you can teach our children algebra at the age of 10, you can teach them a little bit about finance. You can teach them about sort of managing elements of risk in a very small way. Like when people trade cards, for instance, they learn about economics and trade as well. Most of the youth today learns nothing about the world of economics and finance until they get to maybe college. And in the West, for instance, most of them have debt, which is a very horrible way to experience the world of finance, shall we say. But they've never been trained. And I actually think, for instance, the real-world sort of dynamics, the game of life, as it were, could actually be experienced in the perfect simulation in a safe way so we can prepare our children better for the future.
Very, very quickly, if you could go back in time and give yourself one bit of advice when you started into this career, what would that be?
Actually, I wouldn't change anything because I think all my past experiences shape who I am today. So I'm very grateful for everything I've had before.
Yatsu, thank you so much for your time today. And thank you to our audience. Please don't go anywhere. Next, we have engineer... Oh, we don't have it. I'm sorry. I've just heard that there's been a slight change to the schedule, but please don't go anywhere because we have lots coming up as we finish day 3 of the Future Investment Initiative here in Saudi. Thank you all so much for your time here this afternoon for this session.
Thank you very much, Jane, and thanks to Yatsu as well. I'm going to invite everybody who's sitting by the central stage to come on, join us over here for this final panel in our crypto summit. We welcome you to join us very close to the stage. We're living through such a time of economic turbulence, to put it mildly. So I wonder where cryptocurrency fits in, and is it part of the problem, or is it part of the solution? Who should be writing the rules for this new world? We have a panel of experts here to help me answer that question. I'd love to introduce to you Ruanvati Suamanko. Welcome.
Thank you.
Secretary General, Thailand Securities and Exchange Commission. Also have Sam Latais. Welcome. How are you?
Excellent.
Good to have you. Co-founder and CEO of the MENA Catalysts. Also delighted to have Ola Dudan, co-founder and CEO of Bit Oasis, and Michelle Ritter. Welcome. Founder and CEO of Steel Perlot Investments. So I'm going to pose the first question to Ruan Vadi, Secretary General. Many policymakers don't really understand the technology yet that we're here to talk about. So I wonder how you think we can promote better dialogue between investors, developers, and public officials.
Thank you. First of all, I have to thanks for inviting me here. First of all, I think that it's new to everyone. It's a new evolution. Not only regulator need to keep updated on the development, but also everybody, including the investor. The question you asked how to promote, I think first you have to believe in collaboration that will work everything together. And secondly, you have to have open-minded. And third, I think that we encourage, as a regulator, encourage the discussion, the dialogue amongst the stakeholders in the market so that we welcome all the opinion, even though it's perhaps different one from the regulator. So that, if I may, for Thailand case, my colleague and I regularly have a discussion with the practitioner, investor. We hold the dialogue every 3 months. And secondly, when we want to issue the new regulation, the objective is to make sure this regulation is practical and workable. And we do a so-called hearing, public hearing. Thanks to the technology, Eddie, we use all kinds of social media to disseminate the draft regulation. Somehow we got opposition, we disagreement, so on and so forth. But at least things be heard. And I guess that what I heard from not only from the Thai market, but the other market as well, they need a clarity of regulation, so that if we, include them at the beginning, it would work, I'm sure.
Interesting.
I'm sure.
So, open dialogue and collaboration. Ola, tell us a little bit about how you see things, and then we'll come as well back this way.
First of all, I'm very happy to be in Riyadh and very happy to be speaking at FII. I do come quite often to Riyadh for work. We've got great partners that we've been working with over the last couple of months and years as well. So just a bit of a brief on BitOasis, and I'll come to your question. So BitOasis, we're the leading crypto asset platform serving MENA, TP, Middle East, North Africa, Turkey, and Pakistan. We're headquartered in the UAE in Dubai, and that's where we've got our approvals as well under the Virtual Asset Regulatory Authority. We've served hundreds of thousands of customers across the region. We're focused on the GCC and traded billions of dollars overall. For us, regulation is very important, and being regulatory compliant is actually one of the pillars that we focus on. I spend a lot of my time, obviously, working with different regulators across the region, some in the GCC, some outside in the GCC as well across North Africa. And definitely the thing that we encounter the first question is, understanding that technology more. And the questions that we get asked is, how do you actually conduct your business, right? From a risk mitigation standpoint, consumer protection, AML, KYC, and there's a whole kind of range of different risks, obviously, that regulators think about. My view, and definitely that's the thing that we focus on BitOasis, is that us, governments, regulators, so different stakeholders that essentially are supervising and regulating this industry, we're working towards the same thing, which is really consumer protection and ensuring that we're building sustainable businesses and ensuring that we are providing a safe environment and a safe ecosystem for retail clients, institutions, high net worth individuals, all those different segments that we're serving in a safe and regulated manner. Our view is that in the long term, if the customers and the incentives and also the protection of the customer is not taken care of, then you can't really build a sustainable business where you essentially serving your customers really well and your customers continue using your platform. So we really believe that at the end of the day, we're all working towards the same mission. Our mission at BitOasis is really providing safe and regulated accessibility to the crypto asset space, and hence regulation is really part and parcel of that.
Sam, what do you think?
First of all, I think in any elevated analysis, it's important to account for competing explanations. And I strongly agree with Ola's point about consumer protection because it's critical that we think at scale 10 years into the future about the crypto economy of this region. How can we build up a whole ecology that can build a thriving digital economy here? And I think that virtual assets go to the beating heart of how we can diversify away from fiat and from a whole range of hydrocarbon-related offline analog sectors. A major piece of the equation, I think, is thinking about the crypto economy almost the way a gardener would kind of look after his crops, like with planting seeds and curating carefully that evolution, but at the same time behave almost thinking as a hunter and gatherer that can protect this delicate garden from bad actors. So I think we have to move beyond the stereotypes or caricatures of the sector being either one, let's invest everything in crypto, or which very few people are advocating that we deal with. But on the other hand, it doesn't carry a lot of water, the notion of let's invest zero in crypto.
Yeah. Michelle, things are quite different in the States depending on which state you go in, right?
That's correct. Yeah, so touching on the US, actually, very quick background, as you did. Steel Perlow is an AI and analytics company of companies where we have trading funds alongside of it. Most of our startups right now are focused on the money space and global payment rails. We looked heavily at crypto. We do have some teams in crypto. But I'd say that the future of crypto, pointing to your question, 10 years from now, I'm probably the most bearish on compared to everyone here. And it largely has to do with regulatory buy-in. At least in the States, you can play a legal arbitrage game. So if you go to New York City or if you go to Florida, you have a much better chance of scaling than you would in other states. So ultimately, for crypto to be a long-term, I guess, alternative asset, regulatory buy-in would be necessary.
So let's tackle some of the other big questions out there. Cryptocurrency has become an established part of global markets, but where do we go from here? So one big change is underway. For the first 15 years of the crypto era, we had little to no inflation. That's gone now, right? We've got rampant inflation. So I wonder how that changes things. Ola, do you want to kick us off?
I'm going to actually build up on a point that you've mentioned and touching on the theme of hyperinflation and crypto, part of that narrative. Actually, a recent report from Chainalysis showing that the fastest growing economies in terms of crypto adoption are actually in the emerging markets. And the US is actually going down the ranks. So number one is actually Vietnam. And a lot of that is driven by play to earn and move to earn schemes. And then obviously you've got other countries as part of the top 10 list. I mean, the US I think is number 5. But you've got, obviously countries all the way from, Brazil, you've got Nigeria, you've got Turkey, of course, and I'll talk more about what's happening there. Pakistan is among the fastest growing economies as well. And you've got Saudi as well, which is actually the fastest growing market in terms of crypto adoption in the MENA region. So I think when you look at those top 10 countries and you're trying to figure out in this bear market as well, so I'm talking about data in the last 12 months, so this is not actually the peak in the bull market. We're still talking about a time where, in other markets, right, volumes are drying up. So when you look at those, forces, right, that are driving that adoption, inflation is one, and identifying income-generating opportunities is another. And then obviously you've got some speculative parts where people have, extra or disposable income where they want to invest in other assets, outside of the traditional stock market and all of that. So essentially when you look at those two main forces, which is inflation and income-generating opportunities, I mean, truly crypto is becoming a way for people to seek economic freedom and also financial or income-generating opportunities. So take the example of Turkey, where, inflation is at an all-time high. It's the highest in the last 24 years. It's at 83%. The biggest token that's being adopted there, or people that are trading, is actually stable coins. It's access to tokenized dollar. And then obviously you've got BTC and you've got ETH and you've got all the rest. So essentially what crypto is becoming is an inflation hedge in those specific countries where the macroeconomic backdrop is obviously forcing people to do that. So I think this is very, very interesting. We see some examples of that obviously in the region as well, in Egypt and other markets. So we're definitely bullish on crypto and specifically the adoption of crypto in emerging markets, the Middle East being one, obviously Saudi being the biggest market. Saudi experienced 150% growth in adoption in the last 12 months. And it grown to $50 billion in terms of traded volume. So the opportunity is really huge, and that's why we're here as well.
But Runvani, you've also got a real-world example from Thailand about how much people are investing in crypto versus capital markets, right?
Yes, thank you. I have to say that this is a 24/7 days market. Unlike the traditional capital market that they open only the Monday to Friday. So that for Thailand, I must say that we're quite lucky that we start very beginning 4 years ago with the law. And for the 4 years up till now, the numbers of participants, the investor, mostly retail, climb up from 100,000, if I'm not wrong, until now it's about 3 million.
Right.
I think that without the crypto winter, if there's no crypto winter, it may go to 4 to 5 million, who knows. But compared to the traditional stock exchange, it took them almost 40 years, to come up at about the same number of the investor. So that you can see that in Thailand, there is a massive crypto adoption. But when we mentioned about crypto, there are so many kinds. For the Thai SEC, we definitely to have facilitate innovation and also to protect investor at the appropriate level. I want to stress appropriate level. For us, we be clear that we promote the tokenization. But for the crypto which is no back asset or unbacked, this is very speculative. So that we keep telling the investor, mostly they are young generation. And for the behavior of young generation, I used to be young before, they said they can take care of themselves, for sure. Why you as a regulator need to say something, need to, we don't care for the young generation. But again, we keep telling them that as long as you can accept the risk, and your profile, the risk appetite, we don't mind. But one thing we have to make sure there may be some scam related to this or market manipulation.
Let's come back to that issue of bad actors, because Sam, I know you had something to add on this.
Well, a couple of points. First of all, we've seen often that when you have a hammer and the old adage about, well, then every problem looks like a nail, the missing piece of the equation we've seen is that, regulation may not always be the answer. A key part also, for instance, might be thinking about this as a public health issue, meaning, we have to inoculate the population, build up financial literacy skills for folks to avoid falling into obvious or traps. And I think adopting more of a whole of community approach is a good hygiene and a longer term, more viable strategy than only thinking that the law itself is going to be able to solve this. The pain point we're going for. At the core of this, we've seen often that adding more regulation may not lead to the security or safety outcomes that we want. If there's already 4 or 5 laws regulating a sector, then maybe adding another one is not going to deter that committed criminal from doing what they plan to achieve. Essentially, the impact is that the more muscular legislation we have sometimes it kind of expands incentives for folks to migrate to less regulated geographies, which is probably what some of the bad guys want anyway.
Let's ask another question to Michelle. You know, a large part of your business is building new companies. I know you said you're the most bearish, but where do you see the most money flowing, most investment flowing in what is quite a volatile market?
Yeah, so I'm going to answer that question and where I think it should be flowing.
Okay.
Where it is currently flowing is a lot into infrastructure. So what's most interesting is a lot of the work that Citadel is doing with Ken Griffin, kind of creating the infrastructure that would be necessary for institutional investors to actually get into crypto. Where I think the money should be flowing is into universities. So if you break crypto into the actual financial asset versus the technology itself, the technology is not scalable, it's not private, it's not decentralized, it's way too costly to actually scale long term. And I actually do believe that the universities can solve this problem. So that is a place where money should be flowing.
Where in universities? What would you like them to be doing?
Well, an easy example is this professor, Dan Benet at Stanford, who is working heavily on layer 1, scalability, and so on.
All right, good. So let's go back to this question around keeping the bad actors out. Because again, Runvadi, you've got an example of what happens if you don't.
Yes, of course. Basically, the role of regulator to ensure market transparency, to ensure the market confidence, and to ensure there's no impact on financial stability. So that for the bad actor, this is a basic or core function of regulator, that you have to enforce the law and penalize them, you know, because, I mean, if one can do, they're going to be like there are someone will follow, and at the expense of the investor, So that, as I said, we came to this market quite early, and we have a lesson learned. It's good, you know, for lesson learned, but we keep telling the history should not repeat itself.
Right.
We got a case 3 years ago that operator, licensed operator, I have to emphasize, license. Before we give the license, we do a fit and proper. At that time, we perhaps facilitate innovation, we do a light touch regulation. The operator, they took the private key overseas.
Took the private key overseas.
And then even though we bring all the enforcement officer went to their operation, only server, only computer, but the coin up there in the cloud when we didn't have the password. So that we had the interest of 250,000 investors at that time, you know, quite a big figure. Numbers, you know. So that my colleague and I need to do everything under the law, give our power, so that we brought the coin back 98%.
Right.
You know.
Learned the lesson.
Yes. And right after that, we raised the bar. Definitely, we raised the bar. We cannot stand still. You know, because at the expense, as I said, of the investor. So that we raise the bar, but again, I have to tell you that whatever we do, raising the bar of the regulation is up to international standard, Eddie. Right now, luckily, that we have a so-called IOSCO, International Obscurity Organization. You know, we work together on this rule setting or standard setting. To make sure innovations we promote, and also the other side of the coin, we also protect investors at, as said, appropriate level, you know. This is a good collaboration that we work together, because crypto is borderless, it's a cross-border, so that we need to talk to everyone, you know.
So bad actors, we're going to keep them out. But Sam, briefly, give us some of the opportunities here, because you're a specialist on the relations between crypto and government.
Short answer, if you look at the geometry of growing cryptocurrency demand and the bulging youth demographic in this region, one could argue that the market fundamentals are almost too hard to screw up. Imagine 20 years into the future. Right now you have the rise of Generation Y leaders increasingly running key markets in this region. And it, in certain ways, I think is really wise how some governments in the region are adopting kind of a Hippocratic oath approach of first, do no harm. Let's figure out what this is, what it is, to understand what we're regulating, and not falling into the trap of kind of heavy regulation versus light regulation, because we want to make sure that we're measuring the right things first. And so that's pretty neat, seeing how governments are adopting a strategy of almost resembling like building a house, meaning before building the third floor, let's build the ground floor.
Go ahead, Ola.
Yeah, I actually fully agree with what Sam mentioned, and also the example of fending off, bad actors or all of that. So as an operator in the space, obviously, we deal with regulators continuously. And it's a tricky one. I do think regulators probably have the toughest job, trying to figure out how to open up, supervise, and at the same time enable, the right platforms and the ones that are fit and proper to really grow and, serve the market. So the space has huge opportunity, right? So as I speak, it was $2 trillion. Much of that was still speculative activities, but crypto is not just a speculative asset. There's all this potential, obviously, cross-border payments, remittances, NFTs, also fractionalizing real estate and tokenized securities. So essentially, it's a technology that is going to innovate and disrupt multiple verticals horizontally. So you're really talking about tens to hundreds of trillions of dollars over the next, 5 to 10 years in terms of how big that space would be. And it's very, very tough to kind of figure out, okay, so how do we start, regulating this? We see different regulators obviously going from a ban to a wait and see, all the way to like proper frameworks, heavy regulation. The tricky part with those two ends of the spectrum is that you're not enabling the platforms domestically and locally in terms of an entrepreneurship ecosystem to gradually grow to serve that domestic market or local market. So agree with what Sam mentioned is like, you want to start kind of like with the pillars, with the skeleton, ground floor, first floor, and then build up and ramp up as those players grow. So it's kind of like more of a risk-adjusted type of approach, and then build with those companies as they build as well. And we see different examples where that's being done in the region, internationally as well. So that gradual approach, I think, is a really smart approach for regulation.
So running out of time, but I want to cast into the future. And Michelle, if we see investment flowing into the right places, where do you think we're going to be in another 15 years?
So I think that you touched on a very important point, which is that crypto is kind of used as this bucket definition for so many different things. So we have to be very precise with what we're talking about. Is it a financial instrument? Are we tokenizing a real asset like real estate? Where are we getting? If I throw it out, best case scenario is we've solved some of the scalability and privacy problems technically. We have regulatory buy-in. I do think that you will need US or really developed economies to actually buy in so that you have depth even in emerging markets. And ultimately, I think it can scale. So I would be bearish today on some of crypto, but very bullish on ambitious people who want to change the world.
Runvadi, give us a cast into the future, 15 years in Thailand.
I think it's hard to predict though, but one thing that is fact of life, you keep learning the new things every day, And for the regulator, I think its basic principle is same risk, same rule, same activity. No matter what gonna be no innovation is, but as long as if it is security, we treat it as a security regulation, so on and so forth like that. But what we keep telling the public is do not do so-called FOMO, fear of missing out. So that many train for you to catch along way, you know. And last thing is, we emphasize on the, what you call, education. We produce our own program, so-called Crypto 101, so that digital literacy, financial literacy is fundamental no matter what. Thank you.
Interesting. That wraps our Crypto Summit. Thank you very much to my fantastic panel. Ladies and gentlemen, let's give them a huge round of applause. It certainly does not end the conversation, and in fact, our next panel is quite related. We're going to ask if technology can extend our lifetime and lifespan with Dr. Aubrey de Grey. Thank you so much.
And that's it. Good afternoon, everybody. I'm delighted to see so many people here to hear about this topic. It's an extremely diverse topic, and I'm delighted to say, and very honored to say, that we have an extremely diverse and distinguished panel here. So I'm not going to spend any significant time doing introductions. I think that would basically just detract from the enormous amount that I'd like to cover today with these wonderful people. I'm going to kind of bookend the session by asking a question now and a question at the end for each of the panelists to answer. And then I'm going to try to cover quite a lot of topics which will be more specific to individual panelists or a couple of them. So I'm going to start, since this is, of course, an investment conference, by asking all of you to look back over the past decade or more and to contrast what you've seen in that period with what exists now and what we hope might exist in the future in terms of investor sentiment, investor enthusiasm for the whole field of longevity research and the goal of keeping people healthier for a longer period of time. Perhaps we could start with Peter, who's, I think, been in the field longer than all of us except me.
Sure. First of all, Aubrey, I just want to acknowledge your leadership in this area for 20 years and congratulate all of you for sticking around for the most important conversation ever. You all get an extra 20 years of life for being here. I don't think there's any bigger business opportunity or any greater gift you can give anybody than health. It has blossomed into one of the most extraordinary business opportunities ever. So it is, I would say, it's gone from an obscure subject to the hottest funding, research, investment subject out there. So yeah, I'll leave it at that.
Yeah, and I think for me, my role as a scientist in the field of aging, I've seen over the last decade just even the shift of how many scientists in our field really truly believe that you can reverse aging. And I think this has put a lot of confidence in investment into our industry, because there isn't a single scientist that you'd find in our field now that would disagree that this isn't something that's absolutely possible, and that's been game-changing.
I simply have to say that as a surgeon and a scientist who spent the last 25 years trying to turn living cells into medicines and looking to target indications where we had a reasonable pathway towards getting approvals and ultimately commercializing, it's amazing how we're beginning to create linkage between the biology of cancer, for example, and the biology of aging. And it's that common denominator that will ultimately allow us to leverage advances in aging research, cancer research, to impact both.
So I would look at it as two chapters. If we look back, Aubrey, as you just mentioned, there's been a lot of excitement the last 20 years in the science, but the investment compared to diseases that are a consequence of aging has been a huge difference. And you could argue that somewhere between 1% to 5% of the investment that went into cancer, into metabolic disease, cardiovascular disease, is what's gone into the underlying process of aging, and you've been talking about this for 20 years, okay? Now, as we look to the future, the next decade plus, this science is now mature to the point from beyond just concept to proof of concept, right? We're getting the evidence. And so over the last 3 to 5 years, we've started to see an acceleration, and I think we're just at the cusp of it. I think we're going to see exponential increase in both government and private sector investment into this. After all, the single largest cause of healthcare costs for any country just about now in the world is healthcare costs related to aging. And so we're shifting from treating the end consequence to actually trying to address the biological process. And my organization's perspective is we're focused, and most people are focused on keeping people healthier longer rather than just living longer. There's a huge difference there.
Yes, thank you very much, all of you. And I'm now quite pleased that I asked you the question in that particular order, because Mahmood's answer really leads very strongly into the next question I wanted to ask. And I want to direct this one especially to Peter and Nicola, because of what you're doing in this field right now. One thing that has always frustrated me enormously over the years in the work that I do in advocacy as opposed to the actual science is the extraordinary resistance of the general public to getting on board with preventative medicine in general, to what we these days tend to call the switch from sick care to health care. And of course, both of you in your respective ways are working in that area. What ideas do you have for how we can increase public enthusiasm for preventative medicine and get them out of the mindset that, if you're not yet sick, then it's like you might get sick as a result of unintended consequences? Peter first.
So we have built so many institutions based upon death as a given, and we've built institutions based upon getting sick and retiring at a certain age. I want to put in context a few numbers here. 100,000 years ago, we would go into puberty at age 13, 12 or 13, and by the time you were pregnant very quickly thereafter. By the time you were 26, 27, 28 years old, you were a grandparent. And the human species did not live much past the age of 30. 100 years ago, we got to an average life expectancy of 40, and now we're approaching 80. The oldest living humans that we know of today are in the 120 range. And I think the vision here is that we want to be able to move the healthy human lifespan, health span is the terminology that this group will use, to get to 100, 120. The problem is most people have a mental image that being 120 means you're slobbering in a wheelchair and you're decrepit and you're old and it's a painful and you're burdened to your family. And so I think the work that many of us are doing is to say, how do we have your health span really be at the top level to 100 years old? A study done out of Oxford, London School of Business, and Harvard about a year ago said adding one average year of life expectancy to the human species, to the human population, one healthy year, was worth $38 trillion to the global economy. It's the biggest impact we can have. So I think understanding that, but for many of the finance people, we're not ready to live. People are not saving to go to 100 or 120 years old. That's an issue, and governments are not prepared for the implications thereof. So these are important conversations to be had.
Yeah, I think we can't underestimate the level of education this is going to take, because as a society, I always say that we have been brought up to have this life trajectory that is, we're born, we learn, we earn, we retire, we expire. And that is how we are socially programmed to believe that our lives will go, because aging and the things that come with aging are quite frankly not something to look forward to at the moment. So often when it's something unpleasant, as a species, we just say it's inevitable, it's natural. But you know, at one point in the past, we would have said that about cancer. We would have said, you know, cancer is just, it's a natural thing, there's nothing we can do about it. But now there would be outcry if people said that. And this is a stage that we're at with aging. We now know that there is real things that can be done that have real good scientific evidence behind them, and it's possible. So I think the question now is, isn't it unethical not to do anything about it and not to take this science and actually improve our long lives that we have, but allow us to actually live them in good health, which is the really, really key bit here.
Yeah, thank you. So, Bob, I've got a question for you, a different question for you, which is focused more on your own company and companies in related areas. It has seemed to me, at least from my perspective in the nonprofit world, that there is still a big problem of unfamiliarity among the investor community when we look at gene therapies and cell therapies, as opposed to the pharmaceutical trajectory through the various regulatory hurdles and eventual reimbursement. Do you think that that is basically a solved problem and it's now, you know, we're getting to the point where investors, by and large, are comfortable with that, or do you think there is still work to do? And if the latter, then what work?
You know, Aubrey, that's a great question because one has to consider that investors like certainty, and in a relatively nascent field, and cellular medicine has been around for over 25 years. However, development of true clinical applications has lagged because of initial, what I would call paranoia about this novel approach, as well as lack of clarity on where the first approvals would occur. No one thought 25 years ago we'd be chasing longevity with cell therapy.
What is cell therapy, Bob? Would you define cell therapy?
I was just going to get there because I think the world doesn't understand. Cell therapy simply means you're using the power, the intrinsic biologic power of a cell to confer a biologic response in an individual. So, for example, cell therapy can range from using true stem cells that elaborate factors which stimulate regeneration and defeat inflammation, or you can take derivatives of those cells, immune cells, and use them to combat cancer. Many of you have heard of CAR T therapy. CAR T therapy, which is chimeric antigen receptor T cells, those are engineered immune cells that specifically traffic to and target your malignancy. That technology is a cellular medicine. Now, what's interesting in that, and just to get back to your original question, part of the reason why there may be hesitancy or reluctance for investors to step in or for the public to adopt is that just like when you're a physician giving someone a bad diagnosis, if there's no action item, people walk away and start thinking of other things. We need actionable opportunities, and I think that cellular therapy may in fact be one of the near-term opportunities to enhance the quality of life in the aging.
Thank you. So, Mahmood, a question for you. Of course, you're running the single biggest entity in the longevity whole movement right now, which is, you know, fantastic advance for the field. But Saudi Arabia would not have been the first place that we would have guessed 10 years ago that would be in the lead in that regard. And of course, Saudi Arabia is not the only country that has, shall we say, taken us by surprise in this sense. Of course, our friend Brian Kennedy is running an entity in Singapore, which was previously not doing much in this space. So, speaking globally, do you feel that there's a general trend for parts of the world that were perhaps not leading the way a decade ago to be catching up and maybe even overtaking the more traditional countries like, you know, the Anglophone countries?
So I'm not sure I'd use the term overtaking. I think this is an opportunity for organizations like ours to take a leadership role and to not only convene but catalyze everybody, all countries and all societies to actually understand that, you know, this is one of the top two greatest challenges facing humanity right now is the so-called silver tsunami that we hear about. Whatever term you want to use, the fact is in the developed world, up to 40-some% of the population is already over 65. And you can look at that as a huge burden, which has been historically what Peter, Bob, and others have just mentioned, or you can flip it around with the study that Peter just referenced from Oxford and Scott and his colleagues into the social, economic, and labor capital opportunity that is. The fact is that if we can keep this population of people as they age healthier for longer, they remain productive. We all remain productive. The other thing that we have to remember is across the world, birth rates are falling dramatically. And as countries start to raise their literacy rate, raise their economic productivity, for lots of good reasons, birth rate falls. Well, many, many countries now have an inverted pyramid. They have more older people than young people. And in a pay-forward society, where the young at the base of the pyramid traditionally took care of fewer and fewer older people, when you invert that pyramid, you have no choice, but the imperative is we're going to have to find more efficient ways of being productive and more effective ways of keeping the top of the pyramid, the inverted pyramid, contributing to society. One last comment. Aging populations have an inherent built-in gender bias. The reason for that gender bias, across the world, on average, 2/3 of the care of an older population is taken care of by women. Mm-hmm. And so that means they're taken out of the workforce, they're going part-time, etc. So if we're going to address all of these issues, somebody's got to take the lead. And we think of a key part of Evolution's mission is not only to fund research, not only to invest the capital, but actually convene and catalyze the world's leaders to come to the table, and that's very much part of it. And actually, we're very proud that this is actually launching and has launched out of Saudi Arabia.
So, switching gears a little, this is really one for Peter and Mahmood. Both of you have one foot in each of the philanthropic sector and the private sector when it comes to longevity. Mahmood, of course, Evolution has explicitly got those two parts to it. And Peter, you you run a company, Fountain Life. You co-founded Human Longevity Inc. But of course, what you're mostly known for is the non-profit, the X Prize Foundation, which has been for a long time. You and I have been talking about doing a prize in this area. So the question is, how, of course, the private sector really didn't exist even 6 years ago in this field, but now that it very much does, how do you see the best ways for the philanthropic sector and the private sector to synergize going forward over the next decade?
So, okay, good question. The philanthropic sector, of which Evolution is most definitely the largest in the world. We've also seen Altos Labs in the US with funding from Yuri Milner and Jeff Bezos, amongst others. So capital is going in. If you think about, there's two parts of longevity, I would say, or health extension as an area. There is near-term business, right? And for me, that is Fountain Life, it's cellularity, it's near-term businesses which you can extend your healthy lifespan. You can do things today that will give you additional years. And then there is the pure research theoretical business, which could potentially give you decades. And I think philanthropy is working towards the longer-term investments to get enough proof that there is real science there. All of us here are steeped in fundamental real science. It's not hope. It's science. And so philanthropy is focusing on longer risk, longer term, potentially higher payouts. And yes, we've been talking about an X Prize in longevity, health extension, whatever it is, to add decades. That's philanthropic. And then there are near-term businesses. You can extend your life by preventing yourself from coming down from cancer or heart disease. And those are real-term businesses in the short term.
You know, let me look at this, and sort of my perspective is this is a spectrum. And it's a continuum where we have some cutoffs, right? You have the long term where philanthropy comes in and de-risks the field, promotes it, starts the process of democratizing it and creates awareness, but actually allows scientists in this case to take the risk that they otherwise could not, and in particular where government funding agencies for research don't prioritize it. Because of course, philanthropy can't replace government funding. NIH is huge, but this may not be an area of focus for them. So as an example, the NIH's budget is $40 billion in the US. 1 point some billion of it is aging, and within that, about 200-300 million only out of that 40 billion is aging biology. And so it's not been an area of focus. Philanthropy can change that. This was true for cancer 30 years ago, 40 years ago when NIH was formed. Now from that comes the next part of the private sector, which is venture capital typically, right? It bridges that. But let's not forget, the real scale comes when corporate, large-scale capital comes in from the public markets through large corporate enterprises, which take it to the market. Underneath all of this is the enabling capabilities of government and policy. And all of that cuts across the continuum. So I never look at these as individual players, but how the ecosystem comes together. Evolution, by design from its genesis, was designed to interact with all four components.
Yes, thank you very much for using the word ecosystem there, Mahmood. I think that one of the most heartening things working in this field, especially for someone in my position where I have a big network and people come to me and ask me how they can help kind of thing, is how cooperative a field is, even though with the private sector money coming in, one would think it would be becoming a lot more competitive. And one thing, and this is more for Nicola and Bob, one thing that strikes me as intriguing is the difference of mindset, or difference of outlook anyway, between the kinds of investor who invest in small companies and those who invest in much larger companies, including public ones, of course. As kind of representatives of each of those, I wonder whether there are ways in which we can make that ecosystem a bit more close-knit in terms of the investor community, and have investors more comfortable with lubricating the transition of companies from seed through to public and so on. Nicola first, maybe.
Yeah, I think one of the challenges is that the science is so spectacular that it's almost a bit too hard to believe, especially for people that aren't doing this science day in, day out. And as people working in this field and people looking at it drawing investment in this field, we'll have to acknowledge that it is going to take a lot of education to get to where we need to be. So my personal experience, having worked in drug development, looking at drugs to slow aging, was that I actually decided to move away from that and go into the more smaller, the short-term wins, where it's what can we implement now to get people to be living a healthier life, and looking at, improving science in lifestyle things, improving science in dietary supplements that do have good evidence base to show that they can be useful in the short term. So I think getting some incremental wins in those areas then can give confidence to investors and let the science, as you were mentioning, develop in the background. So that will then attract the bigger companies, the bigger VCs in the future. But the opportunity is so huge. This is something that affects every single person in this room. And all of the major diseases that we've been battling for the last, decades, their biggest risk factor is age. And many people don't realize that. So I think just, these fundamental basics in educating people on these facts is something that's really important.
Bob.
It's interesting. 25 years ago, when I first embarked on building a company in cellular medicine, any talk of longevity was thought to be a rich man's folly. That it was a narcissistic, not an altruistic objective. The argument today should be that the work that's going on in aging biology now, which will begin to uncover opportunities to intervene and either slow the process, and by the way, the processes in aging that trouble us are all degenerative. They're all degenerative processes. That's when your joints go bad. That's when your blood vessels go bad. That's when your brain stops, your cognitive function declines because of problems with the way your brain synapses and so on. All of these things can pay dividends to other disease processes if we make a dent in the fundamental mechanisms that lead to this age-related degenerative cascade. That being said, we also have to consider that in the field of anti-aging, longevity, cellular medicine, there are so many players out there. It is such a fragmented industry that that's having a dilutive effect on talent, financial resources, and obviously infrastructure. And that's a problem.
Thanks, Bob. So, Peter, you and I are moonshot types. In fact, just this morning, the affiliation that I have in the program for this meeting became out of date because I officially launched my new foundation, which is called Longevity Escape Velocity Foundation, LEV Foundation. And sometimes I get criticized, and I'm sure you do too, for overpromising and underdelivering, maybe, or threatening to make real science sound like science fiction. I have a sense in my own experience that that problem is beginning to dissipate, that people are beginning to think that it actually is sensible to think of the longevity moonshot as a realistic thing to be aiming for in the foreseeable future. What's your experience?
So we've already encountered a longevity moonshot, right? The human body was never designed to live past age 30. I hate to tell that to all of you, but that's the reality. But we've gotten past that from vaccines, from sanitation, from food, from a number of different elements. So we've done pretty damn well so far. Now the question is, what's the next longevity moonshot? I remember, Aubrey, you called me 15 years ago, just after our first X Prize for spaceflight was succeeded, and you said, let's do a longevity X Prize. You had Peter Thiel at the time interested. And it was tough to think about it because you don't want to do a longevity prize. You have to wait 30 years to pay out. And now the conversation has changed about, can we in fact, instead of talking about longevity, can we in fact talk about reversing age-related degeneration? Mm-hmm. And so we've been working on an X Prize in this area. We'll wait to announce it hopefully in 23, but can you reverse the age of your degenerating muscular system, your immune system, your aesthetics, your skin, your cognition? And can we roll back the ravages of aging? And there's enough evidence to say that there's a there. We don't know the detailed science yet, but we think this is possible. And it's the greatest gift we can give anybody. And to the name of your organization, Longevity Escape Velocity, we're going to see more progress in the next decade than we've seen the last century. Mm-hmm. Right? That's the speed of how things are going with AI and biotech and CRISPR and gene therapies and quantum computing, which is going to have a huge impact on this by the end of the decade. And so your goal, all of you here, all of our goals should be to live healthfully for the next 10 or 20 years to intercept all the new breakthroughs that are coming.
So just to close the session, and please watch the clock and only take 20 seconds for each of your answers, I'd like to come back to the economics of this. Of course, there are political leaders in this room as well as investors. And from all of your respective experiences with those in the corridors of power around the world, my question revolves around the fact that the economic argument for doing something to postpone the health problems of late life has been expressed forcefully and in the corridors of power for decades and decades, and it's had basically no impact on policy. Why, and how can we change that? 15 seconds each. Peter.
I'm going to pass my time to the team. I had plenty.
I think as a scientist, for me, it's been the change in what the science shows is possible. Peter, as you said, we have evolved to be good at being young, but not good at being old. And what the science now shows is that all of these things that kept us good at being young have just been switched off. They haven't disappeared, and we can actually switch those things back on in ourselves, and that is why there is now this huge opportunity, because we know that is now possible.
Bob.
The last thing I want to say is that we still don't have a clear understanding of the metrics we can use to determine whether any of these approaches work or don't work. You know, in getting a drug approved for cancer, the absolute requirement is that you demonstrate either a change in progression-free survival or overall survival. Think about what it would take to do that in a longevity application.
Mahmood?
I think if you look back over the recent past, much of the debate in this field has been about the challenge of an aging population. We, for the first time on a larger scale, are starting to talk about not only the opportunity, but also the fact that something can be done about it. And when things shift from descriptive, defining a problem, to actually defining a solution and its benefit, it is now getting the attention of decision makers, not only providing healthcare, but ministers of finance, ministers of labor, ministers of economy. And the reality of it is, when that discussion moves over there, resources flow with it at scale. And this is going to take scale investment across the whole spectrum. We're right at that cusp.
Thank you very much to everybody. What a wonderful panel this has been. Thank you all for coming.
Future does rhyme with minerals, and these lands of opportunities spanning the Middle East, Central Asia, and North and East Africa provide a blank canvas on which to build the modern and responsible mining industry of the future. Minerals are, indeed, fundamental to a sustainable future society and economy, because without minerals such as copper, lithium, steel and aluminium, most of the renewable energy and low-carbon technologies would not exist. We are talking about green buildings, electric vehicles, solar panels, wind turbines and battery storage, and also refining metals, manufacturing and recycling, thus reinforcing a circular, sustainable economy. To put it in one sentence, minerals will make the future possible.
Good afternoon, ladies and gentlemen. It's great to be here, and we're going to be talking about modernizing mining. There's a tremendous demand for mining, for precious metals, for minerals, of course, as we look at the new green future and the energy transition. And only the other day, just here, I was talking to somebody who actually said, why was I doing a mining session? And it was a little bit of a revelation to her, actually, that it is so important. She said, we're not looking backward when we talk about mining, and I just think we now realize the importance and the absolute, essential presence of the mining industry, which is, I think, in shape for an upgrade. And I have a fabulous panel here. Let me quickly introduce them. We have the Vice Minister for Mining Affairs here from Saudi Arabia, His Excellency Khaled Al Mudaifer. Thank you so much for being with us. Yeah. Robert Friedland is here, the founder and chairman of Ivanhoe Capital. Lovely to see you, Robert. Bob Wiltz, the CEO of Ma'aden. And also we're joined with Androniko Sikvik from Antofagasta. So we've got a nice varied panel here. We don't have a whole lot of time, so let's get started here. And really we're looking at moving towards, a greener future, the energy transition. Demand for critical minerals, it's on the increase non-stop. How can Saudi Arabia actually help this? And also, there's got to be a few challenges there, I'd say.
Yes, Assalamu alaikum, and good afternoon, ladies and gentlemen, and thank you, Etna. It's really a pleasure to be along in this panel alongside esteemed leaders of the mining industry, and also discussing a topic that is front of mind for all of us. As you said, you rightly said that without minerals, we would be unable to decarbonize the world, Etna, and also not achieve the target for carbon emission as agreed in the Paris agreements. So humanity has used minerals for thousands of years to thrive and create. Minerals now are the medicine to heal our planet. However, there is two main challenges the world needs to address to get more minerals. The first one is to discover and produce enough minerals. The second is for societies to allow minerals to be produced. Mining, by its nature, has a very long time framework. It's complex. It's high risk. It's highly intensive in capital. It also uses enormous amount of resources: water, energy, land, and people. And most of our current practices for processing minerals are high in carbon emission. Therefore, we need technologies, and we need to develop ourselves to overcome these. In addition to young men and women nowadays do not think of mining as a career option. Therefore, as an industry that thinks decades, not years, we must learn how to become more agile, and how to become more agile and how to address these challenges. In Saudi Arabia, we once believed that we have been late in developing our minerals. Today, we think it's the right time. The time is right. Is the right time, as we use the world's best and latest technology, and also centuries of know-how to explore, survey our underexplored kingdom, and also to develop our 1.3 trillion estimated endowments. All this has to be, therefore, we have made a major transformation in Saudi ecosystem, in the mining sector. We have launched the world's largest and latest regional geological survey of over 700,000 kilometers of Arabian Sea Shield. We have issued our first version of National Geological Database with 80 years of information. We have transformed or issued our new, fully revised new mining law that is transparent, competitive, provide for security of tenure, and also progressive, embracing ESG principles.
You know, I want you to hold that because I really want to go into a bit more detail in terms of what's going on here. Now, Robert, just before we came in, we had a chance to talk to Dan Jurgen with S&P here. And, you know, there was a study that S&P has done. And he was telling us about the need for copper, that it actually needs to double to meet demand. And indeed, when we look at climate goals by 2030, so we're about 22 billion tons now. And this was actually also a study that you participated in. But you're claiming it's even got to be more than that. I've only got the surface. Thank you, Dan. Do we have enough copper?
Salam alaikum. We don't have enough copper. The entire world is dependent on Saudi Arabia being a stable supplier of energy. If we want to change that in any way and electrify the world economy, we need copper metal. Copper conducts electrical energy better than anything other than gold and silver, which are too important for the purpose. So all alternatives to crude oil require copper metal, and we don't even begin to have enough. Fortunately, our experts think that the Kingdom of Saudi Arabia has blessings not only in crude oil, but in copper metal.
So we'll have a look in terms of where we're going to find all of that copper and what we're going to do with it. Bob, when we look at technology, I mean, is it the answer to actually help mines, meet the demand for the minerals that are critical to clean energy? And there's almost a 2-for-1 here. Will that technology also be the answer to building mines of the future?
Well, so, Robert just says, there's not enough copper currently, but we've got to find it. If you look at what the world is going to require over the next 3 or 4 decades, generally it takes about 19 years from the time you find something to have a mine around it. We need to compress that timeline down to at least 6 years, and the only way you're going to do that is an improvement in how you do it with technology. So we've got to find the best and brightest. His Excellency Halim Adayfer mentioned that we need to attract talents to the sector. There's huge opportunities for the deployment of technology to help find it, process it, market it. This should be an exciting career field for young engineers, young scientists. And so technology is absolutely going to need to be brought to bear. And in order to have that technology, we need the talent to get there.
And again, we want to talk about that a little bit more. Andronico, when we look, again, copper mining, this is what you're doing at Antofagasta. Copper mining has been going on for thousands of years. I was going to say you've been doing it for thousands of years, looking good on it. But I mean, the company and people like that, can actually the mines of the future, how do we find them? How do we meet that growing demand? And again, as Robert says, there's not enough right now.
I totally agree with that. And the main thing for us, we've been evolving as copper miners, and we will continue to evolve. Most important thing for us is we're evolving also in environmental issues, that we're getting much better. And for us, the new generation of miners that I consider myself there, it's very important where sustainability mining is going. And for that, we have 3 main pillars that are very important. Usage of seawater in all of our processes, renewable energies, as you know, solar and wind, and then how do we treat our waste? How do we treat the tailings and the technology that there will be of a lot of help for the future?
Let's come back to the technology issue. I mean, when we look here in Saudi Arabia, there has been mining going on, but as you say, there's a lot more possibilities. And again, possibly not as much legacy. So where can we see technology contributing to possibly more efficient mining and really helping, I suppose, decrease the carbon footprint and build sustainability into the industry?
Of course, at the beginning, technology, we need all type of technology in the mining. We lag behind many industries, even our extractive oil and gas. So we need technologies in the discovery, in the surveys and discovery of ore bodies, and we need technologies in processing, producing green hydrogen and producing green minerals, and to reduce the footprint, the environmental footprint for a smaller mine of the future, smaller footprints, and of course, and also safety of the mines. This will attract more young men and women. And we, in Saudi Arabia, have done a major work encouraging industrial plans. We established the competitiveness program where there is incentives to be paid. Almost $200 million have been paid in the last year to incentivize digital transformation, renewable technologies, and also energy efficiency technology utilization by industrial plants. And in Saudi Arabia, we have the leadership commitment, the vision, the mineral, the energy, renewable and hydrocarbon, and the investment drive, and risk-taking to invest and scale up new technology as we are doing in the green hydrogen. Our ambition in Saudi Arabia is to be a global hub for green minerals and a global hub for green minerals technologies.
Robert, now you say there's not enough copper around, but clearly you're still out there looking for it. And again, a lot of the operations you're doing in Africa, are we going to find more copper in emerging markets in Africa? And what here, in the Arabian Shield? What about Saudi Arabia? What's the chances here? Have you been looking?
Saudi Arabia has had a history of mineral development going back over 4,000 years. Not even 1/1,000% has been examined. The potential is limitless, but our Creator was so kind the people of Saudi Arabia with crude oil, nobody bothered to look at the mineral potential. But the minerals the world needs will be found here in abundance, especially for developing technology. We think this is one of the most interesting locations. Ma'aden is a leading producer of fertilizer and metals, in no small part due to the inexpensive energy, the abundance of energy and the infrastructure that the kingdom has developed. So I'm quite sure the world mining industry will beat a path to Saudi Arabia, and you'll see explosive development of mineral resources here in line with His Royal Highness's vision for 2030.
And I guess that's what everybody is certainly hoping, I think, and it's needed without a doubt. Bob, when we look at investors and mining companies, I mean, it's not an easy job in many ways. You know, there's a lot to deal with at the moment. There's supply chain crunches, political backlash in many ways too. The industry possibly doesn't have the finest reputation, competing global production. You know, how do you navigate all of these issues as an investor and as a miner?
Well, as an investor, I tell our investors, take a long view of us. And if you look at Ma'aden, for example, we have been the best performing mining stock over the last 10 years in total shareholder return because we've built in resiliency in our production. We've built in redundancy. We've had plan B and plan C because things do happen. I mean, COVID happened and we responded. Things break, we respond. So, as an operator, as a miner, you've got to have the mindset that your strategy will only survive the first contact with the enemy. So as soon as you put a shovel in the ground, something's going to break, something's going to go wrong. So we're used to that. So we just need to convince our investors that price that risk in and be with us for the long term, and we will deliver.
So that lovely robot we see running around, they're hoping one day to sort of the upgraded version will be able to help you in the mines.
Right.
So have a word with Mbami. Is it maybe they need a diversification in the job role that they're doing? Andronico, you talked about water waste or just water usage and waste. And again, mines have to be efficient, but they also really need to be more environmentally friendly. And again, their energy consumption is huge. So how do you actually run that parallel in terms of saving energy, reducing emissions, and yet growing production?
Yeah, water is a very important element for the mining process, as you know. And I think countries, we're lucky enough in Chile also to be closest to the sea, as you're here in desertic countries. Continental usage of water is going to be almost impossible in the future, we think. So the sea should be the way to go. To make a little example, in the northern operations that we have in Chile, it's called Centinela, we pump untreated salt water all the way from the coast up to the mines, 150 kilometers, from 0 to 2,000 meters high, and we run the whole process with untreated salt water. That's very interesting because at the end, in the tailings, we thicken the tailings, we paste them, so we extract a little bit more water out, 30%, and we reuse that. But also because it's a desert like here almost, with the heat in the day, evaporation comes out, we create sand dunes at the end with a thin crust of salt. That also is very good for dust, so we control dust in that way. So it's technology and mining has been going together little by little.
Maybe, Robert, I could bring you in on this too in terms of, looking at mining and this region too, perhaps a lot more need for desalination, thereby putting costs up a lot. No?
You're asking me? Which Robert?
Well, I mean, I'll come back to you. No, I've only got one Robert. I have a Robert and a Bob, so I'll stay with Robert. When he wants to avoid a question, he's going to go which Robert. No, but how do you deal with the water waste and how do you deal with that heavy energy consumption? Because that adds to your bottom line a lot too. And if you're looking in this region, and I'll come back to you, Your Excellency, as well, on desalination and costs there.
Everything we touch, every single thing we touch, we either grew it agriculturally or we mined it. So this is a crazy question. I mean, life itself is dependent on energy and on mining, and any solution, any problem you can dream of is dependent on things that come from mining. So if you're ever guilty of using a hand phone, there's 85 elements in the periodic table. So the mining industry is changing very radically. I can assure you that technology has evolved that will not hurt Mother Earth at all. But any solution to any problem you can think of requires the mining industry to come to the rescue. And even crude oil production is mining. You know, crude oil is mining. So if you go to the number 7 Prosperity well near Hobart, that well made the modern world. Without that, if the kingdom didn't find that oil in 1938, we wouldn't have London and New York and Chicago and Los Angeles. It was all built on the energy that came from the kingdom. And so this is an appropriate country to engage in conscious, modern mining. And inshallah, it'll have amazing benefits for not only this region and for the young people in the country that are looking for something very productive, but it will be absolutely necessary for human benefit. You know, we're scheduled to have 8 or 9 billion people on this little spaceship hurtling through space. So us poor miners, there's a lot of pressure on us to find the things the world needs, and for that, we appreciate the support and interest of the leadership in the kingdom.
And looking at that leadership, Your Excellency, talk to us indeed about the role of Saudi Arabia, the incentives that are there, the opportunities. How are you attracting more business to come here and more investors in the mining sector?
We have established a number of incentives in our law by itself. The law itself is a world class, but more than that, there is discounts, there is reality grace periods of 5 years for production. Also, there is 75%, up to 75% soft loans that can be given to miners and advanced explorers. And also, on running reality, there is up to 90% discount if the material is used and processed locally. And also for enabling on the water issue, because this is very important. On the water issue, we have, in Saudi Arabia, we collect around 5.6 treated water. And when the projects are in a place to double this to 12 million cubic meter per day. We only use now 17% of that treated water, while the plan is to increase the utilization to 70%. Today, Ma'aden uses 80% of the gold produced is using treated water. They want to increase this to even more in all their commodities. But this is a great opportunity. We don't have lots of water, but using treated water for mining processing is one of a good option, in addition to solution as Andriaco have from the water. Therefore, Saudi Arabia is ready for is ready and welcoming investments. The whole mining law, investment ecosystem, infrastructure, location, investment in technology. We are one of the best internet, 5Gs, cybersecurity. I think you heard it too many times while in these 2 days. We have leaped in all these investment attraction requirements. However, we cannot do it alone. We as government cannot do it alone. And for the industry really to develop and change, the government and the industry and all stakeholders need to collaborate. On a multi-stakeholder collaborative approaches to bridge the gap between where the industry is now to where it should be, it need to be in the future to produce the cleaner future, and to achieve balance between maximizing the benefit to the people and minimizing the harmful to the environment. For all this, we have the Future Mineral Forum. It will be, it's a conference like this.
Save that one now.
We will talk about more.
Yeah. Okay. Because we'll get them before I let everybody go. We'll tell them about that. Robert, when we look at the political climate at the moment, and we look at stakeholders around the world, and there's probably a bit of an anti-mining movement out there and an anti-natural resource movement. Indeed, the ESG principles in terms of where investors are looking and making sure that everything, all the boxes are ticked. This has to make your life a little bit harder. because you need big investments, be it in Africa, be it here. How do you actually navigate through that as a modern miner? Okay, this could take a while. I think that's what he's giving us, that look.
Mining is not a business for intelligent people. If we were really smart, we'd just write an app as a teenager and sell it for several $billion a few days later. But mining is the bedrock of everything we do. It is the most basic of human needs. And if we want to leave a different or better world to our children, modern is producing food. When they produce fertilizer, it's the same as producing food. And so crude oil is energy. Water is necessary for life. Food, aluminum is necessary for me to sit in this chair. This is absolutely basic. And so the problem is that people don't understand the supply chain. In America, we like to say people think a ham sandwich comes from a refrigerator. They never see 40 million pigs a month slaughtered in a river of blood outside Chicago. So as we are beginning to understand we live in an interconnected world, the mining industry is developing a more conscious and intelligent way to find the things we need. And without these things, we will not leave a better world to our children or our grandchildren.
But the industry has probably not been very good about actually getting that message out. And I know even in the oil and gas industry, this is also an issue. What can we do now? Because I think it's more vital than ever. What can players like yourself do, the leaders in the industry? And I'll put that maybe to all of you. Robert.
So I'll take this one. Robert will take this one. So I think, you can't enhance your image unless you have facts and accomplishments to back it up. So I mean, here at Modern, we laid out 2 years ago a carbon neutrality plan by 2050. So we claimed we'd be carbon neutral by 2050. We've subsequently broken that into 10-year goals and now 5-year goals, and now a 3-year goal. And we've signed MOUs to build solar fields to expand our smelter. We've signed an MOU for a solar field to decarbonize the production of alumina. We've been certified this week in blue ammonia. So we produce 14% of the world's blue ammonia starting this week. I mean, so you got to start doing something, and you got to have tangible accomplishments to go out there and tell the world about it. And oh, by the way, we were one of the 3 top bidders for carbon credits in the world's largest voluntary carbon market yesterday. So to aid in our transition, so miners have to put their money where their mouth is. We have to get in front of this and do something. The image will change.
Yeah, because it's a great story, and you're needed more than ever.
Right.
And I mean, it was quite surprised when that lady just last night just almost mentioned, why are we even looking at mining, at an event, a forward-looking event like this? People don't know.
Because, and I would say, we talk about technology and leaving the world a better place and scarcity of resources and how to, we are working, and it's not just Modern, I'm sure every company in the sector is working on solutions for waste products, more energy efficient production. The greatest amount of technology is being brought to bear in this sector because this is the sector that the world is going to depend on for decarbonization and electrification.
And that's the message I think that has to get across. Talk to me, Andronico, in terms of, do you think that mining can actually be environmentally friendly? Is that the big push now, and are you going to be able to do it?
Robert is laughing. I think 100% we can do it. I think we're on the right path. We're doing it right now. I think with the technology that is coming into the industry, different mines, different divisions. We used to mine the same way for a long time. Now we're getting data scientists into the industry. We are bringing new talent into here, and we're making it excited again. I think that's the most important thing, to have many new brains thinking about how we are doing it and how much better we can do it in the future.
And we have to get those new brains. Bob, you mentioned talent earlier there. I mean, will people come and work in this industry right now? Are they just lining up, waiting to get in?
Not yet, but we need to paint a better picture. That's the answer. And once they see the compelling opportunities of what they can contribute to, because let's face it, everybody, whether you work in the U.S., Chile, Saudi Arabia, Canada, people want to be part of something bigger than themselves. And this is an opportunity to join an industry that can truly change the world. This is not just going out and processing phosphate into fertilizer. It's feeding the world. This is not just turning bauxite into aluminum. It's flying people around the world. It's building interconnected supply chain. It's doing fabulous things. So we just got to present a compelling case for the kids of today to do it.
Your Excellency, how are you finding the workforce in Saudi Arabia? Are they looking seriously at the mining sector? Are you aggressively going out there and making sure you talk to the universities, you talk to the schools and get people started early?
We have an initiatives working with universities to open an additional colleges with high quality. We are working with University Colorado School of Mines. We are working with Australian universities to revamp the universities here and help increase the capacity available, and also increases the apprenticeship and training developments that will bring operators and technicians for the future mines, which is more highly digitally dependent and uses data analysts and others. So it's not only about miners and geologists, it's also about data analytics, artificial intelligence, and all the sciences that are in the engineering are required to be deployed in mining. So we're looking into the whole spectrum of education.
So again, I mean, I think it needs that upscaling. I think that it needs an image revamp in terms of becoming a more, technologically driven industry, which it probably has a lot of the time. We've only got a couple of minutes left, so I want to give you at least a minute each to, I suppose, look to the future. Andronico, in terms of, what has to be done now? I mean, I think we've established a communication effort might have to be done. But again, what can we do? We look at the demand, the danger that we don't maybe have enough at the moment. How do we actually balance that right now? And what do you hope you can do in the near term and midterm? Because I think that's really important.
Just go back again to dig a little bit more in talent. I think we, again, need to rethink how we're doing it. Shifts in mines today, 7 by 7, say 7 days in the mine, 7 days out of the mine. Young people don't want to do that. So we need to build city mining campuses. Here the Vision 2030, they're building cities. If we bring the mines to the city, you get much better talent. You'll get data scientists. We'll put universities together with the science areas. And that, I think, is where we need to, or at least where we put our vision, on how to change the way that we're working today.
And be more proactive about it. Bob, what do you think really needs to be done on the bigger, wider picture in terms of the future?
Build the engine. So we can talk about technology, we can talk about exploration, processing capability, ESG, but until we build the ecosystem and the engine to get there, we're just talk. So it's hiring the right people, it's creating the right partnerships, it's deploying the appropriate amount of capital, it's getting after it and doing it.
And is there a danger there's resistance to that at the moment? I mean, do you need, on a wider scale, not necessarily here and in this region, but the political will to maybe shift a little bit towards the future of mining?
I don't think I think everybody would agree with Robert that there's not enough and we need more. It's getting the different regions of the world and the governments of the world to align around it, because obviously there's going to be a conflict about who gets it. So that's an issue. But at our level, we've got to collaborate. We've got to find it. Let the big guys sort out where it ends up.
Robert, a call to action, if there is one, for the industry there.
What was that question again?
In terms of just what do you need done now? I mean, if there's a call to action that you need, you're looking at a time when maybe resources aren't adequate. What do you need to do to actually explore more and deliver the demand that's clearly there to actually fulfill or deliver the supply?
I think as the custodian of the holy places, the development of the Saudi mining industry could go throughout the entire Islamic world, and using Islamic principles, develop a lot of wealth in Africa and other countries that really need assistance from the Kingdom of Saudi Arabia. And I think the greatest mineral potential are in countries where it would be difficult for the United States or even China to enter. And so I think the kingdom is blessed with a leading potential role in the entire energy transition to cleaner economies and to play a role in world peace. We're really in a world now where war has begun, and we used to fight wars over crude oil, didn't we? Do you think the Americans would have really bombed Saddam Hussein if there wasn't a single drop of oil in Iraq? So to maintain world peace, we have a huge young population in Africa and in Asia that needs to be fed. And I think the kingdom has unlimited ambition to play a leading role in the world economy. And I sincerely believe that the determination of the young leadership in the country and the young people here are in a position to truly make a difference, because the kingdom understood that wealth from the Creator came from the earth, starting with prosperity number 7, the well near Hobart that made Aramco. And I think the kingdom is in a position to do the same in mining and play a truly leading role in that development. And I hope and pray that that's actually the case, because
Your Excellency, Al-Mudaifer, I'll leave you the closing word on this. You have support clearly from Robert, from many people in the industry, and you need those partners on board. Sort of a quick look, what's next for Saudi Arabia mining? And then I do believe you're going to invite us all to come to your big event.
Yeah, I need to do some marketing. But I think the notion that one single entity can solve for the great challenges ahead does not exist, is not true. Therefore, as we said, we need a platform where a multi-stakeholder, collaborative approach, dialogue to bridge the gaps and have a frank and serious dialogue between all entities. This is what we are doing in the Future Mineral Forum, and if you are looking for a resilient, responsible, sufficient, secure supply of future minerals, please come and join us in January this year from 10 to 12 here in Riyadh, in this place, to help the world and help the countries in Africa, East Asia, West Asia, and Central Asia develop and help.
And that's where it'll all be happening in January. You all have an invitation to that. We're going to have to leave it there. Your Excellency Al-Mudaifer, thank you so much. Robert Friedland, Bob Wells, and Andronika Luksik, thank you so much. That's it, gentlemen. Thank you so much for your great insight. And we'll all look forward to the future of mining here in Saudi Arabia and indeed around the world. Coming up in just a few minutes, stay with us, please. May bin Khadr will be here from CNBC Arabia. The leisure industry gets to work. So do stay for that. After a heavy-duty session there on mining, we're now going to see how you can all relax and have a wonderful time. So she'll be with you in just a moment.
Good evening, everyone, and thank you so much for joining us today. My name is May bin Khadra. I am business anchor and economic analyst at CNBC Arabia. It's my pleasure and honor to be here with you. Today, we're going to be discussing a very important, not only topic, but also industry, the leisure and hospitality, specifically after what we have seen during COVID and this inflationary environment. What's ahead? What kind of structural shifts have we seen in this industry? To help us go through these questions and more, I would like to welcome our speakers, Mr. Qusay Al-Fakhiri, CEO, Tourism Development Fund, Mr. Sebastian Bazin, CEO, Accor, Mr. Manfredi Du Video, Chairman, Abercrombie and Kent and Silver Sea Cruises, and Mr. Greg O'Hare, founder and senior managing director, Certons Management Limited Liability Company. Please join us in this panel. Please all have a seat, and thank you so much for being with us today. So when we talk about leisure and hospitality, of course, this is the most affected and impacted industry in the world during the year of 2020 because of COVID-19. And when I look ahead and I look at the current economic environment, it's pretty much
a terrible echo.
I'm sorry?
An echo.
You have an echo. Okay. Please, guys, if we can solve this problem with the echo. Anyways, they're going to try to solve that. So going back to our discussion, what we're seeing with the current economic environment is this is highly inflationary. We have high energy costs, we have higher input costs, and eventually this is going to impact the world economy and different sectors as well. I want to start with you, Mr. Greg. And when you look at the leisure and hospitality sector and industry, to what extent are we seeing structural shifts when it comes to consumer behavior?
So since the pandemic, first of all, thank you for having us. Since the pandemic, we've seen a lot of changes in the way people travel. Right now, 70% of people in the world have told us that they will travel no matter what, no matter interest rate, no matter currency differentials, no matter inflation, no matter COVID. For instance, in July in the United States, the TSA, which is the people who process the security, reached 114% of 2019 capacity. Last year, Sebastian will probably agree with me, that year over year, 600% more Americans went to Europe than did the year before, so 6 times as many Europeans went. This winter, at Christmas, or over the holiday season, more Europeans will go to America, despite inflation, despite the lower euro, despite energy costs, than have ever been to America before. TripAdvisor, which sits on clicks and is a good measure of demand and intent, is at 100% of capacity. So it's the same number of people going online to look at where and when they want to travel. The fastest growing sector now after COVID is experiences. People are choosing what they want to do in order to inform where they want to go. And finally, what is a big change is EMEA shows the highest intent to travel. So Europe, Middle East, and Africa has the highest intent to travel of anywhere in the world.
If I can add something.
Yes, please, Mr.
We have an incredible growth in the people that want to go to visit Africa and Egypt especially. Egypt's been amazing. I have to select the people who will take the vacation. Sometimes they call me to say, please, my friend, can you get me in? And the same thing is going to happen in the Middle East and in Saudi Arabia, because it's really, from a European point of view, it's the Caribbean of America. It's good weather, and plus, on top of that, it has amazing destinations. So the growth is amazing. In our sector, which is experiential travel, Abercrombie and Kent, growth 2022 to 2019 is very, very high, 20–30% higher. And in the luxury cruising, also, we're experiencing going back to the old numbers.
Great, but I want to ask you, Mr. Manfredi, as well. There was this perception during COVID that it's not safe to go on a cruise. Is it safe right now? Can I go on a cruise and be safe?
Echo?
Is it safe to go on cruise?
Huh?
Is it safe to go on cruise?
Safe? Cruises?
Yes, because during COVID, there was this perception.
If you think about it, cruising is the only enclosed environment where you know everything which is happening. So the crew stays on board. The crew doesn't go back home. So from a health point of view, it's extremely controlled, which is the reason why it pops up. Because if there's a case of something, it's immediately signaled. But also, cruising can control it very well. We have procedures now in place which have become very effective. I mean, Saudi Arabia had been operating a cruise in the middle of the pandemic very successfully. There was an accident the first day, the cruise was postponed, and from then on, nothing.
Okay, great. So we have good news here. Sebastian, what's your thought on that?
On cruise line, I know nothing about.
No, on the leisure and hospitality sector overall and the changing in consumer behavior following COVID.
Well, number one, we have a blessed industry. Number two, it's a sizable industry. 10% of all the people working on this planet happen to work for tourism and travel. 10%. It's huge. Number three, it has been proven to be very resilient. I can tell you, through COVID, we went to hell. It's the first time that, I guess, for me as a CEO, I had to close 5,000 hotels in 3 days.
Wow.
In 120 countries. And that was not a good time for anybody, certainly not for me, because that was a conscious decision. And with that decision, I knew I was impacting 300,000 employees. And I just want people don't to forget about it. When that decision was made in March of 2020, I knew that half of those people on which I imposed a decision will not have a paycheck on the 7th of April. Because all the Western world, America, have been subsidizing the hotel company for them to be able to continue paying employees.
Yes.
Go to Southeast Asia, go to Sub-Saharan Africa, go to other places in South America. Those subsidies did not exist. So I just want to make sure we don't forget about it. And those people have been back because it's a very generous industry. And everybody which I've been hearing for the last 2 years telling me hospitality will never be back before 2023, 2024, have been dead wrong. Hospitality has been rebounding faster, stronger. Why? It's because everybody on the planet were afraid of dying. And they wanted to regain control of their life. They wanted to breathe again. They wanted to enjoy life and to meet people. And they've been traveling, not far. Many of them have been traveling less than 4 hours away from where they live. So resilient, sizable, attractive, very human. And at the end, I know Saudi Arabia pretty well. And I was at Alula on Friday night for the banyan tree. There is still probably hundreds of places, hidden gem that people never discovered. And I probably believe 90% of the Saudi nationals probably never been to Alula. So that industry will expand. The one thing, and I know we're going to be talking about it, is there is financing, there is brand, there is expertise, there is geography.
And there are opportunities.
But we need to actually seduce more the young population to come and work for this industry. There's a lot of questions to be answered there.
So Mr. Sebastian, Mr. Qusay was describing the opportunities we have in the sector, the recovery from COVID, and he mentioned as well the spillover effect we had from this industry on the economic activity of many countries, and even on labor sector. In your opinion today, how would you characterize Saudi tourism sector?
Thank you so much. Assalamu alaikum. So let me start with complementing what the gentleman mentioned. Saudi Arabia, so in addition to Sebastian mentioned, it's not only sizable, it's expandable as well. Saudi Arabia been outperforming domestic tourism by far globally this year. This is just the start. I mean, if you add to that religious tourism, if you add once the Giga projects and Tourism Development Fund projects, once they are up and running, you can imagine the potential and the unlocking of potential investments in this sector. The fund so far been, I mean, this is our second operational year. We believe what we have done is remarkable. This is proven on the market. We have built a track record. We've been attracting the right developers / investors globally. Tourism Development Fund today is acting as an ecosystem by its own. Also, of course, relying on the larger tourism ecosystem and the larger government entities. The fund was established in June 2020 with a bid-up capital of $4 billion. Today, thanks to TDF team, to leadership, and to our esteemed board members with the support, and thanks to the confidence from global partners and local investors, we have a commitment of almost 7 billion riyal. That's almost $1+ billion, with a project size of more than 20 billion riyals. This is only on our second operational year. So you can imagine how big is the market is and what's the potential. And I see the look of my colleagues here, how they look at this, and we invite every single one to tap into this. The potential is huge. All what we need is to activate, to focus, and we start building for the future. And I think this is what we're hearing from the last 3 days, not only in tourism. This is for the vision, and hopefully tourism, and this is on us, we are eager to outperform other sectors as well.
So,
may I add something?
yes, please go
Because
ahead, Sebastian.
I talked yesterday to the Minister of Tourism without knowing. 5 years ago, at the time the plan was established for 2030 by His Royal Highness, I was alerting everybody on, could we please have a plan on training, academy, formation. And Accor has been in this country for 35 years. And we have almost 20,000 employees already in Saudi, except less than 20% are Saudi national. So I was alerting everybody by saying, please, can we build a common academy? And I was repeating the same sentence yesterday, to which the minister told me, Sebastian, you're late. So I went this morning to the Minister of Tourism's offices, and I went to meet 12 people from the International Academy of Tourism. What has been done in this country for the last 2 years in terms of numbers of university dedicated for tourism, learning French, English, of course, Arabic is part of the culture, it's mind-blowing. 70,000 Saudi, and even in Alula, we have 320 employees, 43% are Saudi national. So I just want to apologize for what I said yesterday. I was dead wrong. Yes, I'm happy to be late, and I'm going to try that I guess the private sector embark and make it even actually more scalable. But I guess I just want, it's a big bravo because I didn't know, and what I saw this morning, rigorous, discipline, vision, ambition, expertise. Well done.
I like this keyword, yes, of course. The key word here is vision, I think, up to a great extent. And Saudi Arabia vision for this sector is to be a great contributor to Saudi economy, and of course, the collaboration between the private and government sector, because we cannot put everything on the government sector. And Greg, I want to ask you about this. To what extent do you feel and do you see the need for more contribution from the private sector when it comes to pushing the vision ahead and achieving the vision?
That may be the biggest softball question I've ever been handed in my entire life. Listen, the government is a fantastic organization to work with. Almost every branch we meet is dedicated to spending a lot of capital. However, there are not 100 million people sitting in their homes today all around the world trying to figure out how to get to Saudi Arabia. Right? You're competing with Italy, France, Spain, Germany, Greece for those tourism dollars. And so the big shift I've seen with the government and with the private sector, first of all, there's lots of investment in infrastructure going into Saudi Arabia from the private sector today. I think the other part of the cooperation has to be attracting people to come to Saudi Arabia. So for instance, you know, some of the Saudis that I deal with have called me the deputy mayor of Alula. I keep getting asked the same question on these panels about where is the place that nobody knows about that everybody should go. And we always talk about Alula as a great example. And it still has a long way to go. We're committed to deploying capital in Saudi Arabia. The government has a multitude of partnerships to be able to do that with. We can attract Americans, Europeans, Asians, Southeast Asians, Australians, Canadians, Latin Americans to Saudi Arabia. You have skiing in the north. You have desert in the south. Oftentimes, my friends that I talk to in Suda, it'll be 40 degrees in Paris, and it'll be 22 degrees in Suda in the summer. I think the big thing is educating the rest of the world what's available here, having capital applied in public-private partnerships, and those seem to be the most successful things that are going on here. To do it by yourself without a Saudi partner, sometimes very difficult. The government's been excellent at identifying Saudi partners for us, at trying to find Saudi partners for us, at showing us how to work with Saudi partners. I just want to add one thing to what Sebastian said. We have been so impressed by the quality of the local executives and the local management, not just the workers, Sebastian, but the local management here, that in every meeting I go to, and QSI can attest to this, I talk about how to identify talented local managers that can come and work for our companies. So I think they've been really helpful in making it easy to invest here. We're looking for more and more projects. They have a multitude of things to do, and we think we can really pivot a lot of people to be able to come here.
If I may add two things.
Please, Manfred.
I mean, what Greg said is exactly true. I mean, there are so many destinations that offer themselves. Why choose Saudi Arabia? But it also depends very much where the source is. For Europeans, Saudi Arabia is a natural destination because it's only 5 hours and a half by plane, 1 hour or 2 hours time zone. So you can go in a place which offers unique things, weather, history, culture, natural beauties, variety of natural beauties, at a very short distance. And so it's really something which is a great opportunity, I think. So Europe is a natural basin to start. And also Europeans are very much acquainted in relationships between the Middle East and European countries. We've always had a lot of trading activities. The French, the Italians, the English, we've always been trading a lot. I came to Saudi Arabia in the 70s. So I've been coming here now, it's what, 50 years. So for me, it's natural to come here. It's a trade. That's the first thing. The second thing I want to say about the talent is that there is a unique skill of the people I've been interacting with is to create bonding and to show passion. So everybody I meet in the senior positions in Saudi Arabia are really passionate about what they're doing, and they tend to bond with the people they're going to interact with. So with all of you that I've met since now, 3 years I've been coming, almost 3 times a year, it's a natural relationship that comes and you become friends, and when you see each other, it's really an emotional getting together. And the passion that each one of you shows, I don't see normally in places where it's just a job. Right. It's really you feel that you're part of this great vision of 2030, accomplishing it and bringing your country to where it wants to go for the next level.
So there are 2 words that keep coming up through our discussion. One of them is talent. The second one is educating the world and letting the world know what's in Saudi Arabia and why more people should come here and visit here and enjoy whether the weather or the landscape or other things. But I want to stop at the thing of talent. We always talk about attracting investments, attracting funds, attracting FDIs to a certain sector. Today, we're moving away from only attracting funds to attracting talent, attracting know-how. How this can be done, please?
It's difficult and it's easy at the same time. It depends which population you're targeting. Our core, I told you, is 300,000 people, and we lose 10% a year. Normal, they go someplace else. So that means I have to rehire 30,000 people every year. But we open 1 new hotel every day on the planet, 365 hotels, which means I need to hire 50,000 people to just run the new hotel. Total, 80,000. 2/3 of the 80,000 people we hire are people who had never had any education, never had any prior job. Between 17 and 25 years old, local community, give them a chance in life. There's nothing better than hospitality when you can teach probably 50 different skills. You can be a receptionist, you can look after the luggage, you can learn to be an electrician, you can be a runner, you can be a maître d', you can be a cook, you can be a commercial person, which is why they leave after 5 years because they have better person. Look at what you have in Saudi. You have 2/3 of 35 million under 35 years old. I'm not saying they are underprivileged. I'm just saying address your needs to those who need you the most. And if you do it with your heart, and if you accept to train them, and you accept they will make mistakes, you will have plenty of people. The question is different if you're in America and if you're in Western Europe, because those people are more demanding, they probably had better privileges, better luck in the world, and then they're asking you constrained hours, and then they're looking for a job they can do via a computer, which is flex office. The biggest challenge post-COVID, it's really how could you respond? And it's our fault again, whether it's Marriott, Hilton, Accor. We have been forcing for the same employee for 20 years in his life to do the exact same job and sacrificing nights, weekend away from family. When you close a hotel for 18 months, that person realizes the price of the sacrifices he never measured before because he was working. And all of a sudden, he loves the time he spent with the parents, the children, and he's looking for a job when he can work remotely. And of course, when you work in a hotel, you cannot work remotely.
Of course.
So again, which is why my answer is pretty complex because it depends who you are addressing in terms of geography and population. But one of the things we have to do is how could you re-attract people? They accept sacrifices. One of the answers, don't ever ask people to do the same job more than 2 or 3 years. Make sure you're going to be elevating that person to a different job with less sacrifice. And that's why we didn't do well for the last 25 years. And at the end, what I'm trying, and I'm looking at the design here, and looking at this country, and I was listening to the people before me on the mining industry trying to defend themselves. And of course, we need them, and thank God they exist. But I'm trying to convey a message to the outside world that the hospitality industry is acting for good. When you discover a culture, when you give chance to a person underprivileged, when you have the craftsmanship artisan working for you, all of a sudden, human capital interaction is why you come to this industry as opposed to work for the big Google, Microsoft of the world where you have a headset. Yes, you have a computer, but you have no human capital interaction which makes you better and stronger. And so we have to redirect hospitality. What do we do for others? My job is to be a caretaker. That's about it. Welcoming people and being a curator for those people.
So, Mr. Qusay, I saw you nodding while Sebastian here was talking about, I think it's the human element when it comes to jobs in the hospitality and leisure industry. And I think that's what makes it even more important to attract talent into this sector. So tell me your thoughts.
So it's really important to highlight that tourism and hospitality in specific will be, and it is today, adding to every other sector, from real estate, from human capital, and other, mining, industrial, power, and so on. It's horizontally integrated with different sectors. And therefore, what we've been trying and we are working on as an ecosystem, tourism ecosystem, is to build career and progression for hospitality, for tourism. This thing was not there before. It was a sort of hit and run. I mean, you just get a job. If you get a better job, higher package, you just leave. There is no clear 001 human capital for tourism. This has been changing. What we're doing today, and as Sebastian mentioned today, and what His Excellency the Minister mentioned to him yesterday and today, we're building global standard human capital academies for tourism, building the right career path, progression. Again, this is very, very important for the sector, and for one of our main KPIs for tourism is increasing the GDP to the global average. Today we are below average, and also to enhance Saudization and increase and open opportunities for Saudis and increase jobs to the well-known target that I think most of you know. So this is when it comes to job creation and Saudization, and again, it's very, very important for international investors. For us as a fund, one of the mandate is to help private sector to hire the right Saudis, to help private sector to utilize all offers within the country to bring and educate and train Saudis. I know this been an issue for some global investors, but it's changing. If you compare the situation today compared to a few years ago, there is a lot of progression, of course, a lot of progress. It's really important to highlight that we're not after a short term, we're building the sector for the long term, and a lot of projects that we're working on today are for the long term. Again, it's really important also to mention the unlock of private sector, the unlock of the vehicles that will attract the tourists. So today you can see from very little activation, be it concerts, Riyadh Boulevard, some other seasons, you see huge demand from locals and regional. But soon, once things are more activated, we will have more international visitors. And therefore, this integration between tourists, local Saudis, having the mindset of that tourism is one of the right careers for locals, this will be, one of the major attracting sectors for locals, not only Saudis, for also some other people in the region.
Great. I want to discuss the macroeconomic landscape today, and what worries me is that it's going to impact hospitality and leisure industry. And my question to you, Greg, is we're seeing higher costs across the board. We're seeing higher energy prices. We're seeing central banks tightening policy. They're withdrawing liquidity that was pushed into the system. And eventually, with this much withdrawal of liquidity, it's going to affect how much income is disposable for citizens to travel or to enjoy the hospitality and leisure industry. To what extent are you worried today that this economic landscape might impact this industry negatively in the year to come?
You don't know me well. I'm always worried. So
that's not a good news.
I think that makes, Kusai runs a fund, Sebastian and Manfredi run companies. I think people who worry about the economic environment tend to be good managers.
I do exactly the opposite. I never worry.
Never worry? Okay.
But we have a balance on the panel then today.
So I would tell you that right now what we're seeing is 34% of people and all these statistics come from online, 34% of people intend to travel more with rising costs. 46% of people tend to want to travel more than last year. So some of this has to do with repressed demand. We all have grandparents and parents. You might have put off seeing them in 2020, you might have put off seeing them in 2021, but when 2022 came up, you definitely are going to go see Granny and you're going to go make that trip. And what's interesting is people talk about travel as a homogeneous industry. It's fairly heterogeneous, as Sebastian was saying. Geography is different. The age of people who are young and people who are old tend to traveling more than people in the middle. And there's always an opportunity in every downturn. So in the middle of COVID, when Sebastian was laying off all those people, we were buying Hertz, right? So for instance, we recognized a trend that because people couldn't travel internationally, they would probably rent cars and drive locally. Those of you who went to Europe, I apologize for all the rental car pricing across. And so Hertz, for instance, one of our companies, had its best year ever in 2022, its second best year in 2021. And so there's always an opportunity to try to get people to travel because as Sebastian, Kusai, and Manfredi all said, it's what people want to do. At the end of the day, the reason I'm not that worried is travel ends up being a force for good, right? People travel all over the world. If I take a high-minded approach to Saudi Arabia for a second, I've been coming here for a long time, and Manfredi and Sebastian have been coming here for a long time, but the pace of change and reform here is just staggering. Like in the last 5 years, the difference in the attitudes and the reform has been so astounding, it's hard not to invest here. And so I think it's an obligation for those of us who run the travel industry and who are important in the travel industry to reward those investments that you're making in infrastructure with visitors and activities. Because if the people of Saudi Arabia want that pace of change to continue and are enjoying that pace of change, and you're spending all this money, visitors and locals have to show up to take advantage of that reform. And so I'm not that worried about the economic environment.
Manfredi, I want to ask you, is it going to cost me more to go on a cruise next year?
It's going to?
Is it going to cost me more? Would I have to pay more to go on a cruise next year because of...
We hope so.
I don't hope so.
We hope so. In reality, I think that the hotel business has been much better at getting good rates. The cruise industry, the problem is that when you get a ship sailing, and you tend to get all the ships sailing at the same time, you have an excess of capacity being offered. Now, what has been a problem for all the travel industry is the lack of people. I think that you agree. So a lot of hotel companies, I don't know about Accor, have been reducing capacity. By reducing capacity, you can keep higher rates. And the people had 2 years of non-vacation, 2 years of non-spending on vacation. They were willing to spend more. So the cruise industry is not benefiting of this, but at the end of the day, consumer will always look, what is a vacation on a cruise ship going to cost, and what is a vacation on a hotel going to cost? Hotel, then you have to add flights, taxis, moving around, this and that, food, which is all included in the cruise lines. So cruise lines used to be, I think, about 60% efficiency compared to a cost of a vacation compatible in the hotels. I think that now it's 50% cost or less. So it's really very competing. Now, that's the reason why a lot of cruise lines are trying to look at how they can go in the hotel space, and a lot of hotel space is looking at cruises to try to extend their pricing capability in the cruising space. So that is something which is a mismatch. You would say an arbitrage which is in the market between low pricing for cruises and high pricing for vacation. On the point of the recession, I always see it as a timing factor. We always saw that every crisis brings up a higher growth later on. And it's only a question of how much time it will take, what is the damage in between, and if you have staying power. Staying power means that you're not going to be suffocated by cost and debt. If you can handle that, there will be a better world thereafter. And of course, what Greg has been fantastic at doing is taking advantage of the opportunity at the moment. I did my little job. I sold my cruise line, Silver Sea, which I'm not the chairman anymore, because now I'm a chairman of another cruise line called Crystal, which I bought during the pandemic. And I paid at 6% of the price of what I sold Silver Sea for. But now, of course, I'm investing to grow it and to make it as big as what Silver Sea was, which is a nice job for the next 10 years.
Great. So I have 1 minute, 30 seconds, and Sebastian, I think the key question here at the end of this panel is leisure and hospitality industry ready for the next crisis?
Oh, yes. No question. No, but I told you we've been going through hell. We closed. We lost 90% of our clientele. And 2 years after, we're very much alive. We're probably better, stronger company because we had time to think, to reflect. We may end up into -1, -2, -3% recession in the Western world. Let's face it, we live in a messy world. It's unbelievable. You take probably all the countries on this planet, with the notable exception of many countries in the Middle East, it's a mess. So we're going to be having some headwind. And if it is a -2% recession, it will not be the same, and you will have, of course, growth in this region. That means our industry will probably going to go down 2% because there's a direct correlation between RevPAR and GDP. When you know how to cope with -80%, believe me, -2%, I'll enjoy my life very well. So it's fine. If I may, because I'm trying to push everybody to change the way they think. For 50 years, hospitality players have been catering for the traveler, which is normal because we're selling a bedroom and a shower. For the next 50 years, and I started 7 years ago, turn it upside down. Stop thinking of the travelers. You should be inventing brand for the local community. Make it a brand where people want to go, to dine, have a wonderful experience, to be entertained. And don't you worry, if you succeed in doing this, it's called the lifestyle segment.
Yes.
Then the travelers will pick your brand because this is a brand the local community love. If you accept 180 degrees to change the way of thinking and acting, then you probably will conquer the world. If you want to conquer the world, that's another question. This is not my ambition.
Thank you so much for joining us today, and thank you, our audience, for being with us today. We wish you safe and happy travel all years to come. Thank you. Thank you.
This is Africa, home to a rising middle class, with the technology industry sprouting everywhere. There are now more than 600 technology hubs on the continent, with Cape Town, Lagos, and Nairobi receiving global attention. African women already represent 30% of professionals in the tech sector. That's 2% higher than the global average. In just the last 6 years, Africa became home to 7 unicorns, companies worth over $1 billion, all of which are in fintech. Last year, African tech startups received investments totaling nearly $5 billion, about $1 million every 2 hours. Yet 92% of those investments went to companies based in Nigeria, South Africa, Egypt, and Kenya. And despite the rise in entrepreneurship, only 28% of Africans are online. The digital divide goes beyond internet access. It's also about education, financial inclusion, lack of consistent electricity, and lack of opportunity. In what ways can investors help meet the challenges of the digital divide? How can the tech ecosystem flourish in more African countries? Which areas in African big tech are most attractive for sustainable investments? Why is Africa the continent to watch over the next decade? Different challenges, one future, one goal, one Africa.
A very good afternoon and welcome to an African Future Focus, Trade and Energy. My name is Nzinga Qunta and I'm so pleased to be in conversation with Marlene Goyi, who's the CEO of the Fund for Export Development in Africa at Afrexim Bank. Thanks so much for your time, Marlene. Perhaps we can start with a broad overview of the state of the energy sector in Africa.
Thank you very much. First of all, I would like to thank you for taking the time to have this conversation with me. Wanted to take the opportunity to thank the high authorities of Saudi for having me here. Thank my African brother Richard Atias and their entire team for organizing the event. It's an honor to be here and speak on Africa today. I think that you start with the perfect question. Let's start talking about energy in Africa and what that means. As you know, the energy sector is strategic for nearly any country in the world. Energy access guarantees you health, better health. Energy is essential to improving education. Energy is essential as you try to industrialize and produce and create economic development, reduce poverty, create jobs. So that's a very, very important sector. And when you look at Africa, today it's 1.4 billion people. In 2040, it's expected we're expected to be over 2 billion. One of the important statistics to realize is that we still have half of our population that don't have access to electricity. So that is something that we cannot ignore in view of everything that I said to start with. I think that a second point that we need to highlight, which is a lot more encouraging, is to say that in terms of energy potential, Africa is a very key player. Today, when you look at the world, 60% of the solar resources are in Africa. They're beginning to be exploited. when we think about the green economy and the transition to electric vehicles, we know that cobalt is required for that. More than 60% of that mining resource is actually in the DRC and Zambia, 60% of the world's resources. So Africa plays a key role in that. You know, as I think about hydro power, today we have some of the largest hydropower projects in Asia, in China. But when you think about the Inga project in DRC, for instance, you have the potential for 100 gigawatts. That's enough to essentially fuel the entire continent. And then you have gas resources and pipeline projects that need to be put in place to increase that supply, not only for ourselves, but also to export to the rest of the world. So while Africa currently has challenges in energy that need to be addressed, because without resolving that energy question, like I said, we cannot resolve healthcare problems, we cannot resolve education problems, we cannot resolve economical development projects. So we have to resolve it and make sure that the right investments are made to unleash this important vector of development.
So you've given us such an incredible overview of the state of energy on the African continent, but we're here talking about the future and what we can look towards. So as we look there and going towards a greener future, what opportunities and challenges are there on the African continent, specifically when it comes to energy?
Yes, so this is where I think that it's very important, and I've been attentively listening to a lot of the participants in this forum, and I found a lot of intelligence in what I heard. We cannot have one solution fits all for this transition. I mentioned half of Africans today don't have access to electricity. Africa is 15% of the world population. This is a significant amount of people who are deprived from opportunities. I think that I mentioned that there's still a lot of countries in Africa that are dependent on fuel fossil. A lot of people have oil and gas reserves. Some of them are just discovering them. Those reserves are untapped, and they need to be able to exploit these resources in order to then diversify into an energy mix that would include hydro. I think I mentioned Ingla, that would include solar. I think that we're seeing that the technology in the world is allowing for solar to be more and more affordable. But I think that we need to be sensitive, we need to be pragmatic, we need to be humane, and understand that that's going to be done, but it's going to be done gradually. Why do I say this? It's because I think that there's an urgency to decarbonize. I think everybody that's reasonable agrees with it. I think that some people are in a position to start now and say we're going to put ourselves very strict objective, and that's a very good thing. But when you think about Africa, it's 15% of the world population, but in terms of emission, it's only 3% of the world's emission. So Africans are essentially not responsible for emission, but we are part of humanity. We have some of the largest forests. We understand our human responsibility, but I think it needs to be done gradually with the support of all to ensure that those who are the less, who pollute the least, are not penalized and are allowed to develop while obviously expanding their mix and obviously exploiting the renewable energy. I think it's very important to have that approach. I don't believe in one size fits all. We are all at different stage of development. We all have things to bring to the table. I mentioned the incredible things that Africa has to bring to the table, but it's very important for world leaders, and here I talk about politics, as well as development institutions, as well as private sector participants, to understand Africa is a large portion of the world population. They have a lot of renewable resources. At the same time, they are the parties that pollute the least in the world, and they have tremendous development needs that cannot be ignored. So let's have a gradual plan, a mix. And I think that I'm speaking about this here in Saudi, and it will resonate. Imagine that if in the 80s we had said to Saudi Arabia, you cannot exploit the oil and gas that you have, or UAE, it would not have been possible. And so we have to take into consideration that a lot of governments in Africa still have 50–80% of their revenue depending on oil and gas. And while we should transition, we need to be pragmatic.
As we wrap up our conversation, what opportunities are there in regards to the energy that you've spoken about, and also the potential for Africa when it comes to trade, not only the Africa Continental Free Trade Area Agreement for people who are sitting in the room or watching us online, when it comes to Africa, trade and energy?
Thank you very much. I think that the opportunities are tremendous. I mentioned, just looking at the energy, all of the potential that is untapped. So I think that makes opportunities for investments. One thing that I want to focus on is obviously intra-Africa trades. At the moment, intra-Africa trade only represents 13% of African trades. And when we look at the statistics, we realize that when Africans trade with each other, it's actually more value-add products and services. So that creates more wealth. So that's something that we should encourage. The AFCFTA agreement is now in full-fledged implementation. There have been some testing that have worked very well on the continent. That is something that we certainly have to continue to push. And the energy sector will be one of the components of that trade. I spoke about the hydro energy. I spoke about gas pipelines, which are important to implement, not just within Africa, but even they can even go all the way to outside of Africa, especially in the current circumstances that we have, where there's such a shortage. I think that those create opportunities. So that's one aspect. But I also do believe that when it comes to Africa trading with the rest of the world, one thing that we need to do is to ensure that there's more and more value added to what Africa exports. At the moment, historically, it's been a lot of raw material, very little value staying in Africa, that raw material going to more developed economies and then coming back to Africa or other economies with the value add. I think we need to stop that for several reasons. Number one, we need to create wealth, employment, transfer knowledge in Africa. But secondly, when we think about environmental challenges, I think that it's reasonable to try to say, let's try to shorten the value chain. Let's try to be efficient and not have raw material living in one cargo to go to to another part of the world and then coming back transform. Let's try to do that on the ground as much as possible and ensure that everybody wins.
Marlene Goy, the CEO of Fund for Export Development in Africa. Thanks so much for your time and insight and really giving our audience an insight into the energy sector in Africa and the potential for trade there. A round of applause, please, for her as we wrap up this session.
Thank you for having me. Thank you, everyone.
As we've heard, African tech is the next big thing. In just the last 6 years, the continent became home to 7 unicorns, companies worth over $1 billion, which are in fintech. To expand on this and the potential of tech in Africa, I'm joined by Ashish Thakkar. He's the co-founder and group CEO of the Mara Group. Andrew Torre, who's the regional president for Central and Eastern Europe, Middle East and Africa, and Fatou Diaw, who's the president of ORFA, which is an African businesswoman organization. She will be speaking to us in French, so if you'd like to follow the translations, you can. There is translations on your headphones there. Perhaps, Ashish, I'll start with you. You've been in the sector for a while. Just give us your insight into the evolution of tech in Africa, the African ecosystem, what works and what doesn't.
Thank you so much, Zinga. It's an absolute pleasure being here. It's great being back at FII. So I think the continent has truly evolved, and tech overall, as Africa has given birth to quite a few unicorns already, and is in the process of giving birth to quite a few more. I think the best part has been that there's a real demand for a lot of our services. When you think about fintech as an example, the latest report from McKinsey shows that there's going to be 8x growth by 2025 in terms of fintech revenue. 80% of our continent still remains unbanked, and 80% remains meaningfully unconnected, meaning 4G handsets with 4G connectivity. So when you think about that, with a population of 1.3 billion people, we've truly got something that's really addressable. It's not just a hype, it's not just a a valuation game. This is something that has a true requirement that we're seeing grow. So it's a really exciting time for our continent, and I think it's a great time to be active on it.
Fatou, if I can ask you what the potential of tech is to change women's lives in Africa and the work that you do with the African Businesswomen Organization.
Bismillahirrahmanirrahim. Permettez-moi de saluer Sa Majesté le Roi Salman, le serviteur des mosquées. De saluer également Sa Majesté le Prince Mohammed bin Salman, que je félicite pour son leadership. C'est un visionnaire. Donc, la question, vous m'avez posé la question de savoir, répétez-moi la question, s'il vous plaît. S'il vous plaît.
So I'm just asking, what's the potential technology to change women's lives in Africa, and talk to us about the work that you're doing with the African Businesswomen Organization.
Ce qu'il faut, c'est d'abord investir dans les enfants, investir dans la jeunesse et les femmes. En investissant dans la jeunesse et les femmes, il faut les former. Nous avons besoin de former les femmes, nous avons besoin d'avoir un capital humain. Nous avons besoin pour les enfants, pour les jeunes, d'une éducation de qualité. Un capital humain qualifié. Et vous voyez, nous les femmes, nous aimons beaucoup les diamants, mais nous sommes sur terre et le diamant est dans la terre, sous terre. Donc il faut des ressources humaines de qualité. Il faut les former pour qu'ils aillent extraire les diamants, par exemple, le travailler et mettre ça à la disposition des populations. Nous avons les États aussi, je leur demande de considérer la compensation industrielle. Par exemple, dans un État, vous faites un appel d'offres pour des investisseurs.
And then you are providing, and as such you will have different presentations, and you need to select among these presentations, you need to select the best. So in these proposals and these opportunities, you need to force investors to adopt freshly graduates and to enable them, to train them in order to be able to work hand in hand with you. So at the same time, whether this to be in railways or to be at the level of the Kingdom of Saudi Arabia, for example, you can ask training in aviation or also in or to have training for the freshly graduate students and to involve them in labs, in factories, in order to involve in the manufacture of airplanes. So we need a huge human capital with high efficiency as well as to be well trained and experienced. And this is what will ensure that we will be able to manufacture at different levels and fields in Africa. Let me tell you that Africa urgently needs human capacities in this field. So the child needs to understand the idea of manufacture 4.0. And this issue can be applicable either in smart agriculture or smart farming that is using digitalization. Also, at different levels, we are using digitalization. So in Africa, in fact, we have to spend on youth. We have to invest in youth and on the children. So what I'm doing now in the company is that I'm investing in the kids on the streets. In Senegal, we have children who are living in streets, and they are Muslim kids. And what we want to achieve for those kids is to create homes for them, to create shelters, and to train them, to educate them in industries, for example, or career or professional or career training, in order to work, in order to be saved from streets and to be richer more than the rich people themselves. So I need to confirm on the necessity of investing in these categories of people, to invest in women in particular, to invest in childhood. In Senegal, for example,
The conversation and keep it flowing. We will you've spoken about with the other panels. Andrew, Visa has a lot of partnerships on the African continent. Tell us about those and why specifically Africa?
Yes, so thank you. Our business is based on partnerships, across the board. We've been in Africa now for 50 years. We continue to open offices. And if you go back to something Ashish talked about, there are still so many folks there that are underserved, that are not connected and don't have access. So we realize that we have to open new partnerships in order to be able to reach those consumers and those small micro sellers that are underserved. And that goes back to new partnerships and new technology to be able to reach them. And it's an incredibly important point, because many of the reasons why folks haven't entered the formal system is because the distribution system hasn't worked for folks. Traditional bank-led distribution hasn't worked. You've seen a lot of the M&Os come in and offer mobile money. So we've got a whole generation now of fintechs that are coming out and that are digital first. They're onboarding consumers quickly. And there's a real need. Payments is a very early hook to bring people into the financial system. Payments have become critical. So we see that as a massive opportunity. We have partnerships across. On the consumer side, we are partnering with MNOs. We announced a partnership with M-Pesa, Vodacom last year. We launched this year with Visa credential in M-Pesa's wallet. So it gives access to all of their consumers in Kenya to be able to purchase anywhere on the 70 million merchants that we have across the globe. At the same time, we're also working with a whole new generation of startups and fintechs that support small and micro sellers. Folks like Paga in Nigeria, Kafia in Ethiopia, and others that are able to scale quickly and use technology that we've got called Tap to Phone to be able to literally take a $15 handset and turn it into an acceptance device that works around small sellers across the community. So partnership is certainly core to our business, and we bring new technology to be able to support these partners.
Ashish, a point that Fatou talked about now was the fact that there's a lack of access to capital, and Andrew also spoke about how, especially operating on the African continent, you need very different dynamic solutions, perhaps more so than anywhere else in the world.
That's right, Zinga. It's a good point. I mean, when you're building a fintech or a to-be tech unicorn, in the rest of the world, when you're losing money for the first few years, it's fine, it's expected. It's customer acquisition, it's your growth stage, so it's fine that you're burning cash for the first few years, and then you finally do break even. Whereas, in my opinion, I think in Africa, when we're building these companies, it's really important to look at it through a different lens. If we're going to be truly dependent on raising external capital constantly in order to survive and in order to grow, I don't think that's going to be as sustainable, because our continent is looked at differently to the rest of the world. And therefore, in my opinion, we need to create businesses that actually do have a self-sustainability element in there from a very early stage. So, for example, we're building a digital bank fintech right now in Africa, which we've launched, and by the second year we will be profitable. Now that's really important, because if you're not, and if you're constantly just kind of spending the first 4 years burning cash and losing money, and then constantly trying to raise money, when the markets do turn, as we're kind of seeing right now with how the public equities are reacting, and as a result that has a direct impact on the private equities markets, when that capital flow does slow down, unfortunately, as one of the true emerging markets, as a continent, we are kind of put on the back burner, right? And therefore, it's really important that our business models do create that self-sustainability and scalability within itself, baked in. And I think that's happening more and more, but I think for really, really long-term, scalable, sustainable businesses, we really need to factor that in.
I just want to stay on that point, Andrew. There's an innovation center that Visas works on the African continent. What kind of work comes out of there? And what's the thinking about how that's going to also lead into the future of fintech or payment systems on the African continent?
Yeah, thank you. Yes, we opened an innovation studio in Nairobi earlier this year, and it's the first one we've had on the continent. And we did it for a number of reasons. One, not only are partnerships local, but solutions need to be local and for the market. So our innovation studio has access to our entire development platform. So people can innovate through our APIs. And what we do is we bring fintechs in for co-creation sessions, whether they're in Nairobi, Nigeria, or Botswana, to come in and work with us. The other thing, we've coupled that with something we do, and Ms. Diao was talking about that, is around supporting the next generation of entrepreneurs. So we have our global innovation platform called the Visa Everywhere Initiative, and we run that every year. We've run it across sub-Saharan Africa, and we invite startups to come in, solve problems, compete, and with that, they get expertise. They get access to our expertise, some of our partners' expertise. They're able to use our platforms, and we give financial prizes to them, and they can go on further and compete globally. The benefit of that, though, is their exposure in the market. They often find partners, and that cohort so far that we've brought through, the 10,000 startups, and this is across the globe since we initiated it, have raised over $5 billion worth of capital. So we think it's very, very important to be able to support the next generation of startups, and we feel like we're able to do that certainly through our innovation centers and programs like our Visa Everywhere initiative.
Ashish, we speak about resources in Africa that we have, we speak about our minerals, we speak about our energy, but often what we don't speak about is
ce que nous avons de
and how that really is one of our most powerful things. African youth are innovative, they are eager to work, and they're eager for opportunities. So what would you say to an investor who's considering coming onto the African continent about specifically that, and also other opportunities when it comes to tech in Africa?
It's a great point. And I think, just to build on what Andrew is saying, I think what Visa has done by creating these labs is truly phenomenal. And Mrs. Fatou was mentioning as well about the skill set that is there and exists. What I'm seeing more and more is, I've been active on the continent for 26 years. At the early stages, you'd need to think about bringing in expatriates, and then a lot of knowledge transfer would need to happen, etc. Whereas today, the kind of local talent we're able to find, who are truly energetic, who are really eager to get going, who have the skill sets, is truly phenomenal. So my message would be, when looking at investing in Africa, I think, firstly, please don't generalize us. I think it's really important to kind of narrow it down. We have some amazing gems, and most of our continent are gems, and there are some that are going through challenges as countries, but the reality is that every single market is very unique, and every single, we're such a young population. We're such a young population who is extremely dynamic, who's very long-term mindset, long-term approach, etc. So I think it's genuinely the best time to be looking at investing in Africa. and really taking advantage of the fact that we've got a lot of human capital, to your point, who's very eager to take the continent to the next level. And which is why I always joke that Africa isn't playing to catch up. We're playing to lead the way. And I genuinely do believe that. With the size of our continent, physically, geographically, with the kind of population growth that we've got, with the young demographic we've got, with amazing women entrepreneurs that we've got on the continent, and phenomenal leadership that you're seeing more and more in different countries pop up, I think it's the perfect time.
Andrew, I just want to stay on that point. Visa opened their first office in Africa around 30 years ago in Cape Town, so you really do understand the power of the continent. But it's also not a monolith. Cape Town is very different to Lagos. What advice would you give for people and corporations especially who are considering going into the continent about how to navigate the different parts of who we are?
Exactly. It's a great question. You've almost helped me answer it, right? So we have been on the continent for a long time. We now have 11 offices on the continent, and every country is different. We recently opened our latest office in DRC in April of this year. And the recipe for us has been a long-term commitment to the continent. So we hire locally, we bring in local talent, we develop local talent, and over the years that's become increasingly more technical because that's what it takes to kind of wire the infrastructure. To Ashish's point, Africa is going to leapfrog existing technologies. It's going to scale through digital and mobile. So we recognize that. I think the other thing we do when we come in is we often do public-private partnerships with governments. Governments across the board understand deeply how financial inclusion and access are inextricably linked, and they certainly want to be able to drive that access inclusion. The economic benefits are really there, so government is a really good partner. So those are some of our thoughts. Stay local, hire locally, and work with local partners in the government.
Mama Fatou, if you can talk to us about how women and how you've seen in your work when you empower women, the potential that has to grow economies and change people's lives around that community.
Et donc, je disais que tout passe par la formation. Chez nous, ce que le chef d'État a fait, c'est de créer une agence qui s'appelle les 3 FPT, une formation destinée aux femmes et aux jeunes. Et ces jeunes-là ont un défi d'accès au financement. Et le président de la République a créé une agence qui s'appelle Financement rapide des jeunes.
This institution for which fund programs directed to children and women, so women can they can receive funds from banks. We have the payments that enhanced by payment agency, and we have other methods of funding directed especially for the children and women, and we have a fund which is directed and designed for women only, which is a fund made with the partnership between the private and the public sectors, so women can get funds without any guarantee or warranty, and they are exempted to provide any guarantee or warranty for getting such fund, because the crisis of Ukraine has taught us that Africa should depend on its human capital and huge potential. It should further develop manufacturing, industry, farming. So this is what we have learned from this crisis, that to increase the production, the local production, the African production, we shouldn't export raw materials, and we should allow women to untap the huge potentials in Africa. We can foster and build partnerships to be able to export export our products and with the labeling them. And this is by this way, women play a pivotal role in invention. When we talk about using plastic bags in my countries to some Asian countries, I have seen something that drew my attention, and I will make as such in my country. It's not made of plastic, but from agriculture products such as corn. So we can manufacture plastic from such material, this bag from such a material, so we can conserve the environment just to avoid using plastic, and the plastic is not used in my country. So we can export as such friendly, environment friendly products.
A point that's been raised now is the need for women to be empowered and solutions that are taking place. But we're also talking about big fintech companies, multi-billion-dollar companies. In an African context, you can't afford to just focus on unicorns, on creating unicorns, when the majority of people are still dealing with day-to-day and bread-and-butter issues. Is there an imperative for people who own these unicorns and who are very successful in business, like yourself or otherwise, to make sure that this gap is closed? And how do you do that in a way that doesn't take away from your primary objective?
Look, I mean, I'm a big believer. I mean, I chair the United Nations Foundation's Global Entrepreneurship Council. The SDGs is something that it's very close to me, as it is to many people. I'm a big believer that if your business does not have an element of creating a positive social impact, it's not sustainable, right? I think social enterprises, the definition of it is great, but I think every single business has to have a social purpose, right? An amazingly large organization like Andrew's Visa is already creating that impact through different initiatives that they're creating. Every single business must do that, and we have a huge responsibility to do so. And I think, for example, in ours, we have something called the Mara Foundation, which is focused on enabling, empowering, and inspiring young entrepreneurs and women entrepreneurs. It's a low-touch model, and we've impacted around 900,000 entrepreneurs across the continent so far in a very low-touch way. But there's so many other initiatives when we were doing that, and we were going deeper into the countries. There's so many phenomenal initiatives that you don't actually have to reinvent the wheel and create your own. It's also backing others who are actually doing it really well. So there's a lot going on, and I think, an organization like the one Marlene runs, which is FEDA, has that direct impact in terms of they're focused on helping businesses export. And with that lens and with a scalable lens, they've started with almost close to $1 billion, which is great. You see African capital backing African causes. So I think from grassroots to the larger scale, there's a lot more going on, but exactly to your point, Zinga, there has to be so much more. And I think it's a collective responsibility. It's not only our public sector that has to drive that, it's a massive thing that the private sector has to take on.
Andrew, what policy measures are going to continue growing the tech sector on the continent?
Yeah, it's a really good question. If I can just touch on one thing Ashish said, which I completely agree, it's not an either or. You have to have impact. Our organization, you're right, our 25,000 employees come to work every day and they want to have an impact. It's what gets them out of bed and what gets them serving their clients. On the policy side, there are a variety of things. I think if you've looked at where the predominance of capital has gone into technology and fintechs, it's across a smaller number of markets now. I think in the third quarter of 2021, there was almost $1 billion. 60% of that was put into fintech. And I think when you look at the big fintech companies, they tend to go to the large population. So they're in Nigeria, they're in South Africa, they're in Kenya, and a few markets out there. And the reality is that fintechs want to be able to start in a market. They want to be able to grow improve their value proposition over time, and then move to other markets. And I think one of the challenges is there's so much regulatory fragmentation across the African continent. We talk about it, and I'll just say it is very, very difficult to be a central bank governor. They've got monetary stability, they've got financial stability, but they also know they need to be able to keep pace with innovation. So I think Saudi Arabia is a really good example. They have a regulatory sandbox here, which opens and welcomes innovation. So that's one of the things we talk to central bank governors about, which is allow innovation to happen in a way where you can test it and then allow it to scale. So I think one of the things is certainly more innovation through a sandbox. I think the second thing is it's still sometimes too hard to get licenses. I think e-money licenses allow new players to come in and quickly grow and evolve and support consumers and sellers. And you need more of these policies across more markets to allow fintechs to grow and expand across the continent.
Let's pick up on that point, and a point that Andrew made earlier on as well about working with governments. What's the importance of private and public sector collaboration, especially in an African context, Ashish?
Yeah, I think it's absolutely crucial, and Andrew articulated it really well, which is, having the ability to actually test certain new technologies in line with government. Look, I sympathize with our governments as well, because naturally they've got a lot of responsibility to ensure that it's not misused, and they're, not everyone's got a perfect agenda. But at the same time, what we've realized is having the right level of dialogue and making sure that, firstly, obviously, in our case, it's slightly different because we've been around for quite a while. So naturally, we've built that relationships and the trust around that in terms of execution, what we're trying to do. But at the same time, articulating what your vision is, what you're trying to do, how you're trying to do it, and keeping them constantly up to date. We have a regulatory responsibility to give, a quarterly report and then a half-yearly report. My team is giving a fortnightly report to the central bank because we want them to be fully up to speed. Now, the more we do that, the more cooperative and assisting they're going to be to us when we need to do something slightly different. And I think one thing is for sure, every government wants to create a massive, financial inclusion, digital inclusion. Everyone has this agenda of ensuring no one is left behind by 2030 in line with the SDGs. That's clear. But the method of getting there, naturally, there's got to be a lot of tweaking. I think one thing that also should be done is also communication within the governments in the countries, right? So something has worked in one market, and when you want to go to that next market, you're pretty much starting from scratch, right? Again, unless you don't have other businesses there and relationships, etc. But otherwise, you're starting from ground zero. And I think that could be done in a slightly better way because as a continent, we're so much more plugged in with each other, but on the regulatory side, it's still very independent.
I want to stay with you, Ashish. We've spoken quite glowingly about the potential of Africa, all the good things we have. We have not spoken about the challenges when it comes to, in particular, fintech companies and the challenges that those African countries and companies have. What's actually not working?
To be honest, I think it's exactly like Andrew said. It's the ability, and I think somebody else said it on a panel earlier. I think it was Saleh of SoftBank, but basically the ability to become multi-country in the true sense. Being an African player sounds phenomenal, sounds amazing, but we are 54 countries, right? So how do you really scale to 5, 6, 7, 8 countries in a practical way? It is starting from zero in each case, right? I mean, that's the reality. I mean, I think it's great because the entry level barrier is higher and it's easier for players like us. But the reality is when you think about it on a holistic level, when you're really trying to create that scalable impact, when you're really trying to approach that 1.3 billion people, that's, I think, the challenge that you've got to be practical about. The macros are phenomenal, make a lot of sense, but don't get carried away. We are a continent, we're not a country.
Okay. Mama Fatou, I'm going to ask you and each of our panelists in 1 minute or less to leave our audience with your final thoughts and words. All right, my apologies about this. We're going to ask Mama Fatou to wait. Ashish and Andrew, if you can give us your final wrap-ups in about 1.5 minutes, and the final thoughts for the panel as we look at the African tech ecosystem, the space, what's working, and also if I can also ask you to throw forward really with a focus on the future and what the future of the African continent in tech space looks like. Andrew, I'll start with you. Ashish, you can finish.
Okay, thank you. I will say there have been tremendous gains made, but the last X percent, I think there's about 29% of folks that are still excluded. It's going to be harder. It's going to be harder because they've been more resistant to be able to come into the formal financial system. So it's going to be, there's not one thing, there are many things we need to do, across the ecosystem. Ashish mentioned it earlier. We need better and cheaper access to broadband. We need to make sure that we're creating the right solutions, especially for female entrepreneurs. 26% of women in Africa are female entrepreneurs. There is a great benefit to bringing them into the financial system because they invest 90% of their income in their family's welfare, education, and well-being. There needs to be real work done there. It's hard, but it has to happen. And then, the other thing I'll say is, we still want to make sure we see much more access to bring in small businesses and consumers. And part of that starts with there's not enough digital identity. There are not enough national identity systems. So we need to think about a solution that allows one to scale through a handset, and that means to be able to identify themselves through a handset and be able to open an account. There's real work that needs to be done there. There are folks like the Bill and Melinda Gates Foundation and others working on that. But I think those are certainly recipes that will see us bring far more people into the ecosystem, which are critical.
Into financial inclusion, Ashish?
I'm extremely excited about the years ahead. I think when you visualize our markets, I mean, just Tanzania as an example, one segment like motorbike taxis, we have 1.8 million of them. Women entrepreneurs who are, street vendors for food, right? Food street vendors. There's over 2.2 million of them. When you think about all these different associations and communities, all of them need and want 4G smartphones. All of them need bank accounts. All of them need insurance offerings. All of them need access to short-term loans. All of them want better digital education access for their kids. And through our offering, within 15 minutes, we're able to onboard them with, to Andrew's point, a lot of our countries don't have it, but East Africa particularly does, where we're able to verify their KYC, we're able to open up a bank account, we're able to issue a loan for a device straight away, we're able to give 6,000 free ebooks, everything instantly within 15 minutes. And when you visualize that and think about scaling that across our continent and in different communities, different associations, I think it's going to be truly phenomenal of what these individuals and those families can do with these devices and that access to finance and better insurance coverage and so much more. So I think we're literally skimming the surface. There's so much to do. There's a huge breadth to cover, but there's a lot of depth to go into as well. So very excited.
Thank you all so much for your insight this afternoon. As we've heard, Africa is the future, especially when it comes to the financial space and the potential that we have in our women, our youth, and our tech. On our panel today, Ashish Takai, the co-founder and group CEO of Maro Group, Fatou Diaw, the president of OFA, an African businesswoman organization, and Andrew Torre, the regional president of Central and Eastern Europe, Middle East, and Africa. My name is Nzinga Qunta. It's been such a pleasure facilitating this discussion and hearing all of your insights. Thank you so much. A round of applause, please, for our panelists as we leave. Thank you.
Supernatural Labs is planning to.
المختبرات الطبيعية يتم التخطيط لها لأن تقوم بتفعيل 120 مليار دولار من التنمية للمدن الجديدة والمجتمعات، وأيضاً المواطن خلال ال5 سنوات الماضية. 12 مختبراً في 12 مدينة، 3 مختبرات عالمية في أسواق رئيسية لقيادة التنمية والتطوير.
Industry that I have not productized yet. $950 trillion of global construction is projected for the next 40 years. And I want to ask you, have you ever seen something that once you've seen it, it changed the trajectory of your life? Those were the numbers that changed the trajectory of my life. Those numbers are going to help us stop building cities like this and start building cities like that. Over the last 20 years, I've had a design firm in New York that has worked on all kinds of projects ranging in different scales, breaking the record of the most expensive residential ever sold in the UAE, creating the first underground cruise ship terminal in Istanbul that debuted last year. We've worked with companies like Tumi and created collaboration that helped the company lead 60% increase in their total sales. We've worked for projects in the Guggenheim, America's Cup, Louis Vuitton, Bentley, and even Rihanna used our project that is now part of the permanent collection of the Metropolitan Museum. All of that before I started this movement. Supernature Labs is the movement that I've been focusing on over the last 5 years. My practice has been known for drawing inspiration from nature. And at some point I realized a pattern that is not random at all. A pattern that you can see under the microscope and under the telescope. A pattern that shows us the brilliance of 3.8 billion years of evolution. So the cell is an incredible shape, especially in aggregations. When we are looking at the benefits of cell and understanding, why have we been building cities and building buildings always with 90 degrees is simply because it's always been cheaper and easier, but that's not true anymore. So then I wonder, what if we can build cities like nature does? What if we stop using a Cartesian logic and actually build cities in cellular formation? So we put together a brilliant team of experts in various fields, and we realize that if we are comparing the built environment, we are able to reduce more than 50% of the infrastructure and return an enormous amount of natural space into the environment. This is the same exact comparison, just in three-dimensional way, that actually shows us the same exact massing on the left is the same exact massing on the right. And the amount of natural space is in the center of each community. Mobility gets improved simply because we are no longer using four-way intersection. There are no longer 16 collision points in every intersection that we're moving next to. There is only 3 collision points. And when you aggregate that, you have tremendous improvement of flow. You have tremendous improvement of safety. So you look at the ability to walk between cells and completely divorce roads and sidewalks. So all of a sudden, we can create an environment that is completely green for pedestrians without experiencing the traffic. If you look at construction efficiency, and you realize, the slides behind me is not exactly what I'm seeing. You realize that there is a tremendous improvement. Let me just go back. can't go back. 1 second, there's a complete off synergy. The improvement of energy. If you look at the ability for us to build in such a way that we are no longer oriented in a Cartesian way, we're basically orienting in the direction of the sun, which reduce cooling and heating quite drastically. Massive improvement in floods and flood risks because we have so much more soil and so much more vegetation to capture what we have in the environment. Massive improvements on noise reduction, simply because now we invited birds and now we have trees that are buffering the noise. So if we're looking at the next 30 to 40 years, we are scheduled to double the built environment worldwide. We're not just going to double the built environment, we're actually also going to double the land coverage of cities, somewhere in the next 20 to 30 years. I live in New York, and I see those intersections every day. And I wonder, if we are going to double the built environment, we might as well not continue building like this. So I decided to devote my life to change the geometry of how we live in order to change the experience of the life of the people that are living in those communities. We can build trust, we can build equality if we simply organize ourselves in a different way. So then I wonder, why is this has not been done until now? But then I also realized that it took us 1,500 years to realize that we should put wheels on luggages. In fact, we sent a person to the moon before we put wheels on luggages. So I realized that it's not enough for us to start. I realized that it's not enough for us to start a company. We need to start a movement. We put together an amazing supporters in various fields that helped us to understand that what we're thinking about is actually a new type of discipline. Bioplanning is a discipline that merges infrastructure and structure in a completely different way. We were able to secure academic partners in order to help us study this approach. And we are going to debut shortly our first development, 700 hectares of community of 25,000 residents right outside of Tulum, which is basically going to completely be built based on this approach, based on ways where we can integrate nature and density in the same exact environment. But we are just starting. If we are going to double the land coverage of cities in the next 20 years, we have to think about this not as a service, but in a completely different way in which we are able to capture as many projects in the world and make sure that they are worked with the logic of bioplanning. So, this is a paradigm shift in the intersection between urban planning and architecture. We have the ability to change the mindset of designers and architects and planners from sustainability to ecological harmony. If we are thinking that if we are going to build 2.5 trillion square feet of space by 2060, we need to change the way that we're planning those environments. 50% of the world's natural resources is being used already for building cities. So in the future, we can create environments that requires completely different type of experiences, and we can live in harmony with the natural environment if we just listen to how nature builds. So, imagine living in a city with 50% less road and road infrastructure and 2,500% more open space. I can assure you that once we demonstrate this, just like we're not logging luggages with no wheels anymore, we're not going to be building cities the same way that we have until now. So, I'm not here just to show you a new pattern. I want to demonstrate a new business opportunity. If we are thinking about the amount of space that we have to create, not just here, but all around the world in an emerging market, this is a massive opportunity for how we're going to change the built environment. Thank you very much.
How y'all doing? Welcome to the penultimate session here at FII. It's been an extraordinary 3 days. In just a bit, we're going to hear from the man at the helm of FIFA about the World Cup and more in his conversation with Richard Atias. I'm talking, of course, about Gianni Infantino. But first, buckle up. We're going to talk about, we're going to jump in the fast lane for a crash course in the business of sports. So, Jean is going to join us in a moment. Let me begin by introducing some of our panelists, starting with Rodi Basso. Rodi is co-founder and CEO of the E1 series, the first and only World Electric Powerboat series. Super cool. Rodi spent his formative years in motorsports, working with the best in the business, including McLaren and Ferrari. Our next panelist is Meta World Peace. Meta, I mean, if there are any fans of the Los Angeles Lakers here. So if you know the Los Angeles Lakers, you know Meta. Meta played for 6 different teams, the NBA, over 7 years. He's been an NBA All-Star, the NBA's Defensive Player of the Year, 2004, if I'm not mistaken. He won an NBA championship with the Los Angeles Lakers, and in business, he's founded the Artest Management Group. He is a legend. Thank you for joining us. Let's hear it for Meta. Thank you. Let's have a seat. And finally, our last but not least, our third panelist, led Peugeot to 4 victories, you correct me if I got this wrong, at the Paris-Dakar Rally, 2 at the Le Mans 24 Hours race, 4 World Rally Championship titles before going on to lead Ferrari's Formula One Team 2, wait for it, 14 titles. He's also served as the CEO of Ferrari and only just retired as the president of the FIA. Today, he serves as the UN Secretary General's Special Envoy for Road Safety. He's been doing it for a number of years. He's very passionate about it, and we are pleased to join him here today. Jean, a.k.a. Mr. Speed. Please welcome him. So, Jean, let me kick it off with you. We're here to talk about the business of global sports. It's estimated that it's worth about $500 billion, $500 billion. Motorsports, just in themselves, are thought to be worth about $200 billion of that. Before we talk about the future, what is the secret of success? What is it about Formula One that makes it such a good business?
I mean, first, thank you.
Please.
For hosting this panel. Good afternoon, everybody. And I mean, you just mentioned in motorsport, you have different categories. You have rallying, you have sports car, you have Formula E, you have Formula One, and clearly the pinnacle of motorsport is Formula One, and it has been growing all the time, and it's generating a lot of interest from manufacturers, from sponsors, from fans, from TV, and maybe, you know, Formula One was not so popular so far in US until Netflix engaged with Drive to Survive, and next year you will have 3 Formula One Grand Prix for the first time in US, Austin, Miami, and Las Vegas. So it's just getting
Las Vegas
bigger
next year.
and bigger, yeah.
But just let me check with the audience here. Can everyone hear Jean well? Okay, fantastic. Thank you very much. Rodi, some analysts estimate the sports industry just over the next 4 years could grow by a whopping 40%, from 500 billion to 700 billion. Where do you see the growth? Where's the sports industry going?
Well, there are so many opportunities, and of course, we can talk about the sport in general. And when I hear this kind of question, I like to start from the heart and the vision of the sport from the very beginning, which is very much about pushing the boundaries and the limits of what is possible, and also generate entertainment, even though I like to say enjoyment. And we know that we go into a very difficult times, you know, as we understood and learned also in these 3 days. And I'm sure that the sport needs to do as much as possible to generate emotions, positive emotion, especially hope for the people, that they can see that by trying hard and working together as a team, in a teamwork, you can go over all the possible crises and burdens. To go more into some example, I believe that the potential is in the blur between virtual and reality, and, you know, by combining somehow the gaming industry and the sport industry to become one. So it's all about fusion. So that's one aspect that I have in my mind. The second point that I would suggest is also the human-machine interface. The motorsport, where I come from, or where I am now, I like to call it in general, the high-speed sports, are all about human-machine interface. And if you dig into the heart of what this means, in the end, we're talking about decision-making, we're talking about strategies, we're talking about so many applications of technologies, and now we talk about sustainable propulsion as well. So all these aspects will have an important impact on all the possible sectors, and so more and more technology companies will be interested in being part of it and develop case study and prototype to then be used on a commercial side. The other important point that I have to say is that betting, of course, will be seen growing, and we will have to find the rules country by country in order to make it ethical and to make it appropriate. But for sure there is a mega trend there. And I say last but not least, women in sport. There is now an announcement from the FIA of the attempt of, or actually the Formula One, to have a dedicated formula, the Formula 4 for women, so that they can work on the grassroots. And then, so again, in one word, just if I had to be quicker in answering, sport will see this growth if it will be associated to purpose.
Got it. And I want to come back to all of you on specifically what you're doing next as part of that vision. But Meta, let me start with you. So we talked about Formula One, the importance of motorsports. Of course, you're an NBA guy, right? The NBA has seen explosive growth. The Golden State Warriors, the most valuable team out there right now, worth $7 billion. The average NBA team right now worth just under $3 billion. I mean, it isn't Formula One, but all of American basketball together might be worth as much as $100 billion, which is a lot of money. And most people think just over the last year it's grown by 15%. So the NBA is on fire, quite clearly, and the NBA is synonymous with professional basketball in the United States. So where do you take it from here?
Yeah, I think I played in the NBA a long time, and once I would like to say thank you for having me. It's been an honor to be here at FII, but I played in the NBA a long time.
We're most pleased you are here.
Thank you. And so playing for 17 years, I was able to see a lot, from being the best on my team, to being a role player, to having endorsements. And when I retired, I was trying to figure out ways to get involved with the NBA. And it's really difficult to get involved as a head coach or as a owner. So I started to work with a lot of the NBA owners, or a couple of the NBA owners, and I see an opportunity to create the same type of effect that the NBA has, but do it for the masses, right? Do it globally, give sort of like Uber for the NBA.
An Uber for the NBA.
Yeah, absolutely. And I think it's a big opportunity because there's only 450 spots in the NBA, right? And the NBA is obviously the leader. There's a lot of leagues globally. There's a lot of leagues, and I think it's some in Saudi. I think it's some in Europe. There's a lot of professional leagues. But there's an opportunity for someone undiscovered to build their profile locally and take it globally, right? And you can do that using all the technology. A lot of the technology exists to make this happen. So you don't necessarily need to be involved in the NBA to have the same impact.
Through this global platform,
Yeah.
where effectively, like you said, Uber for basketball.
Right.
You sign up, you say, I'm a player, I'm available, I want to play. Everybody else does the same. The investors do the same. The whoever wants to put on a venue.
You can automate the whole thing. Uber proved it, right? We never thought in a million years you'll be able to just use your app and get a taxi cab.
Right.
Right? And with the technology exists where you can make it really easy, and now you can get people traveling from Qatar to Saudi or from Saudi to Italy,
This
playing
is
basketball and making.
You're talking about X versus X Sports, your project.
Yeah, I'm
This
working
is-
on a project called X versus X Sports. It's one
Yep.
of the projects that my company's working on.
Got it. Jean, question. So you mentioned, we talked about Formula One's success so far, and you talked about how it continues to succeed in the United States. Once upon a time, it's not that Formula One wasn't in the U.S., but it's really seen this resurgence. How? Why? What happened?
I must say, we have three big, I don't want to, underline NBA, but globally, you have three big important events. You have the Summer Olympic Games, you have the Soccer Cup, which is going incidentally to start in less than 1 month, and you have Formula One. And it's historically, in 75 years, Formula One is big. But with new media, with new technology, Formula One has grown, which is absolutely fascinating. And you will have next year 24 races, first time, 24, and spread all around the planet. And, I think it's very important also to involve the human being, because, it's just consolidating people, and that's the beauty of the sport. It's not only about money, but it's making people working all together. And we are talking about diversity, about gender equality, and that's also the role of sport. And Rudy was mentioning about a category for women. We need to have more women in motorsport. And incidentally, we are here in Saudi Arabia. A few years ago, we could not host one international event in the country. Why? Because women did not have access to driving license. Since there is access to driving license, you have in Saudi, you are talking about the Dakar, you have Formula E, you have Formula One.
Formula E, which I should point out, you helped create the vision of, right, with two other people sitting in a Parisian restaurant, probably with a little bit of red wine on the back of an envelope. You came up with Formula E.
Oh, you learn well, huh? So, yes, and 11 years ago, and maybe one word about that, because we have been talking a lot about cities, and if we want to have clean cities, we need to have clean cars. So, clearly, electric car is adapted for cities. And you have the proper range, you have the time recharging, which is also very important, and that's why we wanted to make a single-seater category. And it works. It works, and it's fascinating the enthusiasm you have. And here in Riyadh, it's amazing enthusiasm for Formula E.
Rodi, I didn't mention that you actually started working at Ferrari when Jean was there, right?
Yeah, well, actually, he interviewed me to get in Ferrari. There was the 2000. It was pretty scary at that time. because they told me last minute that you're going to meet Mr. Todd, and of course Mr. Todd is and has been a legend for Ferrari, but in the meantime he can be also, he's always fair but very tough. So it was at the beginning of an experience, but I have to say that professionally, he, consciously or unconsciously, he taught me so much that I'm so grateful to have met.
Taught you so much. You were part of a money-making machine, and yet you left to do something else. So tell us about what you're doing now and why move out of Formula One and
yeah,
motorsports.
So I've been working in motorsport for 20 years. Starting from the race engineering side, and then I moved into the business development and business management. My last normal job was managing director in McLaren Applied Technologies, focusing on electrification and data intelligence applied to motorsport. So motorsport is an incredible platform because, as I mentioned, you can test, validate new technologies that are not commercialized yet, and then you can think of how to build the solution in the future for the mass market. Having worked for incredible brands, again, Ferrari, Red Bull, I've been in NASA in the very beginning of my career as an aerospace engineer, I decided to take a sabbatical and try to build a new brand. So together with Alejandro, who I've met while I was developing the battery for the Formula E, Generation 2, we decided to build a Formula E on the water. And our purpose is to accelerate electrification in the marine industry, because compared to the automotive, we learned so much in the last 30, 40 years in terms of onboard and off-board technologies that by only building the first prototype, we have accelerated the electrification and the adoption of the electrification in the marine industry by at least 20 years. So this is an important mission for us.
I get Formula One, how they make money by bringing it to new cities, by selling licensing to broadcasters, but how would this actually, how do you make money going forward if less people are watching television?
Yeah, that's the question of my board. So that's actually a very great question, because I am modeling what, of course we want to be big. I mean, we don't even look at Formula One because Formula One is 70 years of incredible success and incredible business. It is a huge business. But Formula One is there. When you start a new platform, of course, you cannot use the same business model, which in Formula One is very much focused on the media rights and the license of the media rights. So we start our business model by considering the city event as the industry that we need to refer to. And this region for us is an incredible opportunity because there are so many development areas and they are growing and they are developed so fast that by having a race in these areas, as soon as they're ready, will offer the chance to promote through a marketing platform these new places in the world, these new venues, and telling what's happening in the near future. So when we talk, the excitement is coming a lot by the local authorities when you start as a startup, as we are, compared to the media sector. They will come later, eventually, after 5, 6 years. We reckon this is the recipe to launch a new championship successfully and allows us to also emphasize the ESG side of our proposition, and especially the social impact. And so many initiatives that we have embedded in our product are very much targeting to leave a long-lasting positive impact to the local communities.
And Meta, let me ask about that, because obviously the idea of this forum is how we can invest in the future, how we can have an impact on humanity, not just make money, right? So I know you care a lot about mental health issues. You're on the board, if I'm not mistaken, of the psychiatric ward of UCLA. This business idea of yours, how does it move us forward? How does it help the world?
Well, it's very empowering. When I was thinking of Experts X Sports, how do you create a way where anyone could build an audience playing basketball? Because being that I play basketball, I like to start with basketball, but create a business out of it and give anyone an opportunity to get exposure as a player, as a coach, even as an owner, a lot of people want to invest in the NBA, they want to invest in the NFL. But it's really hard. Even if you're a billionaire, it's really hard to get involved with these professional sports teams. So I figured I can bring a lot of that together on one platform and give the same experience. And it opens it up for women, as he spoke to earlier. A lot of women don't have the same opportunities because we're not really developing a platform necessarily for women. We're asking the women to, we market the women the same way we market the men. Well, we got to try to keep it separate, right? So you give the women an opportunity to create their own vision on how they see their teams running versus, running it like how a man would run, the NBA. So from that perspective, if you look at the WNBA, it's a huge salary gap. And I think with a platform like this, a woman could actually, level the playing field, and they can be marketed differently, and they can just go global and build their own audience.
It's interesting, sort of empowering the individual in sport as opposed to growing a whole, for example, league.
Yeah.
Okay. And Jean, quick one. I know you founded the Institute for Brain and Spinal Cord Disorders. Obviously you're serving right now in the UN, focused on road safety. So impact on humanity, how does Formula One and your life and this business contribute to safety and
But it's quite simple. I got a lot, I'm privileged. I got a lot from my passion, and I think if you need to give something back. So clearly, motor racing is dangerous. Saying that we have been improved safety drastically. 30, 40 years ago, you had every year 3 to 4 drivers who were dying. Now, between 94, after Ayrton Senna died, and Ratzenberger in Imola in 94, between 94 and 2022, it had been 1 fatalities in Formula One. I will say 1 too much. Incidentally, if the accident will occur today, the driver will not die. So when you have this experience, and you think about the world, and you think that you can be a contribution. Every year, 1.3 million people die on the road. 50 million people are injured. It's #1 cause of mortality for youth between 5 to 29. So that's why I decided that I will give this part of my life for UN, for a Brain Institute, and I'm happy with that.
Thank you very much. Well, I'm so happy that we could conclude the conversation talking about a return really on humanity as opposed to a return on investment, because that is the whole ethos of this forum. Ladies and gentlemen, please join me in giving a round of applause. Actually, come to think of it, look, sports, let's give them a standing ovation, right? To our panelists today, yeah? And to you for being along for 3 days. Jean?
Thank you.
Thank you.
That was good.
And while you're at it, one more round of applause, one more standing ovation for Richard Attias, the man behind this entire event. Richard is not pleased with me.
No, I don't deserve anything, my dear Ryan. You are too kind. You are really too kind. Thank you for being
Take it away,
with us.
Richard.
Nothing could be done here without the great teams we had. But, I'm so happy that our closing session generated a standing ovation. Why? Because this is the power of sport. This is definitely the power of sport. And it will be my privilege in a few seconds to have this closing session with a man who is probably one of the most powerful men in the world. I mean it, because the power of football is limitless, as you know. And just before introducing him, we'll see a short video to show you again how football is powerful, how football is an amazing tool for social progress, economic development. Let's watch a video before.
Cuando entro a la cancha me siento libre, como si nunca había estado.
El fútbol te está dando de comer, te está dando para vivir, es algo importante.
Football for me is the way forward.
Football for me is my life.
rimane en fot, det skyt!
Is the planet's ultimate game, the final of the 21st Football World Cup.
Ah, c'est gol, le premier but de Pogba dans cette Coupe du Monde. Et là, c'est pratiquement la France, championne du monde.
What a powerful video. And ladies and gentlemen, please welcome on stage virtually live from Doha, the most powerful man in the world today, Gianni Infantino, the head of FIFA.
Hello, everyone.
Gianni, thank you for being with us. I know that you have a little work to do for the next few days and few weeks. And we wish you best of luck. It's a privilege to be with you tonight here from Riyadh. You were here a few days, weeks ago, so this is why we didn't exaggerate to ask you to come back. But let's have this conversation, please, with our great audience here in Riyadh. The FIFA World Cup will start very soon in Qatar, November 20, if I'm not mistaken. The first time that this amazing tournament, the most popular, the most successful, the most important sport event in the world, has visited the Arab world. So what do you see the impact being, Gianni?
Well, first of all, thanks very much, Rachel, for having us here, for having me here. You are much too kind to me, certainly. But as you rightly say, football is just much more than a sport, isn't it? And the FIFA World Cup is definitely the biggest show on earth. Much more than that, actually. Football and the World Cup makes you dream. And this FIFA World Cup 2022 is already having a huge impact on the Middle East, of course, in particular, but also, I would say, the entire world. Let me start by saying, and His Highness the Emir of Qatar said it several times, I said it several times, this World Cup 2022 in Qatar is not just the World Cup of Qatar, it is the World Cup of the entire Middle East, of the Gulf, of the Arab world, of the entire world, which will unite itself here. So on one side, we will have the opportunity for millions of people to discover a new part of the world, the Gulf, the Arab world. New people, rich culture, welcoming new customs. And on the other side, it is also an opportunity for Qatar and for the whole GCC region to present itself to the world in another light, in another way, and get rid, I think, once and for all, some of the prejudice that sadly still exists. It will definitely help to get more mutual understanding between the people of different cultures and backgrounds. I'm convinced of that. And despite some critics who don't know what really happens, we had 23 million ticket requests, record. Over 3 million tickets were already sold. It will be sold out. We'll have 5 billion people watching the World Cup on TV. And when it comes to Qatar itself, some changes you were asking, about the impact. Well, some changes, some real changes have already happened. For example, when we speak about workers' rights, which is and has been an important topic, for the first time in the region, minimum wages have been established for all workers. New regulations about the kafala system, which has been abolished, have been put in place. Key improvements in terms of workers' welfare have also been activated. And these changes have happened in a few years only in Qatar. Whereas in other countries, including some of our dear European countries, it took decades for these changes to happen. So again, it's not me saying it, it's really international labor unions saying that, international organization, trade unions. And this is even more important. So this is the real impact of this World Cup, which has a legacy, which has already started. And if we look forward to the future, we'll have 48 countries instead of 32. So more teams, more players, more fans, more joy, bigger editions, more happiness. But we'll come back to that.
Yeah, but precisely, Gianni, about legacy, you know, important initiatives such as the promotion of healthy living and key aspect of any FIFA tournament, as you perfectly mentioned. And I know how you are committed not only on football, but you're also a member of the International Olympic Committee. So you know better than anyone the power of sport. But how do you see the FIFA World Cup precisely creating a legacy here in the Arab world within that very important area? You know, during the FII 6th edition, everybody was aligned on the fact that it is becoming a new hub, a global hub, and a Barry center between West and East, North and Center. So what do you think will be the legacy of this World Cup in this part of the world?
Well, personally, I'm also indeed convinced that this part of the world is becoming, not just will become, but is already becoming, that's already a reality, a real hub between East and West. And the more people join, participate to events like the FII, like the World Cup here in the region, the more people will realize how important this part of the world is. Coming back on this about the legacy of the World Cup in the Arab world, and in addition to what I already said, well, let me start by saying, and speaking also about, you know, healthy living, health, right? This is also one of the key topics of the future, that football is joy, as we said. And we also know that actually FIFA is official happiness provider since over 100 years. And happiness is obviously one of the best medicines for all sorts of diseases, as we know as well. So I think that already by bringing indeed the world together in the Gulf region through the World Cup, we'll have 2 million people from all over the world coming, 5 billion watching it. I repeat these figures, but it's because they are very, very impressive. Enjoying and being happy and showing to the world, to a world which is more and more aggressive and tense, that yes, people can live together, whether they come from east, from west, from south, from north, they can stay together, they can enjoy together, they can feel together the same passion, and for at least 1 month show to the world that humanity can live in peace together. If we speak more specifically about health, this is something also I would like to mention. We have partnered with the World Health Organization and the state of Qatar, in particular the Ministry of Public Health, in order to promote messages about healthy lifestyle and good health during this World Cup, coming out of a pandemic which has stopped the world, which has created a lot of issues in virtually the entire world. Well, I think it's important to focus as well on health. So one of the campaigns that we're promoting will be about be active, about moving, about playing also on the pitch and not just in front of your phone or of your screen. So this will be part of our campaigns to bring our young girls and young boys to action. And we know that for many boys and girls who are maybe 6, 7, 8, 9, 10 years old, a World Cup is quite an event. It's a time where they watch TV together with their parents, where they get emotional, and to be able to pass some positive messages to these people, to these young boys and girls for their first World Cup will be fantastic.
Gianni, thank you for helping us to be consistent here at FII, because we started this conference with two important messages delivered by Nobel laureates and by the former Prime Minister of Bhutan. You know, invest on happiness, which you just mentioned. As you know, it is part of the DNA of Bhutan. And the other message was invest in women. And of course in child, but in women. And the draw for the FIFA Women's World Cup recently took place with the finals happening Australia and New Zealand next year. What can you tell us about the development of the women's game, which was so successful in France few months ago?
Yes,
I know how
well,
much,
thanks.
and I know how much you fight to be supporting women and to be more inclusive with women since you are the president of FIFA. So please.
Yes, thank you very much. Well, you know, I also have to declare here a clear conflict of interest. I'm father of 4 daughters. So, you know, if I don't support everything that has to do with women, I cannot go back home anymore in the evenings. But jokes aside, of course, it is crucially important. We just had the draw of the next Women's World Cup, which will take place in Australia and New Zealand next year. Women's football is growing all over the world. We have currently the Youth Women's World Cup being played in India. The final is played on Sunday, and a country like Colombia, who had never reached that stage, reached the final. They will play against Spain. So it's not the usual Nordic countries in Europe or the United States who reach final of these competitions, but 2 Latin countries, one from South America, one from Europe, who came to the final. Another semi-finalist was Nigeria, and the other one was Germany. So we see that there is movement. Last week I was in Paraguay opening a new women's football center of excellence in Paraguay, which is not really known as being a great football country. Well, they will become a great football country because first country in the world, they opened a specific training center, an academy only for women. Saudi Arabia.
Yeah, precisely. How this relates to Saudi Arabia? You and I, we know very well one of the right hand of His Royal Highness Prince Abdulaziz, the Minister of Sport. She's the Deputy Minister, our friend Arwa, who is a football great professional player. But she's inspiring a lot of women here. How do you think this relates to Saudi Arabia precisely?
No, it's what is happening in Saudi Arabia is absolutely fantastic. I mean, I've been there as well several times. In one of my recent visits, I visited the women's national team of Saudi Arabia. Saudi Arabia has set up and put up a women's league this year in 2022, which completed for the first time at nationwide level a competition for girls and for women who want to play football. So women's football is getting bigger and bigger. I was speaking about the figures of men's football. Looking at women, I mean, the last Women's World Cup in France had 1.2 million viewers in the stadiums and 1 million viewers and 1.2 billion on TV. The next Women's World Cup will have 1.5 million in the stadiums and 2 billion viewers on TV. And this is thanks to the fact that Women's World Cup is moving all over the world. Morocco, as an Arab country, qualified as well for the Women's World Cup this year. We're speaking about Saudi Arabia. I'm hearing that Saudi Arabia is interested in organizing the Women's Asian Cup, which I think is fantastic if they do so. And maybe, why not as well, thinking about the Women's World Cup.
Gianni, don't want to take too much of your time, but a big event, the biggest event in the world coming soon. So what would be your priority following the FIFA World Cup in Qatar? Your priorities?
Well, I think we need to continue to make football truly global. Football is not, and especially top football, is not the exclusive property of a few. Football is the world sport, and we need to make it grow all over the world. In the last 6 years since I was elected president of FIFA, we changed a lot in FIFA, in the organization, in the governance, in the appointment and election of host countries for tournaments, in eligibility criteria for the members, in the money we are investing. We invest 7 times more than what was invested in the past. Not because we have 7 times more revenues, but because money doesn't disappear and goes where it has to go. In youth football, in women's football, we invested 1 billion in the last 4 years specifically on women's football. We need to organize more competitions, more events all over the world. In some parts of the world, there is maybe too much football. In other parts of the world, there is not enough football or not enough top football. We need to wake up the Middle East. We need to wake up China, India, the Americas, in particular North America, to play really a competitive role towards the big European powerhouses. And we will do that by investing in youth, by investing in women's football, and just watch the next few years.
Gianni, I cannot resist to ask you a question, which is, any prediction for us? I know you have to be neutral, but please, any prediction ahead of this World Cup?
What can I say? Well, what I can say is that as Italian, you know, in the spirit of solidarity, which is one of the characteristics of football, we decided in Italy not to participate in this World Cup so that you all have a chance to win it, right?
You get a lot of applause here from the room.
You see how nice we are. But jokes aside, obviously it will be a great World Cup also because it's played in November and December at the peak of the form of many players. Those who play in Europe in particular, they don't reach the World Cup at the end of a season, but at the beginning of a season. The conditions here are fantastic. The stadiums are state-of-the-art, beautiful. We had a great draw. Everything is ready. Saudi Arabia will definitely also play a fantastic role, playing at home, I'm sure, all the matches. You know, but for me as FIFA president, I hope that the referees do well, obviously, my team. And I hope, but then I'm sure that football will be the winner. This is how it should be, and I'm sure it's what it will be, because football ultimately as well unites the world, and we will unite the world very soon here in Qatar. So please, all of you, come to Qatar, enjoy the World Cup and enjoy football.
Ladies and gentlemen, Gianni Infantino. Thank you so much, Gianni. Thank you for your time. Wish you good luck for the coming days and weeks. Thank you. Thank you.
Thank you.
So, ladies and gentlemen, we are approaching to the end of the 6th edition of the FII, I would say, conference here in Riyadh. Allow me to just say a few words. Number one, please save the date. Save the date. October 2023, 24, 25th, 26th. So already save the date for the 7th edition of FII. Number two, as I said a few days ago, in fact yesterday, the FII Institute will launch many initiatives for the next few days, a few weeks, few months. We will also expand in 2023. We'll have much more regional FII in Asia, in Americas, in Europe, and of course, as I said, the flagship event in Riyadh in October. We are becoming a membership organization, so please go on our website, check how it will work. The system will be a little bit different for next year, because we definitely want to support multiple initiatives with our strategic partners, with our knowledge partners, and with all of you. This is a community. I think I can say today that it's not just a conference, it's not just an event, it's not just, I would say, a platform. FII is becoming a movement, thanks to you all. I see the energy, I see the vibes here in Riyadh, and we need to maintain this movement and to make it global. So thank you very much. I would like all of you to applaud yourself first, because you are the really doers of FII. Allow me to thank, because nothing would be possible here without the hard work all year long of the team from the FII Institute. Thank you all, I'm proud of you. And without the teams of Richard Attias and Associate, the RNA team, the program, the production, the logistic, everyone, thank you and congratulations. You did an amazing job. I'm so proud of you all, guys. I would like, allow me on your behalf, to thank the local authorities of the Kingdom of Saudi Arabia, with the Royal Guard, with the Royal Protocol, with all the team of the King Abdulaziz Center, with our dear brother Satam and his dream team. Thank you. Nothing would be possible without them. Thank you very much. Thank you. And of course, I would like to thank on your behalf the hospitality of the Kingdom of Saudi Arabia, and of course the full support of His Royal Highness the Crown Prince Mohammed bin Salman, and the great support of His Majesty the King, who decided a few years ago by royal decree to create the FII Institute. So thank you very much, and on your behalf, we'd like to thank them. And last but not least, I think it's important to have good memories. So before we leave this room and before you go back home safely, and I wish you a safe trip to all of you, thank you for your support again. Let's watch the best of FII 6th edition. Thank you, we love you, and hope to see you. God bless you.
We need to protect what is unique. Investing in humanity is investing in all our futures. Despite our challenges and our differences, the strength of our humanity is our resilience.
When people pull together, we can make a bigger impact. And making an impact on humanity is the very reason we are all here today.
We need to learn how to manage crisis and not to be managed by crisis. Indeed, we can be proactive rather than reactive. And FII stand for that approach.
Investing in our future means investing in our children.
Investing in girls and women is investing in a better and a brighter world. And we cannot continue to make this case. This is a case that happens.
Ladies and gentlemen, I invite the board of changemakers.
All these problems are solvable. It takes competent management. Stop listening to those damn echo chambers in people's ears. Sit down, do the work.
So imagine, and I have at my hand a wand where I can grant you one wish.
For me, it's very easy. I have Vision 2030. I want to achieve it.
I'd wish for normalization of international and domestic relations.
Working together to try to achieve those metrics would be the thing that I would want most.
Strong leadership from Europe on energy matters.
I said I could grant a wish, not a miracle.
Strong U.S. leadership in sending certain messages around the world to help create a framework so we can all work together and move forward.
In a world that has a common future, common interests, common commitment.
Seeing the U.S. and China around the table again.
Peace and stability in the world. And I'm going to stand by that.
The FII is a great platform. We need to be proactive instead of being reactive.
The Kingdom has set very high targets for our energy mix.
Keep your seat for a conversation which will happen now. Monsieur le Président, quel rôle l'Afrique doit jouer dans ce nouvel ordre mondial?
Il faut, par la coopération, par le multilatéralisme rénové, bâtir un monde nouveau.
There's plenty of signs for encouragement as well. So on balance, I'd say, yeah, it's appropriate to be cautious right now, but the gloom arguably is overdone.
And by the way, we at the ministry, we don't go for equality. We go for meritocracy. Merits governance.
The amazing thing now is that you've got these great companies that work with most mayors in the city, and I hope my colleagues in Saudi Arabia, they work with them.
It's my privilege to announce that we're going to be celebrating FII in Miami next year.
artificial intelligence, big data. We have a great challenges, but investing in humanity means come back to be leader.
You can invest in your society and education and create opportunity that will make this place, I think, absolutely incredible. You look at what China did over 20 years.
But Ben, most importantly, you're also a voice for what the transition of VCs could be.
Clean energy is the driver of the new economy.
This year alone, we would have delivered more than 2,800 events, cultural events.
When you know it and the culture of the others, it gives you a sense of sharing. And this is where Saudi Arabia gives an incredible example in this. I would like to congratulate you again.
The best of Saudi is the Saudis. And I think it is innate.
Congratulations.
What are the opportunities for the kingdom?
I think the kingdom has got to continue to do what they're doing. I mean, they're doing it at such a breakneck speed, Richard. It's phenomenal.
Saudi Aramco Venture Capital will announce or launch a $1.5 billion for sustainability fund.
Thank you first for an amazing first day yesterday at FII 6.
We have to continue to invest because there will be great opportunities. We need to figure out how there's a global solution to at least get to a ceasefire on the hostilities.
The most important one is reduction in productivity, which means probably a higher inflationary environment.
That Russia is definitely hit hard, and I think that everybody who says that the Russian economy is not suffering is wrong.
Steel, cement, chemicals, aviation, shipping, all of which we are absolutely convinced can get to net zero in themselves.
Including taking roles inside these large organizations that help define how we're going to change the culture of our work, for example.
It's our pleasure at the PIF to announce the completion of the inaugural voluntary carbon market today.
There are lots of precious metals in asteroids that can be harvested and brought back.
The next decade is going to be enormous, and the profit-making and the business-making capability during this enormous transition, for those that understand it, will be wonderful.
Next year, FII 7, we hopefully have our shortlisted winners for the first round of this award.
I firmly believe the new global order will be shaped by the discussions we have, the plans we make here at the FII. Thank you all very much.